of U.S. households. Now we're up to like 50%. I mean, something like that. It's really been a striking change.
Yeah, it has. And what hasn't really changed is where people are going, right? So based on our data, they're still going to Mexico, Canada, UK, France, and Italy. But the Olympics are coming up later in this month, so we expect to see that again continue. And they're also traveling domestically. So when we look at the number of households who are making transactions outside of their region, that's also up, not as much as the international travel, which is up 6%, but up 3%, a little over 3%.
And it's kind of ironic. Delta is the flip side of this. There's so many seats. There's too many seats. There's pressure on fares and so forth.
Well, I don't know. I actually think it's somewhat consistent with the story, and Joe, somewhat consistent with the fact that every person is in the lounge with you, right? Everyone is traveling.
There's sneezing in the buffet. There's no sneeze thing either.
No, yeah.
So, I told Kelly, it was when Groucho said it was fun. A lounge that will accept people like me, I don't want to go into. I don't want to be there. They need a higher standard than that, so, no thank you.
Because then you'll be alone in the lower.
I would get a passport if it was like Italy only. That's really, if I could get one.
Well, there are a lot of
Are there
people,
things like that?
I don't know, but we can talk to policymakers and figure out how we can get that to happen for you. But going back to what we're seeing in the spending on the travel side, is actual travel spend was down last month, even though so many more people are going. And again, we'll see at 8:30 what the updated CPI numbers are. But if you look back in May, airlines were down almost 9%, car rental 6%.
Wow.
Car rentals were down. So there is some deflation going on in the travel space, but volumes are picking up.
You said deflate. I talk about this sometimes, talk about potato chips and things like that, and people are like, what are you talking? There's e-commerce deflation, there's furniture deflation, there's apparel deflation. Like you said the D word, and it doesn't mean that we're undoing the 20% hikes of the past 4 years. But what it means is for companies who are dependent on this, it's a massive problem for them. It could mean layoffs if they don't right size.
Well, let's talk about, you said layoffs, so let's talk about the labor market, because that's obviously been a big topic of discussion over the last 2 days. So what is the Bank of America data telling us about the labor market? We are seeing some signs of a slowdown, but it's gradual. And we're seeing that in a couple of places. First, when we look at wages, and Bank of America Institute, what we look at is the money, after-tax money actually coming into accounts. And what we're seeing there is we are seeing wage growth and income growth across lower, middle, and higher income households. And lower income households continue to be going up at the highest rate, about 3% in June, but that is lower than it has been over the past 2 years. So their lower income households are up 3%, but they were up 4, 5, 6.
Exactly, and I guess when we then hear from, trying to think of some of the blowups we've had lately, I mean, some of these companies who are talking about the consumer's choosier, the low-end consumer, and the macro people who say, those excess savings are running out and things like that. I mean, does this paint that picture for you?
I think we're seeing the labor market cooling, but very gradually. And another area where I would just kind of point that out, we can also understand when people are changing jobs. And we had the Great Resignation when everyone was changing jobs, and people who changed jobs were getting very significant pay bumps. Well, when we last looked at this, we had about 3% turnover. So about 3% of our consumers were changing jobs. But the amount of money that they were getting when they changed jobs back in the Great Resignation was north of 20%. It's less than half of that now.
Wow.
So job changers are getting a median bump of about 10%, which is not insignificant. But it's not necessarily going to drive the same consumer behavior.
Great point.
As when you were getting more than double that.
All right. No further questions.
No further questions, Your Honor.
Liz, thanks. Great to be here. Thanks, appreciate it. Coming up, CNBC's top state for business will be revealed later this morning. Scott Cohn will join us from that mystery state next to recap all of his diabolical hints. Here's a look. Ponder that, and Squawk Box will be right back.
made affordable.
Welcome back. The wait is almost over. The CNBC top state for business will be revealed today in the 8 a.m. Eastern hour. Scott Cohen joins us now from that state to recap his diabolical hits. Scott?
That's right, and I'll give you a little bit of an agenda for this morning, Kelly. What we will do is next hour on Squawk Box, we will reveal the states that came oh so close, states 5, 4, 3, and 2. And then in the 8 o'clock hour, we will finally tell you where I am, America's top state for business, and we will speak live with this state's governor. All day yesterday, as you alluded to, we were giving out our patented diabolical hints. And if you weren't with us all day to get all 5 of them, I don't know what's wrong with you, but we'll take pity on you and we will show you them all together again. Take a Hike, The Cure, Shellgate, A Penny Saved, and Hubba Hubba. Those are the diabolical hints, and in the 8 o'clock hour, we will explain what these are all about, and you'll hit yourself in the head and say, oh, of course.
Are you going to give me the worst
so
states
diabolical.
later? Scott, you know what? I think I might like worst states better than top states, maybe.
We'll do, yes. We'll get all day long, and that's a good point, Kelly. We'll kind of go inside the numbers all day long as we can on CNBC, and at topstates.cnbc.com. After we reveal the top state, you'll be able to see where your state ranks and do a little kind of poking around yourself and look at how we got there and what all is going on this year.
I need to know exactly, because it's about infrastructure. That was one of your main things this time, Scott. And I initially, my first thought is that does that really count? In other words, the top state for business that way would be Shanghai, because you got a government that is subsidizing everything with build out. It's not real. It's not organic. And then I was thinking, I want to know the 5 states that if you do this till you're 1,000, will never win the top state. Because I know there are 5. I mean, you cannot do enough backflipping, pretzel twisting to get California as the top state for business. You just can't do it, Cohen. There's no way.
And yet, that's where all the best companies have come.
I know, and you can't. But it's in spite of all the crap that you have Silicon Valley. It's in spite of being in California.
Well, and don't just single out the state where I live. There are a number of states that do have some issues, but it is kind of interesting this year. Particularly, I think at some point today we'll tell you about the most improved state, which is going to be that's an interesting story. There's a lot of interesting stories in this year because we're talking about all of this infrastructure. That's shaken things up a little bit. It's just a really, really interesting year, and as we've been talking about and kind of teasing at this for the last few weeks, sort of an inflection point. The first few years we were always talking about incentives and taxes and things like that, all still important, and then for several years we were talking about workforce, which also is still very important, and now it's shifted a little bit, and this is based on what the states are talking about, how they're selling themselves to business, and that has definitely changed in the last year.
All right. We look forward to it. Scott, thank you so much. Appreciate it. Scott Cohen, live from somewhere. See you at 8 a.m. for the big reveal.
Yeah, we have some breaking news from Pfizer. Angelica Peebles joins us now. Good morning.
Morning, Joe. That's right. Pfizer is saying that they are advancing a once-daily obesity pill into the next stage of development. Now, remember, last year they scrapped their twice-daily formulation of this experimental pill, danuglipron, because the side effects were so intolerable. And so they went back to the drawing board and said, we'll go ahead and see if we can make a once-daily formulation work. Now, today they're saying that they have found the right formulation and that later this year they're going to start studies to find the right dose. And then from there, that will inform exactly the rest of the development plan. Now, I spoke to Pfizer, and they are expecting the results from that dose selection study in the first quarter of next year. So this is still pretty early stage stuff, but still, you're seeing shares of Pfizer up about 3.5% this morning. Joe?
Yeah, that stock has taken a weight loss pill. That was $60. Oh boy, they love the pandemic, and they're lucky that they plowed all that money into something useful, because it was a $60 stock, had a market cap over $300 billion, and it's now $160 billion, down from $60, down 50%. I mean, That's not how you want to run a pharmaceutical company, obviously. Meanwhile, I like to look at a 2-year or 3-year Eli Lilly versus,
Oh, gosh.
it's almost $1 trillion market cap.
Well, what do you
for
want?
Eli
They-
Lilly.
they-
What do you
they
want?
don't
I
develop
want someone
COVID,
that, I want someone that doesn't put all their eggs in a vaccine basket where you know it's going to be over in a year.
Could have warned. Like, do you know
And then
that?
they also built a lot. They also made a lot of that other crappy drug, whatever it was, Paxlovid.
Paxlovid?
Yeah, and
It
got
does not
stuck
work.
with
That
all
doesn't
that.
work.
I don't know.
I hear people on it now because COVID's like making a little comeback. I don't know.
Yeah.
My dad got it the other day. It's like,
He'll be fine in like 3 days.
yeah. They got, yeah.
300% versus. All right, we're
quite a-
pulling for them, and
quite
it's
a
a great
contrast.
American company, so we're pulling for them, but they may need more than this to get things back on track. Coming up, a busy end of the week with key inflation data and the kickoff of earnings season. We'll get you ready next.
Now.
Let's talk markets now, specifically retail trading activity, retail investors. For that, we have JJ Kinahan, CEO of IG North America. It's all tech. I don't know, we were talking about it earlier, JJ, whether that should give you cause for concern that it's all tech, or whether it's, well, where else is it going to be? These are our greatest companies. But you point out that even two of the big gainers in the past couple of months, Apple and Tesla, there's been some slowing even there in the last couple of days.
There has been, Joe, but where people are putting it is kind of back into big tech. AMD has been one of the primary recipients of that. as people have really come in to buy that stock in an incredible way. But it's interesting. You just got done talking about Pfizer and Lilly. Actually, Lilly is a stock, Joe, where over the last 2 weeks, we have really seen a lot of bullish activity overall as people continue. They just bought Morphic, which is the company that helps with autoimmune diseases. You guys just got done talking about some of the weight loss stuff, et cetera. So I find that stock pretty interesting, a little bit away from the technology sector. And the other one is Vistra Energy. In fact, that's a stock where 92% of the activity over the last week and a half has actually been bullish activity. It's a stock that's doubled in the last few months. It's really been an incredible story, and I know you guys have talked about that over the last few days. So, a couple of non-tech names, and in tech, as you said, we've seen some sellers of Tesla and Apple, AMD being the primary recipient, but the other names that everybody follows that have been big recipients of that have been Amazon and Microsoft in terms of where people are buying overall as this incredible rally continues. But what I do find interesting that we've started to see more in the last few weeks than I think we saw throughout this rally is people taking profits. Even a stock like Costco over the last few days, and again, they had another leg up with that news yesterday. People are actually selling the stock, taking profits, and looking for other places to go with the money. So and not necessarily redeploying the full amount of money also. So I think that's also going to be interesting. Can we continue the rally if that continues?
So we've gone this far, and last year was great too, but people still say there's a lot of cash on the sidelines. Does that explain this just every day? It's almost like, you wake up and the futures are up almost every day. There's no volatility. There's no, not only no 10% correction, there's no 3% corrections. It doesn't seem like. And what about sentiment? Are people bored, scared, complacent? What are they?
Well, I think maybe a little bit complacent. It's interesting you bring up volatility. Obviously, as we look at the VIX, it's still just under 13. And what's really interesting is if you look not only at retail, but activity overall, there just doesn't seem to be this need or desire to really protect much of the downside. Let's face it, if you have been protecting the downside, it's been costing you money month after month or whatever your timing is in terms of buying any puts, et cetera, against your position. So we'll see if there's any scare at all. And I think it's a bit of a head scratcher. Joe, you and I have been doing this a long time. If I'd have told you a year ago that we have a presidential election with all the strange manipulations it's had over the last few days, we still have conflicts going on with the Israeli-Palestinian situation, with Russia, Ukraine, I don't think either one of us would have said, well, yeah, sure, volatility really completely low, and we'll have set our 37th new high in the S&P 500 yesterday. It really is absolutely mind-boggling, and as you said, it doesn't even seem to be that we are slowing down. The path of least resistance continues to be to the upside because, as you said, people still aren't true believers that we have to continue higher.
I mean, does it all, can you make a bullish case for why the market keeps going up other than there's a lot of liquidity still around? I mean, the Fed drained some of the liquidity. The Fed's been, raised interest rates. The stimulus from the pandemic, all the fiscal spending, maybe that's still happening because some of those programs are multi-year programs. Maybe there's some of that, but you wouldn't necessarily say earnings have not justified the move in the markets. The earnings have kind of come through for the stocks that have done the best. The earnings have been there for underlying the moves in those stocks.
Yeah, and they've not only beaten earnings, Joe, they've kind of blown them away. If you look at stocks like Nvidia, et cetera, in terms of what they've done versus earnings, so you are making the case in those big stocks doing so. And again, if you look around, where else would people sort of go with their money right now? I think is the other question right now. The constant back and forth in terms of will we cut rates, will we won't? How many months have you been think about going into December of last year? How many cuts everybody expected? I think it made people a little bit leery, if you will, of the fixed income market overall. And so, we're still having that same conversation as we see September with about just over a 75% probability of a rate cut. Mm-hmm. And so, again, I think part of it is people are like, okay, stocks are still the best game in town. It's proved to be absolutely true. But to the point you made earlier, are people necessarily piling into stocks and feeling like I have to buy more, I have to buy more? And the answer to that is no. That's actually very healthy for the market, and it is why the market can continue to go higher. The amount of competition out there for the money is continuing to dwindle. And again, when people talk about, well, there's only 7 or 10 stocks that are really driving this, and I think if you look, it kind of makes sense, just like everything else in life. The competition sort of says, this is where I want to be.
All right, JJ, thanks. I can't, I say it every time you're on, but I still see the Tasty Cake logo whenever I look at.
Next time I'm there, I'm bringing you Tasty Cakes, buddy.
Crimpets. Bring me some of the buttercream crimpets.
Consider it done.
What?
Crumpets?
Not strumpets.
Good to see you, Joe. Thanks a lot.
Thinking of something else. Thank you. It's 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan along with Kelly Evans. Yeah, it's unbelievable. 2 o'clock your show's on. 1 o'clock. It's over at 2. Yeah. That's what I meant. Among today's top stories, Wall Street is set for a lower open. We've changed things.
You hosted these shows.
I know we have. I'm having a bad night. I'm going to have a key report on inflation. I've admitted I'm having a bad night. Consumer prices are forecast to have risen slightly last month. We'll bring you the numbers and the instant market reaction at 8:30 a.m. Eastern time. The FTC planning to sue United Health's Optum RX, CVS's Caremark, and Cigna's Express Scripts over alleged questionable practices when negotiating prices for drugs like insulin. Sources tell CNBC the FTC will argue the 3 companies' tactics contributed to inflated drug prices, which we've always sort of thought middlemen. In a statement to CNBC, CVS and Express Scripts say that they stand by their work. No comment from Optum or the FTC. And Costco is finally raising its membership fee for the first time since 2017. The basic membership will go up by $5 to $65 a year, while the executive membership will rise by $10 to $130 a year.
We just snuck in our Renew executive level. Don't want to brag.
No
but
way.
Got it at 120.
You're an executive level?
Every now and then I make a good trade.
Yeah, exactly.
No.
Well, you're,
Yeah.
got that great 4% yield on your 2-year. I was going to ask you, with the money you made on the 2-year, were you able to order appetizers at that one dinner?
I said we're going to ride it out in treasuries for a year, buy the market 30% lower. I think we're up 40% since then.
I begged you, as a young person, to buy Bitcoin.
I know. Why are the millennials more conservative than the baby boomers?
I don't know. Maybe because you have a night light on in your room. You're afraid of the dark.
It did not work out well. It wasn't down, but it did not work out well. Speaking of which, let's check the futures because the Dow is poking above 40,000 and trade again. Remember, the first time it traded above this level was back in May. Haven't closed above that yet, though. We're seeing some slight negatives across the board. The S&P implied lower by 5, Dow 48, NASDAQ 15. Frank Holland has more with a look at this morning's pre-market movers. Hi, Frank.
Hey, good morning. We have some earnings movers this morning. We'll start with Pepsi. You can see shares are down more than 2%. That was after a revenue miss and a profit beat. Pepsi also lowered its full-year guidance. So the guidance previously was at least 4% growth, now saying approximately 4% growth. Clearly, words matter. Pepsi also saw weakness in 2 of its U.S. businesses. Frito-Lay reporting a slight sales decline. Quaker Foods, a double-digit decline. Again, shares of Pepsi down more than 2%. Another earnings mover for you this morning, Delta Airlines moving lower after EPS in line with estimates, along with record revenue for Q2. That still missed estimates. Take a look. You can see shares are down almost 10%. Delta maintained its full-year earnings guidance of $6 to $7 a share. Here's what appears to be putting pressure on the stock, according to our Phil LeBeau. Revenue per seat falling slightly more than what Delta guided. Still, 2 bright spots in this report. Premium seat revenue up 10% year over year. International revenue up 4%. However, Delta did say it would take a roughly $100 million hit on transatlantic trips related to flights to Paris for the Olympics. And coming up there on Squawk Box, Delta CEO Ed Bastian is going to talk a lot about the quarter and also what he's seeing when it comes to that demand for those premium seats. This morning, we're also watching Apple shares taking a look. They're just down fractionally right now. This is after EU regulators say they have accepted the iPhone maker's offer to open its tag-and-go mobile payment system to competing companies. This will settle a 4-year-long investigation that could have resulted in a large fine for Apple. It's a rare decision for Apple to settle with regulators. The company's really pushed back against regulators. Apple still faces 3 investigations under the EU Digital Markets Act. Kelly, back over to you.
Frank, we appreciate it. Frank Holland. Coming up, growing calls from celebrities and politicians for President Biden to pull out of the 2024 race for the White House. We'll talk more about that.
Celebrities. That's important.
Honestly, when you've lost the celebs, it does tell you.
When you're a Democrat.
Exactly.
And you've lost. Unless you're my Kid Rock.
You got this.
Delta Airlines reporting a short time ago. Phil LeBeau joins us now with a special guest. Hey, Phil.
Hey, Joe. Ed Bastian, CEO of Delta. We're going to talk about the reason the stock's under pressure right now, the unit revenue. But before we even get to that, you're coming off a record revenue for the second quarter. So this is one of those cases where you put up good numbers. The question is, the street was expecting a little bit more.
Absolutely, and we'll talk about the demand outlook, which actually isn't as bad as the headlines would lead you to believe. But second quarter was great. Our team did an amazing job. Kudos to them. It starts with the operations. Stellar performance across the board. Best reliability in the industry, month in and month out, as we've been doing all year long. Best in our history in terms of operations. Demand was really healthy. And when you couple great operations with strong demand, we hit our APS that we guided to, right on the number. The consensus was, I think, right with where our number is. Free cash flow in the first 6 months of the year is close to $3 billion. Again, we guided for full year 3 to 4. We're already at close to 3. We've had a really great summer that we're looking towards. Yet at the same time, we got to talk about what's going to happen with respect to the industry picture.
And let's talk about that unit revenue or revenue per seat mile. Mm-hmm. You guys were giving guidance of flat to -2%. You came in -2.6%. Mm-hmm. and your guide in terms of EPS for the third quarter is shy of what the street is expecting. Are we seeing cracks in the consumer right now, or is this an oversupply situation in the industry?
I think it's more an oversupply situation in the industry as compared to cracks in the consumer. Let me provide a little context. First of all, the quarter we just finished, the second quarter, second highest quarterly performance in total in our history. The only quarter that was higher in our history was second quarter a year ago. And if you recall where we were a year ago, that was the first time that everyone could travel almost anywhere in the world and and prices were sky high. It didn't matter where you're going, particularly internationally. The question a year ago I was getting all the time was, when are these sky high fares going to come down? And my response was, when we can bring more capacity to bear. Well, the industry brought more capacity for this summer. Capacity is up 8% for the summer. I'm talking particularly in the domestic marketplace. Real demand in the summer anyway, and I'm saying summer between June and August, is probably closer to 4% in terms of real organic demand growth. So you do have an oversupply. Now that oversupply is limited on the lower ends. You see the discounters particularly discounting heavily, and as a result of that, you've got some fare and yield weakness in the quarter. The good news in all that are two things for Delta specifically. One, we're pretty well insulated from that. Yes, we got hit probably by a point or two in terms of our outlook, in terms of where people thought we'd be versus where we're going to be on revenue. I understand that, but we're premium. We've got international, we've got business, we've got a much stronger product mix, we've got our American Express loyalty stream. So the impact on Delta is fairly limited. Secondly, the industry is already correcting for the oversupply so that by the end of August, that 8% is already back down to 4%, more in line and in balance with the consumer demand. And as a result of that, we expect in September, our domestic unit revenues are going to be back inflecting positive once again.
So you're confident, though, that the industry can correct on the overcapacity? Because let's be honest, this is an industry that has a pretty poor track record in terms of showing the discipline when it needs to show the discipline.
Candidly, it's remarkable. The industry is moving, and has already moved. By the way, these are the numbers in the tapes. So it's not an anticipation. This is actually what's going to fly coming in the next few months and for the fall quarter ahead. You do not have to guess. You can go see what it is. I've never seen the industry move as rapidly to kind of adjust it. And the reason for that is that you do have in the lower end category in our industry, you've got a lot of challenges in the lower fare categories. Summer is when people travel. And so all the discounters put as much capacity and supply into the market when people want to travel. I get that. But in the fall, when that demand comes way down, the industry really is acting responsibly.
Ed, I know Joe's got a question for you. Joe, go ahead.
It's kind of a cultural question, Ed, and it's good to see you. We always appreciate when you come on. I'm just wondering, in the world, the way it is today, Ed, does it ever give you pause to try to cater to the really well-heeled? I mean, you have to, because that's where the growth is. That's where, that's where a lot of the profitability is. But I'm thinking about these incredible lounges you're building that are very exclusive, or refurbishing the planes to have all the, in the front of the plane where you have those pods where some people in their entire life will never fly in one of those, Ed. I understand luxury lodgers can get away with that sort of, but as an egalitarian service provider for everyone to travel, do you have to tread kind of lightly when you're, it almost seems like you're catering to, the income guy, the people that are doing better?
Well, a couple things, Joe. As compared to being the airline for the affluent, which I understand people want to have some luxury experience, they're focusing on investing in their own experience, Delta wants to be there for, but we're also the largest airline in the world when it comes to overall revenues. So clearly, we're catering to everybody, and we have products in all categories. The growth that we've seen post-COVID is clearly, though, in that higher end segment. And that's where Delta specializes, whether it's business travel, whether it's international, whether it's the American Express relationship that we have. And as a result of that, that's giving us the revenue back that we can invest in these lounges, that we can invest in free Wi-Fi, we can invest in the experiences that customers really want.
Okay. All right.
Ed, I have a question for you regarding the consumer. We have record demand right now on the leisure travel side, separate from corporate. Are people taking more trips, or are they saying, I'm taking about the same number of trips as I've taken in the past, but I'm spending a little bit more. I'm upgrading if I can. Are you noticing a difference?
Oh, yeah. The experience economy, which is what our industry serves, is doing well. And we've talked for several years now how the services economy was once again going to eclipse the goods and the retail sector. And we're back, and we're actually continuing to grow at a pretty healthy clip. I don't see that changing. Again, you look at the summer. You look at what's the big news where people want to go, especially our younger demographic. They want to go to Europe to see Taylor Swift. Well, that's what's selling. You want to see friends and family that you haven't seen in a few years. That's where people are going. Baby boomers are taking cruises anywhere around the world. That luxury element is a piece of it, but it's the experience broadly where people are going. And as a result of that, it feeds right into our business strategy, which we've been on for 15 years to differentiate in an industry that forever was a commodity business, no longer with Delta.
Ed, thank you very much. Speaking of experiences, the man's going over to Paris for the Olympics. Guys, we're going to send it back to you.
All right, thank you both. We really appreciate it. Delta shares under some pressure. Coming up, Tesla's stock has been charged up over the past 10 or so trading sessions. We'll look at what's driving that move next. And then before the big reveal of the top safer business later this morning, we'll have a preview of some of the runners up. Squawk Box will be right back.
Time now for today's Aflac trivia question. Introduced in 1967, the radar range was introduced to U.S. households. What is the radar range better known as today? The answer when Squawk Box returns.
Make money.
And now the answer to today's Aflac trivia question. Introduced in 1967, the radar range was introduced to U.S. households. What is the radar range better known as today? The answer, the microwave oven.
Tesla shares had a rocky start in 2024, down more than 20% at one point, but they're now in positive territory, up 5% year to date. Let's talk about why. Doug Clinton with Deepwater Asset Management, he's a managing partner. He joins us now. Doug, why the turnaround? Welcome.
Well, thanks, Kelly, for having me. Turnaround, I think, is all about the narrative shift from the bears saying, look, the EV conversation was too overheated. We had too high of expectations in terms of how quickly consumers would adopt EVs. It feels like we've hit the trough of that disillusionment. And now we can see the other side of that path with Tesla returning to growth, easier comps. The street has them growing kind of near 20% for the next 2 years. That's piece number one. And then piece number two is we have a catalyst on August 8th, the new robotaxi event, and Tesla has always traded well and been pushed by new product announcements, where at this event we'll obviously see what they're doing with robotaxis, and we could also get potentially 3 new car announcements. So I think the bulls firmly have control of Tesla right now because of what's coming in the future.
3 new car announcements. I mean, we're still waiting on that the Model 2. Cybertruck is kind of off to its start. What is the valuation right now? I was reading that, is it north of like 90 times forward earnings right now?
If you believe in the street numbers, it's roughly in that range. And I think to your point about valuation, that's really probably the question you need to ask going forward. So if you're trying to play this for the next month, you're looking at just this August event, it's hard to see why the narrative would shift between now and then. After we see what Tesla comes out, then I think you have to ask that fundamental question. And I'll use NVIDIA as an analogy. You know, we've seen NVIDIA stock go up 200% over the last year. Their business has also grown 200% on the heels of very rapid AI demand for their products. I think the question we'll have to ask ourselves after the August 8th event is there a new product here, whether it's robotaxi, whether it's potentially new vehicles, that makes us re-rate how we think about the business by 50% or more, thinking about the stock going forward? Because to your point, the valuation, if nothing changes, does feel rich.
No, I think you have to credit them for all that they're doing on the AI self-driving, full self-driving robotaxi front, because if it weren't for that, the stock would be doing a lot more poorly. And I think there's an element of truth to both sides, both those who say, no, it's just a car company, in large part it is, but also those who say, no, it has transformative capabilities. I mean, there's people now letting their Teslas drive them around to a large extent, and that's something that no other car maker is currently making possible. Can they kind of keep that edge, though? I mean, especially given what's going on with a lot of the Chinese manufacturers.
I think they can keep the edge. And to your point about FSD, I mean, they have hundreds of thousands of users using their full self-driving technology, and no other car manufacturer in the world can really say that they have that much real-world data, and data ultimately is what drives intelligence and AI. So they do have that advantage. I think that will be hard to overcome. And you look at some of the traditional automakers. I absolutely think the traditional automakers will have plays in EVs and with autonomy, but they've had struggles too. You know, they're not focused on it like Tesla is. It's only what Tesla does. It's what they focus on. The traditional automakers have to balance a legacy business with what they're doing in EVs, and we saw VW just recently closing plants in the EU around that.
Yeah, I don't think it's going to come from the legacy players, right? It's going to come from China, isn't it?
China is probably the best bet. They obviously have a lot of resources they're pushing toward this. BYD, I think, has good products. But again, I think when you think about innovation, you think about who is really at the forefront of driving the EV revolution forward. It's still Tesla, and I don't think that will change.
All right, Doug, appreciate your time this morning. Thank you.
Thanks, Kelly.
Coming up, Scott Cohn joins us from the top states for business with a look at the runners-up before our big reveal later in the show. And here are the futures right now. We are uncharacteristically seeing some red in the morning. Not so much, though. Squawk Box will be right back.
Welcome back. We are getting set to reveal America's top state for business right here on Squawk Box momentarily. But first, let's run through the states that came oh so very close. Scott Cohn is going to break a lot of hearts right now, and he's back in this year's mystery top state with the runners-up. Scott.
Very, very close, as you will see, Kelly. A reminder again of how we do this. 10 categories of competitiveness, 128 metrics, 2,500 possible points. For 2024, let the countdown begin. State number 5, Florida, the Sunshine State, cracks our top 5 for the first time with America's top economy for the second year in a row and the second best workforce. But there are storm clouds, literally, with 97% of properties at risk of a climate disaster and America's least reliable power grid. Florida ranks 35th for infrastructure. The resulting insurance crisis contributes to America's 9th highest cost of living. Number 4, Georgia, the Peach State. In a year when infrastructure is king, Georgia's can't be beat, with the world's busiest airport and a wealth of sites to develop. But with poor health care and worker protections, Georgia finishes 40th for quality of life. State number 3, Texas, the Lone Star State. After a rare absence from the top 5 last year, Texas surges back with America's top workforce and tying with New York for tops in technology and innovation. But with one of America's worst healthcare systems and the strictest abortion ban, Texas finishes dead last for quality of life. Our 2024 top states runner-up. North Carolina, the Tar Heel State. Our two-time defending top state can't quite pull off the three-peat. Still second best for business friendliness and third best for workforce as people keep moving there. But that means growing pains drop the state to 20th place for infrastructure. And in a year this competitive, you cannot afford to drop to 20th place for infrastructure. How competitive is it? It is the tightest finish in the 17 studies that we have done. North Carolina misses the three-peat by 3 points. 3 points out of 2,500 possible. And yes, we checked the math again and again and again. That makes what this state has accomplished where I am all the more impressive, and we will reveal America's top state for business next hour on Squawk Box. We will talk with this state's governor, and you'll be able to see where your state ranks, if you didn't see it already, at topstates.cnbc.com. Guys?
If it was Virginia, you'd get to talk to Glenn Youngkin, who might be still a dark horse.
That'd be a nice time.
It looks like the Shenandoah Valley sort of, where, I don't know, maybe not. But
I'm the expert, but I don't know if I'm seeing it.
You're not seeing it. I don't know infrastructure, if that's the key. I don't know whether. But
data centers.
Virginia was not in the top 5. If it's not number 1, that's weird, isn't it? And they got, if you're like infrastructure and you're next to D.C., I mean, it's just, the trucks with the cash don't have to drive as far, do they, Scott?
Well, that's an interesting theory, Joe. That's an interesting theory. We'll see. The wait will be over soon.
Listen.
Where is Robert Smith from?
That's a good question.
Lead singer of The Cure.
Oh.
He's from England. It's not England, is it?
No.
Marshmallows. What the hell were those marshmallows? What was that? I never know what's going on with you, Conrad. I never. That was yesterday. He was grilling marshmallows.
I like some kayak.
And it's mutual, Joe. I never know what's going on with you either.
Yeah. I'm pretty obvious. You got it.
Fair point.
Yeah, exactly. All right. Thanks, Scott. When is this? 8 something.
Yeah.
Next
hour.
8:10.
8:10.
Great. All right. Thanks, Scott. Coming up, Wolf Research Policy and Politics head Tobin Marcus on the pressure mounting on President Biden and the impact it can have on your investments, depending on how everything finally plays out. Later, Pennsylvania Senator John Fetterman, look forward to this, joins us. He's, wow, we got a picture of him in a suit. I don't know when that happened. As I said, I don't know. He's not going to be wearing a hoodie on, probably. You're starting to like him, too. You said the Israel stuff.
He has stood up.
I know. I agree. He's backing the president. Squawk Box, we wrote that.
See and Peacock.
As Washington remains focused on what's next for President Biden, our next guest says that financials would be one of the clearest sector winners if former President Trump were to win. Joining us now is Tobin Marcus, the head of policy and politics at Wolfe Research. Tobin, it's interesting some of your analysis, and it's like, well, if President Biden continues to be the nominee, you feel more comfortable recommending financial stocks, which would benefit from Trump, and we'll go into the reasons why. But even if he is replaced by, let's say, Vice President Harris, you still think Trump has an edge, but on the one hand, 70% probability, with Vice President Harris, 55%. So it's the same trade, but you're just less certain about making the trade.
Yeah, that's right. I think you have to start, starting with Biden, I think you have to look at Trump as a quite clear favorite over Biden. At this point, the polling's deteriorated significantly. Voters obviously have a lot of concerns. You know, looking at Harris, there's a lot more uncertainty, so that pushes you back towards 50-50 on the odds, I think. And, you know, she's got more upside, certainly. It's easier to imagine her mounting a vigorous campaign and closing the gap, but Trump still has been ahead all year. She's pulling only a little bit ahead of Biden. So I think it makes sense to start him as having a slight edge. And yeah, looking forward, you know, financials, I think, are one of the clearest winners, along with traditional energy. Crypto also certainly a sector that stands to benefit from a Trump win. You know, I think, you know, from a financials perspective, there's a mix of, you know, regulatory tailwinds, antitrust easing up will be a big, you know, benefit for the sector. It's also traditionally one of the sectors that outperforms, so I think there's some market muscle memory there. But you know, I think there's not, you know, even as people get more and more confident that Trump is a clear favorite, we're not really seeing enough conviction for people to go ahead and put most of those trades on. Certainly in my conversations with investors across the street, I think most people are still in scenario planning mode rather than reacting to the kind of ups and downs of polls or the ups and downs of this saga with Biden by going ahead and, you know, sort of slamming trades in anticipation.
No, that's it in a nutshell. All you got to do is watch the betting sites for who the Democratic nominee is going to be. I've seen it move 20 points in an instant based on a letter that President Biden writes or a Morning Joe call-in or whatever. So I don't know how you make concrete decisions in the stock market about it. Some of the other interesting things, Tobin, the move higher in the 10-year yield based on the inflationary implications of 10% tariffs or Trump tariffs or whatever you want to call it, that's actually kind of dissipated and gone away. Although you still think if it was Trump that you would see higher 10-year yields but a flatter yield curve.
Yeah, that's right. So, you know, when people were trying to point to, you know, how are markets reacting to the debate, this sort of seismic shift that we saw in the race, one of the things that we saw a lot of commentary pointing to was this, you know, 15, 20-point backup in the 10-year, which, you know, that did react, or there was a move, I suppose, but that move has since reversed. And we've seen, I mean, the 10-year has been on a roller coaster for the past 9 months. When it's up, you know, people talk about deficits. When it's back down, they don't. So I think there's been a lot of narrative following price on that one. And it's a little bit challenging for me to look at that and see a convincing move in response to the debate. But yeah, I mean, looking ahead, I think that the consensus in markets is for a higher 10-year. That, you know, we hear from pretty much everyone we talk to. The debate, I think, is more at the short end of the yield curve, where, you know, I think a lot of people are expecting some steepening from Trump. Our view is that given the uncertainty about his tariffs policy, the fact that the Fed won't necessarily want to either hike or cut into it, and I think you do have to have some level of apprehension about cutting into something that could generate a big upward level shock to prices. That probably, you know, sort of slows the pace of Fed cuts relative to counterfactual in 25 and 26, which should put some upward pressure on the front end and mean a slightly flatter curve overall.
We had someone on yesterday, and you know, I have senior moments, I guess too, but they actually made the point that, yeah, for one day in the year, I would find myself voting for Trump, just because I think it would be better for business overall. I think it was someone in Sun Valley. They're more or less saying that, you know, the prerequisite, yeah, I don't like anything about this guy, but for business, You know, you hear that a lot from in certain circles, and more this time around, I think, where you almost have some people conceding that maybe as a business person, some of the regulatory issues, taxes, energy, they almost find themselves that they have to come down on that side, and they're not quite as embarrassed about it this year, Tobin. Overall, do you see that as just corporate leaders might be, you know, usually they're quiet, but maybe they'd be out in the open by just saying, I think the Trump policies would be better overall?
Yeah, so I mean, it certainly depends what you're focused on. There are certain areas where he has a kind of, you know, quote unquote pro-business agenda. Again, like lots of deregulation, much easier antitrust environment on tap. So to the extent that those are your priorities, like I do think there's a big difference between the parties. And I think that there's been less reticence from investors in particular to come out and say that they're thinking about supporting Trump. Interestingly, there has not been as much of that dynamic among corporate leaders. You know, there's sort of a news cycle a few weeks ago about how no Fortune 500 CEOs have come out supporting him.
I don't know. You know, that report, I don't know how many of the Fortune 500 CEOs were actually polled for that report, and how many of them are willing to say they're giving to Biden. Same amount.
Yeah, no, it's not that they're supporting Biden.
They have customers. They have customers.
Yeah.
They have customers on both sides of the aisle.
Exactly.
So
that's what I mean.
You have to be crazy to say anything.
Right. So but that's what I mean. Like, I think there is still more political sensitivity about taking a clear side.
There
I mean, to
is,
your point, either direction, from folks who have customers, who have employees, who have kind of stakeholders they need to manage, as opposed to, you know, sort of financial industry titans who are a little bit more, you know, independently operating.
Someone, a CEO, a big one, told me that it's like a wildebeest. You know, a wildebeest, you stay in the middle of the pack, and the lions come around, there's almost no way you're going to get eaten. The minute you leave the pack and you're out in the open, you're toast. You're dead. Why go out and say something when you got all those customers and employees and everybody else? You'd have to be insane. Tobin, Marcus, thanks. Good to have you on.
Up next, IAC CEO Joey Levin joins us live from the Sun Valley Conference. Forward to hearing his thoughts on the media landscape. That interview is right after the break. Welcome back to Squawk Box. Media moguls are gathering out in Sun Valley. Julia Borston is there and joins us now with a special guest. Julia?
Thanks so much, Kelly. I'm joined now by IAC CEO Joey Levin. Joey, thanks so much for joining us here early in Sun Valley. Before we get to your IAC business, I have to ask you about a company that you recently looked at. As far as I understand, you signed some NDAs, Paramount Global. My question for you is this. There's a 45-day go shop period that just began. Are you interested in this company? Are you going to make an offer?
We look at a lot of things, and there's certainly some history with the company and our chairman, and maybe there's an opportunity, maybe not, we'll see. But we're an opportunistic company, and we look at things when we think there may be something to do.
So if there is still a chance you might make a bid for Paramount Global, which Barry Diller sort of alluded, maybe it's still a possibility just yesterday. My question is, what does that say about what you're interested in right now? IAC does not have traditional media assets. You have Meredith, Dotdash, Meredith, the publishing business. But where would this fit in, or what does this mean for your vision for the company?
I don't think that any particular company defines IAC or has historically. We have a collection of companies in a pretty wide range of things. I mean, you mentioned Dotdash Meredith, which is the biggest publisher, digital publisher, and a fantastic business, but that ranges from that to a large interest in Turo, peer-to-peer car sharing, a large interest in MGM, which is integrated resorts globally, and Angie, which is home services. There's not a consistent pattern among any of those other than we think category leaders that have big long-term potential to grow and generate long-term cash flow.
Now, some big news out of IAC recently was that Dotdash Meredith struck a deal with OpenAI and ChatGPT to license some of that content. How is that going so far? And do you fear that it could be cannibalistic to your core business?
Yeah, I mean, so far fantastic. We're now actually collecting our first real income on AI, which is very nice in the deal we're doing with OpenAI. It's certainly something that we think about. The market thinks about it a lot. If we look at what's happening in Google so far, we're holding our traffic and doing well. And I think that OpenAI is likely to be or ChatGPT rather, is likely to be a net positive for traffic. If I had to bet, I'd say that will increase audience to our properties over time, not take it away.
Now, a question as you look across your companies, though, how do you think AI is going to impact, benefit, disrupt all these various businesses you just mentioned, from MGM in the gaming business to Angie's List?
Yeah, one fantastic thing is it helps organize data and make it more searchable. So there's so many examples of that where companies are using that already. We have a small company called Vivian, which is matching nurses with jobs, and you can now search on the basis of, I want a job in the mountains or I want a job near a beach. And we couldn't come up with those searches on our own. We could say a drop-down menu by state or by city, but now AI can sort of find those patterns in things, and you can expand concepts like that across all IAC businesses. The other one that's very tangible right now is customer service. There's a lot of companies that are existing that are offering the AI technology to us to deliver customer service for our employees in a way that is better than human customer service. They know policies better, they can enforce policies better, they can sometimes be more empathetic, actually. And so chat via customer service is another one that seems to be a great early use case, but the use cases are going to keep getting better and they're going to keep evolving.
In the past, you've raised concerns about the digital duopoly in the ad business, Google and Meta. Are you concerned that the power in the AI ecosystem is too concentrated?
Definitely. I mean, data is an essential asset for AI, and these companies have a enormous data advantage relative to everyone else. Now, I do think that many companies, existing incumbents, will benefit from this technology because the technology keeps getting better, keeps getting faster, keeps getting cheaper, and it's licensed out to any company in ways that is actually very quickly accessible, usable, so that companies like ours can use it. But I don't think that the small companies with small capital can really compete on building their fundamental models.
And a final question on the presidential election, because politics really seems to be dominating the conversation here. What do you think would be the best outcome in terms of this presidential election? Best outcome for your business and for the economy in general?
I think that's a unfortunately more complicated answer. It's crazy. It's a sad state that this country's in. We're the greatest country in the world. We have the greatest democracy in history, and our choices are horrible right now. And so what I'm hoping for and what I do think would be best would be a new candidate. And I think it would be incredibly exciting for the economy, for the country, for companies. It would be inspiring for people to have a new, vigorous candidate who the world could get behind.
Oh, well, that's a sentiment we've been hearing from some others here. Joey, thank you so much for sharing your perspective and for joining us here early this morning in Sun Valley. Back over to you guys in the studio.
Yeah, a new Democratic candidate. Yeah, I get it. It was yesterday, actually, Julia, when you were the person I was trying to remember. You got a different answer. You looked a little bit shocked. It was Anthony Noto who said Trump yesterday. And hopefully no one else.
Not shocked at all. That was something we've heard from a number of
I just thought you said you heard what this guy said too was the more common thing.
Well, we've heard both things.
Okay.
I would say a number of people have said that they believe that a Republican administration, I would say that Noto did not say Trump's name. He said a Republican administration would be better.
Well, it's like Voldemort. It's like Voldemort. I understand. It's like Voldemort.
Joe, you wouldn't open your mind to a new potential candidate? You wouldn't consider a new potential candidate out there?
People that, I'm not saying it's me, but people that support Trump don't need a new candidate. I know that's what a lot of people in your position think, but no, there's some people that are very avidly pro-Trump. Maybe you haven't seen any of the rallies, so I don't think they want a new candidate, no. I think that people that are looking at Joe Biden at 87 years old might want a new candidate. That's who you were talking about, weren't you? Who would you want on the Trump side? Joey, on the Republican side, who would get your interest there? Just give me a name.
There's a whole wide range of people.
Really?
Almost anybody else, I guess I'd say. Yeah.
Barry wouldn't like that.
Joe, I have to point out that there are some Democratic governors here that have been getting a lot of attention, including Wes Moore and Gretchen Whitmer, and they've been drawing a lot of attention from people who would like to see an alternative to Joe Biden.
All right, we've tried passing over Kamala. We'll see how that goes. All right, thank you. Coming up, Amazon reaching its climate pledge, but some say the company is overstating its green credentials. John Fort joins us to discuss next. Then later, this will be fun. Senator John Fetterman is going to join us. We'll be right back.
NBC.
Amazon just this week announced it reached a major goal, canceling out part of its climate impact by funding as much renewable energy as it uses electricity in its operations. Now, critics say Amazon is overstating its green credentials in this announcement. So who's right? John Ford is here to weigh in. John.
Hey, Kelly. Well, Amazon's overstating how big a deal this is. I mean, it's good, but how good? Well, first, a little history. 5 years ago, Amazon set a goal to effectively cancel out the carbon impact of its electricity use by investing in renewable energy. Wednesday, the company announced it reached that goal ahead of schedule while backing more than 500 solar and wind projects globally. That makes Amazon the top corporate buyer of renewable energy, according to Bloomberg New Energy Finance. Great. Now, that doesn't mean Amazon is literally using renewable sources for all its electricity needs. This is more of the swearing jar method of climate righteousness, except instead of putting a quarter in the jar for saying a bad word, Amazon funds a wind farm somewhere when it has to build a data center powered by fossil fuels. But remember, the end result of the swearing jar is supposed to be less swearing, not a new college fund. But guess what? The same artificial intelligence revolution that has stock investors so excited also promises to consume far more electricity, much of it from coal or natural gas, than Amazon anticipated in 2019 when it made this pledge. That means Amazon's stuffing large bills in the swearing jar, not just quarters, Kelly.
Wow. So, okay, so should we fault them for kind of needing all of this energy and innovating, supporting AI in the digital economy?
Well, Kelly, on the other hand, Amazon meeting this goal is a huge milestone, not overstated at all. I know there are a lot of climate purists out there who would like to see us stop new fossil fuel-based projects immediately, but the reality is we live in a global economy where that's not realistic. Emerging markets see how the West built a juggernaut on cheap coal and natural gas, and to them trying to cap new fossil fuel emissions now is like us trying to cut the rope while they're climbing up. The practical thing is what Amazon's doing, giving itself economic incentive to fund the development of renewable energy while using good old capitalism to bring wealth and efficiency to more markets around the world. Right now, renewable energy alone is too expensive to satisfy the needs of the fastest growing parts of the world. And so we have to trust that a combination of environmentalism and innovation will save the day. And it might very well take a lot of compute power and some advanced AI models to crack the code on sustainable power. Few entities are as well positioned as Amazon, a company whose carbon emissions are roughly on par with the country of Morocco, to make a positive difference, guys.
Listen, I would just say, maybe they could make a more tangible impact, all of these companies. Look at TerraPower, which is doing that new nuclear type out in the Midwest somewhere. If we could get these companies, or I think of Elon Musk and everything he's done, in his career, get some of these brains and firepower to do something on the nuclear front, for instance, it could really make that a much more.
Amazon is working on nuclear as well.
The renewables thing, they have the intermittency.
That'll be next. Yeah. AWS, and then next they'll have a great big, cold fusion reactor that Bezos will come up with. Although I'm not sure that will. But that was pretty good. Your thing, and the carbon offsets drive me like Bill Gates drives me nuts. It has a jet the size of a 747. But thinks that, he throws a couple of million into carbon offsets and he feels morally virtuous because of that. But what you did say was really cool. Third world. Yeah, we got some pretty nice standards of living over here. You can't have that. Enjoy your soy-based, meat products, because you're never going to be able to cut. That's not fair. That's
it
not
is
the way it
more
works.
complicated than, the...
Good, that's why, on the other hand, that's why.
That's why we have the newsletter. The on the other hand newsletter, we even got a QR code on the screen for you. You can scan that with your phone, the camera, and it'll take you, there it is. Or you can type if you like to move your finger, cnbc.com/OTOH. You'll get the full text of both of these arguments and you can share.
I do like the keyboard. John, thank you very much. Big banks start reporting earnings tomorrow. JP Morgan, Wells Fargo, and Citi will kick things off. Let's talk to Betsy Graysick about this. She's an equity analyst and global head of banks and diversified finance at Morgan Stanley. Betsy, please, for all our heads are spinning, there's a lot going on right now, the political cycle and everything else. What is the main thing to focus on as these bank results start to come in?
Well, Kelly, thanks so much for having me. And yes, tomorrow at this time, we will be deep into second quarter earnings results for the banks with Citi, JPM, in addition to several others reporting tomorrow, Wells Fargo, BK. And so it'll be an interesting day. What to focus on? I would say number one is, yes, the results. we are a little bit below consensus, mainly due to a conservative bias we have in our credit loss estimates.
In other words, if you're worried, or the banks are worried about a slowing economy, they put aside more in their reserves, and that could undermine results right now.
Well, coming below consensus, but frankly, I will tell you that over the past several quarters, even years, my conservative credit losses have been too conservative. In other words, the banks have been beating me on this. Well, they've been reserving, but maybe a little less than I have in my numbers. So that'll be the first thing to look at. But then from there, capital markets. Our expectation is that capital markets will be strong this quarter on a year-on-year basis. We have M&A, equity capital markets, debt capital markets together up for the major banks that we cover, 30% year-on-year. Wow. So those fees are going to be strong. And importantly, our expectation here is that we will have that continuing into the back half of 24 and into 25 if rates stay flat. If rates come down a little bit, as our economist Ellen Zentner is expecting starting in September, that will be an incremental benefit to capital market fees. And this is one of the key reasons why we're overweight the large cap banks, is because capital market fees are still low relative to GDP levels. And our expectation is that as this unfolds over the next 6 to 8 quarters, we will see acceleration in that capital markets revenue.
Very interesting. And I think some of us would like to see maybe those higher quality beats too, if they are also reserving in case things go sour. Betsy, thanks for joining us for a little preview. We appreciate it. Betsy Graysack.
Coming up, the wait is over. Scott Cohn is live in America's Top State for Business 2024. He's going to reveal it after a break. How about a couple of final hints? Scott Cohn.
No. You can see I put on my tie. That means we're getting serious. And in just a moment, we will finally reveal America's top state for business. We will talk with this state's governor. Lots more to come when Squawk Box continues.
audience. Now it's finally time to reveal America's top state for business in 2024. Scott Cohn joined us once again. I guess I won't steal your thunder, and I don't want to sound like a fanboy, but I was hoping you'd have this governor. Scott, that was funny that I said that, wasn't it? I actually said if it's that state, you'd have him, and maybe. Well, you go ahead.
Wait, you figured it out? We'll let everybody get this in just a moment. So as we've said, we put the states really through their paces. More metrics than ever this year. 128 metrics in our 10 categories of competitiveness. To tell you which state is tops, we decided to turn to one of this state's favorite sons.
Good day, I'm Thomas Jefferson, 3rd President of the United States of America, and I'm standing here in Williamsburg, the 18th century capital of Virginia, where the promises of freedom and independence were shaped. Now, come to think of it, those are rather grand ideals upon which to found a nation, or a business, or a state. Come to think of it, it's the top state.
Yes, it is. We are in Virginia Beach, Virginia, where the weather is going to be a little bit iffy today, but we're not taking anything away from America's top state for business for the 6th time. It is our most decorated state. Virginia is America's top state for business in 2024. Its first win since 2021. Here's a look at how Virginia made it back to the top.
From coast to coast to coast, our search for the state that puts it all together for business carries us back here. Virginia, the Old Dominion, with 1,595 out of 2,500 points. America's top education system, a signature issue for Governor Glenn Youngkin.
We reestablished expectations of excellence.
School spending still lags, but classes are small, test scores are strong, and higher ed is first rate. America's 3rd best infrastructure, 121 million people within a day's drive. The power grid has issues, but Virginia is a leader in shovel-ready sites like this one near Richmond.
Virginia works really hard to listen to companies, and companies are telling us that they need these ready sites.
Virginia finishes in the top 5 for business friendliness, but not friendly enough to land a Youngkin pet project, luring the Washington Wizards and Capitals across the Potomac.
It's easier and better to do business in Washington, D.C. than it is to do in Virginia.
Virginia has America's 9th best workforce overall, but a problem there too. Too many workers moving out, not enough moving in.
Virginia has a population migration problem. The data is irrefutable.
Even so, Virginia pulls off a rare top state's feat, finishing in the top half of all 10 of our categories of competitiveness. We've said it 5 times before, and we'll say it again. Virginia is for lovers, lovers of business. America's top state for business 2024.
Congratulations to Virginia, our top state for 2024. Here's where we were yesterday. York River State Park outside of Williamsburg. Beautiful place. Wish we could have showed you more of it yesterday. They have about 40 miles of trails. As you saw, they also have kayaking. It's an estuarian environment. I learned a new word. It's freshwater and saltwater combined, but a really nice place, and we thank all the people there for their hospitality yesterday. About those hits. Okay, take a hike. The longest section of the Appalachian Trail, 550 miles, is here in Virginia. Actually, the longest by far. The cure? That's Virginia ham. People didn't get that. It is cured with apple and hickory wood smoke, then aged for at least a year. Shell game, you can go a number of ways with this. The largest collection of Fabergé eggs in the United States at the Virginia Museum of Fine Arts at Richmond, but also the Chincoteague Oyster Festival is held every year on Columbus Day weekend. A penny saved. Maggie Lena Walker founded St. Luke Penny Savings Bank in Richmond in 1903, America's first women-owned bank. And Hubba Hubba, my idea was Internet Hub. 70% of the world's internet traffic goes to Northern Virginia, but the governor reminds me that Virginia is for lovers, so that works that way too. And speaking of the governor, he is Glenn Youngkin, the 74th governor of the Commonwealth of Virginia. Congratulations, Governor. 6 times our most decorated state. And I'm wondering, it's been Democratic and Republican administrations have won this. Is there something inherent about Virginia that makes it so competitive year after year?
Well, first of all, welcome to Virginia, Scott, and how exciting and what an honor it is to have CNBC here recognizing Virginia as the top state for business.
And I think we work incredibly well together. I mean, economic development is a team sport, and our administration has taken huge strides over the last 2.5 years to address some real areas of importance. Talent is always top of the list, and our Talent Accelerator is now rated the top talent program in America. Business-ready sites and infrastructure continue to be a top need for businesses, and we've allocated $550 million over the last 3 years to make sure that we have shovel-ready sites. And then finally, of course, power. And our All-American, All-of-the-Above power plan, I think, is taking big strides. Yesterday, we announced a big step for a potential siting of a small modular reactor in Virginia to be the first. There's a lot going on. I'm so proud of the work that our General Assembly has done in partnership with us, all of our local economic development partners, and of course, all the businesses in Virginia. And it translates into success. Gosh, we've had $74 billion of capital committed to Virginia in the last 2.5 years, 240,000 more people working in the last 2.5 years. Success is, I think, the proof of a lot of hard work, and it's an honor to be here with you.
And it's good to have you. Let me ask you about, you talked about the General Assembly, and you have divided government here. And one of the things, I want to give you a chance to respond, as I know you have before, to Ted Leonsis, who said that it's easier to do business in D.C. than it is in Virginia, and so he kept the Capitals and the Wizards in D.C. We don't rank D.C. Because it's not a state. If we did, would it be easier to do business in D.C.?
Well, let me just begin with, it was a real disappointment that the Capitals and Wizards ended up not coming to Virginia. The reality is that stadium deals are hard, and I think we put together possibly the best stadium deal ever, and yet we still weren't able to get it done through the General Assembly. Those things happen. Listen, we don't win them all, but boy, we win a lot. And I do think that Virginia is an extraordinary place to do business. We have businesses moving here from all over the country and all over the world. And I think that's one of the big hallmarks, is that we in fact see businesses build a future here that come from everywhere. They come here because of all of the reasons we've talked about: talent and infrastructure and business-ready sites and the best education in America, and also the big strides we've made to streamline regulations. You know, to get an air water permit in Virginia today takes you 1/3 of the time it did 2.5 years ago. And then, of course, we are a right-to-work state, which is so important. That's why businesses keep choosing Virginia, and I think that's why we're going to continue to win.
The last time Virginia won in 2021, you were a candidate. You weren't as impressed back then. You said, your campaign said, Virginia might be the #1 state for political correctness, but not in the things that matter to business. As we went through the data this year, a lot of things haven't changed because you do have divided government in the state, and things that you wanted to get through, 15-week abortion ban and things like that, didn't get through. The voting laws have stayed roughly the same. And not to relitigate all of that, but I'm curious about, is this working? You're kind of keeping each other's excesses at bay. You held the line on taxes. You compromised on education. Compromise, not a very popular word in politics these days. Is that a way to look at this, that you're kind of keeping each other at bay, or are there more things that you want to do that you can't?
Well, let me just begin with the fact that I think results matter. And when I came into office, Virginia was bottom 3rd in job growth, and candidly, many companies were telling me they were ready to move away. And so we had work to do. And I was very excited about the fact that we were able to provide $5 billion of tax relief in our first 2 years, that we were able to make substantial investments in site readiness, that we made Virginia's business climate even better by streamlining regulations and cutting red tape. I hear it every day from business leaders. And we needed to really get on our power challenge, because Virginia's power needs are growing faster than the nation. And so we needed to have an all-American, all-of-the-above power plan in order to meet those things. We've made huge strides. I also do believe there are moments where you have to find common ground. And our General Assembly this year wanted to raise taxes. And I said, we're not raising taxes. We can afford to fund all the important things: education, law enforcement, behavioral health reform, with the fact that Virginia is growing at a rapid pace for the first time in a long time. 240,000 more people working provides a lot more state receipts, and we do not need to raise taxes, and I'm going to continue to battle to lower them.
How are you going to get more people to move here? You said that's an issue, and it shows up in the numbers.
Yeah, I think we're seeing real changes in that trend. Because, of course, businesses choose every day, where am I going to invest? Where are we going to grow? And they're choosing Virginia now more often than not, and that's really exciting. And I think people are as well. We have people who are building their careers and in Virginia and moving here to do exactly that. And I think one of the big areas of progress for us is with our great military. We have 150,000 active duty military and over 700,000 veterans. It's one of the things that makes Virginia great, and we want to keep them. And so we passed tax reform immediately in order to keep 40,000 of the retirement benefits from being taxed at the state level. I want this great workforce and this great pillar of our community to stay here in the Commonwealth.
Joe's got a question.
Yeah. Yeah, Governor, to get you on the show, we can't give you like America's best state for business every single time. It's been a while since we've seen you, but you have been on the set, and we appreciate you coming on today. I'm probably wasting time even asking you about the VP slot. I can hear the answer coming that you've got work to do in Virginia and all that kind of stuff. But is there still a possibility that there could be a surprise and a lot of people think that would be a pretty solid ticket for the Republicans this year is former President Trump and you. Is there a possibility that could still happen?
Well, Joe, as you can imagine, it's quite an honor to even have my name tossed around. I think the reality is, of course, that there's tremendous talent in the Republican Party. And I think whoever the president chooses will add additional strength to an already incredibly strong ticket. And this election is about strength versus weakness. And I think America and Virginia are ready to choose strength. We want a strong economy. We want a strong national security environment and stop all the global conflict. And most importantly, we want a strong border. And I think what Virginians and Americans have seen is that the Biden-Harris administration has projected weakness, and President Trump will once again restore a strong America. I am very enthusiastic about the prospects for President Trump and whoever he chooses as his running mate, because I believe that America once again is ready to choose strength.
People don't believe the polls.
Up until
people don't believe the polls, Governor, that Virginia's in play. Is Virginia in play for the Republicans?
Yeah, Virginia is in play, and just to remind you that 4 years ago, Joe Biden won Virginia by 10 points. And then we, the next year, were able to win it by 2. And I think that the fact that we're talking about economic growth and record job growth and Virginia being the top place for business, businesses coming and investing, I think that reiterates the fact that Virginians and Americans know what they want. They've seen it. They want a strong economy. They want a strong America. And I do believe that Virginia is in play. We just got to go to work to deliver it.
For the longest time, up until maybe a couple weeks ago, and even still, you couldn't mention Glenn Youngkin's name and Donald Trump's name without the term arm's length in there. Did something change? Was something different 3 years ago? I mean, what is your relationship with the former president?
Well, first of all, my relationship is good. We had a great meeting a few weeks back to talk about Virginia and how he could go to work in partnership with my support and win Virginia. And I think one of the realities, of course, is that Virginia was not in play 4 years ago, and it is today. And as I said, I believe that his ability to project strength is so important at a time when America has projected weakness. Weakness around the world and weaknesses at home. We've seen the chaos at the border that's been unleashed by the Biden-Harris administration, and Virginians are ready for a change. That is a clear signal, I think, to the whole country that when Virginia, where Joe Biden won by 10 points just 4 years ago, is clearly ready to vote for a strong president in the White House, I think that's a statement for the country.
By nature of the main topic at hand today, this state has done pretty well the last 3 years. What's economically and however else, what's wrong? What needs to change?
Well, I think what you're seeing, and I think your rankings underpin it, is that Republican-led states have truly thrived. It's where businesses are going and people are going and economic growth is happening because of common sense policies, tax reduction, safe communities, excellence in education, business-friendly decisions as opposed to business-damaging decisions. And that's where the growth in America has been. And I think that's the vision and common sense that President Trump will bring back, that the whole country can grow like this.
Governor Glenn Youngkin, 74th Governor of the Commonwealth of Virginia, we thank you so much. Congratulations again, America's top state for business. And now You can see where your state ranks and get all the data at topstates.cnbc.com. More reports about all of this all day today. Kelly, back to you.
Caught my attention, Governor, to ban or is maybe trying to ban cell phones in schools, and maybe very much someone to watch and a policy to watch. Scott, we really appreciate it. Great stuff. Appreciate bringing the governor as well. Governor Youngkin, thanks for your time. Take a quick break. Coming up, we get that breaking CPI data, and Pennsylvania Senator John Fetterman weighs in on President Biden's candidacy and those questions over whether the Democratic Party should replace the top of its 2024 ticket. Stay tuned. You're watching Squawk Box on CNBC.
We're just seconds away from June CPI and initial jobless claims. The futures right now, you can see down just fractionally this morning, but that's unusual. Rick Santelli in recent sessions. Rick Santelli standing by at the CME in Chicago. Can't believe it, Rick. Illinois is not the best state for business?
Shocking, isn't it? So shocking. Well, maybe next year, right? All right, we are now looking at the wires. Hot numbers coming out. June CPI down 0.1% on headline, down 0.1%. That would equal where we were on May of 2020. To find a lower number, you have to go to April of 2020 when it was at its extreme of -0.8. So that is the first time we've had a minus sign there. That's actually deflation, not necessarily disinflation. Now, if you strip out the all-important food and energy, it's up 0.1, up 0.1. That's a little cooler than we were expecting. Up 0.1 would be the lightest going back to January of 21. In August of 21, you would have equaled up 0.1. Now, let's look at year over year. year over year has been a bit lower in the past, and now it equals that level. 3%, 3%. 3% equals that low I was referencing before I saw the data, which was June of 2023. To find a smaller number, you're going to March of 21 when it was 2.6. If you look at year-over-year core, 3.3%. Our last look was 3 years, more than 3 years at the lowest level of 3.4. So 3.3 will hold that moniker. It is also the lightest level going back to April of 21. Now let's look at claims, shall we? Initial claims, 222,000. That's minus 17,000 from the revised 239,000. 222,000 is the smallest initial claims since the third week in May. And finally, on continuing claims, it is now up for above 1.8 million for the fifth consecutive week, 1,852,000, and that of course comps to last week when it was 1,856,000, and that would have comped back all the way to, you're going back to November of 21, November of 21. So we obviously see interest rates moving lower. That 10-year was hovering right around 428. It's now hovering at 419. It's going to be very important to see which side of 4.25 it closes at, even though it's well below that level right now. And if you look at a 2-year note, it's at 451. It's been holding above 460. We want to pay attention to that as well. We see that the pre-opening equities have zoomed up. They are now in positive territory from minus 60-ish on the Dow futures to now up over 90 points. So we see this goes a long way for potentially that September rate cut, even though many may be pointing towards July. I personally don't think that's in the cards, but one never knows. It certainly seems as though Jay Powell now has two issues that he can point to for potentially easing. Inflation getting closer to his target, but still not there. And of course, the new wild card he pulled out, that no matter what inflation does, it's a lot lower than it was, came down a lot last year, and he's now nervous about the labor market. And we can point to the two pillars of maximum employment, stable prices, and then that outlier pillar that maybe isn't quite a pillar, moderate long-term rates. Joe, back to you.
Thanks, Rick. Join us now for more on the new inflation data. Wendy Edelberg, an economic studies senior fellow at the Brookings Institution. Joe Livornia, chief economist at SMBC Nikko Securities America. September, I'm counting on it, Wendy, September.
5 now.
Cut? Yeah?
I mean, I think the next meeting's on the table.
You do?
I do. I mean, they don't like to surprise markets, and so that would mean it's not. But if it weren't for that, this is fantastic news. Core CPI over the last 3 months came in at 2.2% at an annual rate. The labor market is at a sustainable pace. Consumer spending has slowed even as real incomes have risen. I think the economy is in a great place, and the Fed should absolutely be considering cutting right away.
Would that look, I've argued both, more or less political if they did it even earlier?
That is way outside my lane.
I was thinking September is too late because it doesn't help the economy, but it does look like an easy. July could even be better because it actually might help the economy between now and the election.
I have absolutely no doubt that the Fed does not have this on its mind.
It looks worse to me. I mean, Powell was very smart, Joe, last December in verbally pivoting and then going on 60 Minutes like Bernanke had done in 09, I believe. Maybe 09 with the green shoots. But anyway, the point is, he prepared the markets for an ease and said, look, I told you back in December we had to do it, and then we have 4 bad months of inflation numbers. Now we've got 2 good months. So to me, July is too soon, and September is too soon, unless the labor market really falls apart. Just because I don't think it's, well, one, the equity market is rallying and it's made financial conditions extraordinarily easy. So you're easing and arguably just further adding to the bullishness and euphoria in stocks. And to Wendy's point, right now the economy, I think I'm negative on the economy, but she makes a very good point. It's holding up. Labor market looks better balanced. why are you rushing to cut rates unless it's absolutely compelling? And in that regard, a certain someone will likely be yelling about rate cuts and everything else. So I would
But you're
wait.
negative on the economy. Don't you
I'm
think they should
negative,
cut then?
but I'm negative on the economy because the things I look at tell me we're going to soften. The Fed does put emphasis on those variables, and I think the inflation's a lagging indicator. But my point is that I do think it's got to be really compelling so the Fed can be above reproach and not be accused of helping, one side or the other.
One thing you've heard officials say, Wendy, is that they want to see, I forget exactly how they said this, basically a series of reports that are basically 0.1s, 0.2s, and they might have meant on the core, but when you start to see a negative, we are getting into the territory where even Fed officials are going to take notice. How many more months like this are they going to need to see? 1 or 2?
I think we're there. I mean, I know that they're paying more attention to core than they are to headline. So headline fell, but core, as I said, last 3 months, 2.2%. That is actually a little below target for core CPI. You'd expect core CPI to be at 2.4. So in fact,
for a 2% PCE
for
target.
a 2% PCE. So that in fact means that we're a little softer on core inflation than the Fed needs to see to be at target.
If they cut now, some have said they're going to reignite services inflation, and others say there's no way. That inflation's all about the housing market. What do you think?
So I see the consumer finally starting to pull back. So where I've been most concerned is what's been happening to goods spending. And real goods spending is down over the last 6 months, which doesn't surprise me. Real goods spending was incredibly strong in the years following the pandemic, and I've been waiting for it to fall. And it has fallen, but not, it seems, because consumers are feeling incredibly constrained. Real incomes are actually up. So it's the best of all possible worlds. We have consumers finally retrenching. We have payroll employment at 177,000, which is a great number, but actually pretty consistent with what I think is a sustainable labor market given immigration.
Real weekly wages are still not up. That's the problem.
There are a lot of different ways of parsing what's happening in
Well, that's really not a parse. That's just a simple.
No. But the problem is that composition can move that around. So if you have more people coming into the labor market and taking lower wage jobs, which we may well have given the surge in inflation, then you might see average real wages falling, even as any individual person is actually seeing a pretty strong labor
But
market.
as people, with rent double, mortgage rates double, basically, with overall inflation cumulative. Joe, what's overall inflation is up how
I
much?
understand
So a family of 4 goes to the supermarket. 3.5 years ago they bought this. Today they're buying less, and they're telling their kids, you can't have any Cheerios. I mean, that's why people don't feel good about the economy.
But that's why it makes most sense to look at what's happening to overall real incomes. Real DPI, the amount of purchasing power that people have in their pockets, that's up.
You mean income's up because of that takes into account all the pandemic stimulus from 2 or 3 years ago.
That's long water under the bridge.
No, I know, but if you do a 4-year look at it does take. That's why incomes are up.
But what I'm talking about is that real incomes are up over the last 6 months. Real incomes are up over the last 3 months.
The cumulative story, I think, is important. The last few months, because inflation's come down, real wages are turning positive. I like looking at the ECI because ECI doesn't adjust for some of those compositional factors that Wendy discussed, and I would say the data more in line with what you're saying, which is cumulatively we've had real wage declines over much of the past 3.5 years, and I think it's sort of a problem. And then you do see it in the consumer sentiment data, which is why consumer sentiment is so depressed.
Right.
People, even though the labor market looks healthy on the surface, the inflation's been a problem that's ate into real incomes, and clearly it's not had an effect yet on people's perception of the economy or how people's perception of how the administration is handling the economy.
You can't keep telling people they don't know how good they have it. You just can't. Sooner or later, they say, "Look, I know where I am in my life," and I think it's insulting to tell them, you're just not, you're listening to the mainstream.
You've got pretty good though, Joe.
I do have it. I do, and I appreciate it, but I'm not allowed to own stocks anyway, so I don't have it that good. Got a little Bitcoin. She doesn't. Even though I told her, "Oh, you got some fun?"
But not when you said.
Wendy,
The labor market is super strong.
It is.
I am not going to go and tell anybody who is incredibly frustrated by the way the world is right now that they shouldn't be frustrated. I mean, I think, but I think what we're seeing more in the consumer sentiment numbers is that people have incredible unease about the overall country right now.
Yeah.
I don't think it's so much about what's happening in the economy.
Right, but part of what you said of why people are accepting lower carbon because we got an open border down south, which is another thing people don't like.
It's not an open border, but we do have a border that allows people.
Now you sound like someone like New Yorkers a couple months. It's not open.
Well, people are allowed to come in and apply for asylum.
10 million.
Over what
Over the last
period?
Since President Biden came. Since President Biden
years
came.
and no, you're 3.5 million. Yeah, that's
No,
like
10 over. Okay, we can.
Anyway, but that's one of the things that has fueled the labor market. That's one of the reasons why we are seeing 177,000
It's
over the
also
last
fueled
3
the
months.
discontent of people in the country.
It is not ideal immigration policy by any stretch.
I'll sort of tangentially weigh in on this. This was pretty good, but I would say the one thing I would, like on GDP, I see GDP very weak in the second quarter. First quarter was weak if you take out housing services. And but anyway, I do believe this unemployment rate is a problem. We were 3.4, we're up to 4.1. That's a bad sign.
All right. Squawk Box will be right back. John Fetterman, the senator.
Calm.
Don't go anywhere. Coming up is Pennsylvania Senator John Fetterman. He joins us live here on Squawk Box. Stay tuned. We're back in a moment here on CNBC.
Our next guest has been one of President Biden's staunchest defenders following that widely panned debate performance 2 weeks ago. Joining us now, Democratic Senator John Fetterman of Pennsylvania. And it's a pleasure, Senator, to have you on the show. Saw you at the White House Correspondents' Dinner. I almost brought up a picture. I took a selfie with you. You had a really fine-looking tux on. It had a hoodie and a bow tie was drawn on it. I don't know if you remember, but you were the most elegant.
I've been watching you for decades. We back into the late '90s. So
Excellent. Since the debate, Senator, it's almost been like it looks like a sine wave almost, and I don't know what to use to measure what's going on in the prospects for the president, but I used some of the betting sites, and initially it had switched, it had flipped, and the vice president was favored. Then President Biden came out with that very strong letter and the call in to Morning Joe, and then he flipped back up. But now it seems like there's some wavering from some of the leaders in the party, and they don't want to say it out loud, but reportedly behind the scenes, there are some important Democrats that are starting to waffle a little. Would you at least concede that?
Well, what I won't concede is that Joe Biden is that guy, and that is his choice, and he's already made that choice, and he's already been very clear that he's going to get through the convention and through to November, and he's going to beat Donald Trump and all of that, and that's really a fact. Now, if somebody's unwilling to say that publicly, or if they want to say it privately, and of course this afternoon for this lunch with my caucus later is going to be, of course, it'll be spirited, but I'm going to be very proud to stand with Joe Biden, and I've been saying I'm showing up with brass knuckles, and I just want to stand with our president, and I think we're going to have some allies in that as well too. And for those that may have a different opinion, they're entitled to that, but I'll never understand how we could abandon a great president now, especially if to anyone that's watching this, I mean, of course, what's your network? I mean, I'd like to point out there, compare that to a rough debate. It's like the Dow Jones has been up 28% since January of 2021. NASDAQ is up almost 40%. The S&P up almost 48 and almost 16 million new jobs. Now, I can't imagine why somebody who's watching this right now would say, well, would I take a rough debate or this amazing economy kinds of statistics on that, or would you rather have a rough economy and he could have had a great debate? It's a strange choice right now, but my choice has been very easy, and it's going to be on for Joe Biden.
I know that part of your calculus, and I agree with you, President Biden was one of your staunch defenders. You had a rough debate as well, and I think you're someone that is, at least knows what the president is going through at this point. But Senator, maybe the realities are that some of these donors that like to throw their weight around. I mean, why we care what George Clooney thinks is I haven't figured that out yet. Someone needs to explain that to me. But if you do lose donors, and if the poll numbers make it seem like somebody else would have a better chance for the Democrats to hold the House, the Senate, the presidency, does it become too difficult?
Yeah. Polls are in flux. They change. And remember, anyone in 2020, Biden was up by 5 to 7 points. And I've been arguing at that time that this is going to be much closer than that. It's going to be very competitive. It's always going to be close in 16, 20, and of course in 24 and then. Now, if you've raised and supported the president, raised $28 million, and then turn around, it's going to take many multiples of that to undo some of the things if you want to go against the president. I don't agree with that. But for me, my point is that the president he's been our guy. He's won the primary, and there was an opportunity to run against them and make their case. And the only guy that did that was the gelato guy, and that didn't go very well. So here's where we're at back now. And the question that I would ask to anyone watching this right now, the economy has been a banger under Joe Biden's presidency, and it's been incredible after a lot of people were thinking that it was going to be a cratering and it was a recession, and that's just not true. So what would you rather have, the kinds of an economy that Joe Biden helped brought us, or the fact that he had a rough debate, and nobody knows what a rough debate is like after myself. And it's also it's a fact. Debates do not determine who's going to win. Whether it was Clinton, wiped Trump out, and of course she didn't win. And of course Obama really lost badly in a debate, and of course he won. And even if you go back to Kerry as well too, it's just not statistically meaningful about the debates. And if debates were that important, I wouldn't be standing right now at the rotunda talking to you as a senator. I would have a lot more free time in my schedule right now.
Senator, the issue is that people are saying...
And I'm proud to stand here for the president, and I'm going to do that later during this lunch. And I'm coming in ready to that, and I think we're going to have other people to defend the president.
Let me just ask this question on the public's mind, though, Senator. Is this really about a bad debate? Didn't the debate just tell us who the man is? That's why people are so upset. Everyone has a bad debate. A bad debate's not that big of a deal. The big deal is whether the president is capable of doing the job now or would be in 1, 2, 3, or 4 years' time.
All I can say is it's where he is right now. And I spent a whole day with the president. We went all across Pennsylvania, multiple events, and he was sharp and he was fully engaged. And now when you get outside of that kind of a bubble, people were thrilled to be with him. They were, in a line to have a selfie with him, and they were cheering. And these weren't, they were organic, and I witnessed that. Now, of course, if I thought that maybe Joe Biden wasn't the guy, I certainly wouldn't be saying it publicly and putting it in the New York Times or in the Washington Post. But right now, here we are now. Like, I was with him, and I am proud of him, and that's why I'm here talking to you today and in other kinds of outlets to just let people know Joe Biden is our guy. He should be our guy, and quite honestly, he deserves our support throughout all of this, and I do believe he's going to win. But of course, it is going to be close, even though it has been, and that's going to continue.
He's got the delegates, Senator, and he went through the normal channels of how to do things, and it theoretically, it's his choice, and he would have to be talked into, I think, not being the nominee. But just listen to this for a second, Senator. Former House Speaker Nancy Pelosi, we all read the letter that President Biden said. He is committed to being the nominee. So why would she yesterday say, it's up to the president to decide if he's going to run? We know that he's decided. Then she says, we're all encouraging him to make that decision because time is running short. And the code is, she's saying we're all waiting for him to make the decision to drop out. So he's lost Nancy Pelosi, and supposedly Schumer is murmuring the same kind of stuff behind his back at the same time. Do you think eventually that your side on this and the president's side will win?
Well, the president has made that decision on that. And of course, she was an accomplished speaker, and she's absolutely entitled to have her opinion on that. But I just don't, I really don't agree with all of that. And if anybody this afternoon comes with a, we need to take Gramps' keys away kind of a thing, I'm going to push back in the strongest terms, because he is our guy, and he has run an amazing term as president by any metric. And as I said, I have spent time with him personally, and I've seen that, and I believe he's going to win. And I would much rather have a guy that didn't have a great debate versus the other guy that had a debate, and most of it was lies and bizarre and unhinged.
So, Senator, I think a lot of the public is thinking through as well the issue of, okay, if something happens to the president or if he's not capable of serving out the term, that leaves Vice President Harris to step up to the job. Would you feel comfortable with her in the? I mean, this is the biggest moment ever for her after what we've all seen about what's going on with President Biden. Is she ready for this moment?
Well, the vice president is very clear. She's all in on for Joe Biden. And I'd like to remind everybody that he appointed her as the vice president because he knew that she was God forbid if she has to step up and take that job. And I do believe she would make an incredible precedent, but I don't think that's her moment right now. And now she has said anything to contradict that. So we have an amazing team, and if anyone's more inspired by the vice president to be at the top of the ticket, you're still voting for her if you're voting for Joe Biden. And I haven't met a voter that says, well, I'll go with Trump. It just doesn't make much, because again, Joe Biden has made these incredibly great choices, and that's why we have the kind of ticket that's ready to roll and get us through into November through this incredibly difficult election, but he is going to prevail.
Senator, we've only got about 5 seconds, 10 seconds. Do you think David McCord, what about the other Senate race? Any comments on that just real quickly, 10, 15 seconds?
Yeah, well, the last thing is, like, Joe Biden's my guy. Later today, I'm going to show up and I'm going to remind people. And I think I'm going to have allies in there, but I'm going to be, and I'm not going to change that. And I want Joe Biden to know, this is his choice. He's already made that choice, and I have his back. And we all should have our back here. Right. And if any kind of our party decides to try to push him out, then that could become a party that is going to deserve to lose.
Very. I appreciate your passion on that, Senator, and it's good to have you on today. Thank you very much, and we'll be watching. Thank you.
Going to be first. They've got that meeting with the Senate. Biden's at 5:30. The NATO press
big boy press conference that they keep talking about.
And futures have turned negative, by the way, after CPI, after that deflation.
Or after
surprising turn of events.
After
his comments.
Thanks for being here. Make sure you join us tomorrow. Squawk on the Street is next. You have a phone call.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures tried to erase some morning losses as June CPI gives us our first month-on-month deflation in more than 4 years. Shelter slows down dramatically. 10-year yield drops to the lowest level since March. Our roadmap begins with the rate cut outlook. Inflation does fall in June. What does it mean for the Fed's policy path?
Plus, Delta shares are tumbling this morning. The outlook for the company falling short of estimates, despite what is, of course, very strong summer travel demand. Pepsi shares also under a bit of pressure. This amid signs of weakening U.S. demand. And yeah, that guy, he's going to join us as well. NFL Commissioner Roger Goodell.
Let's begin with the market reaction to CPI after yesterday's 6th record close in a row, Jim. Everyone's pointing to Supercore down 2 straight months. Core X Shelter down 2 straight months.
Look, these numbers are the kind of numbers that if you were Jay Powell, you say, listen, I'm there, I'm ready. I've said that we have to be a little bit more worried about balancing things. And looking at these numbers, I think that unlike Delta, which has got a lot of turbulence, this thing is perfect. Look, it's okay to say it's perfect, Dan. Because so many things are not perfect.
So many.
Okay, you want to know the line that's not perfect?
Tell me.
Indoor plants and flowers. Much higher than I thought.
I thought when you were talking about things are not perfect, you were talking in a broader sense, but sure, indoor plants and flowers.
But don't worry, clocks were okay.
Clocks were okay?
Yeah, you buy a
clock. They do get very granular there. All right,
do we get
a cut before September?
Okay, see, that speaks to panic, and I don't think there's a need for panic. I think that these numbers, we're all going back, and we're going to talk about food today. David, we're going back to, it's the end of hyperinflation, it's the end of COVID. We're back to where we were for many lines, and then other lines, obviously, we're not. And we need things to be pushed back. But I like these numbers, and I think anyone that doesn't like these numbers right now is saying, I got to talk this market down because my investors are saying, what are you doing?
Right. Well, we just looked at the 10-year. It is hovering and now below 4.2%.
And how about how much money you made on a 10-year auction? These are the days. I mean, Carl, I got to emphasize, I mean, you see, okay, here's a good one. I watched the tape. David doesn't like that. Apple's down $1.28. Well, I saw a very nice piece this morning about Bank of America raising numbers. So you think that that's going to be down $1.28 by the end of the day? I mean, I don't know.
Well, not necessarily with rates falling the way that they are as well. One would anticipate that would have a positive impact.
Somebody at Robinhood
That's it. Maybe you're rotating. Maybe there's some other names as opposed to just the same 5 names that go up every day lately.
The names that are going down are the names you want to go down if you are president of the United States. because what the president was railing against was shrinkflation, and I think we're going to have a little shrinkflation when it comes to I think ConAgra is turned the corner. Volumes were up. PepsiCo, I'm looking at volumes here, but PepsiCo, no. PepsiCo, I think that they raised price too much, and the consumer is balking at the price of potato chips.
Pepsi volume down 3.5, Frito volume down 4. They made it up. They made it all up in price.
And I've got to tell you that I think that they're going to have. I think they may be out of value. I think they literally have to kind of make it so that they do cut price a little bit. Now, ConAgra did it through promotion, and that's why I think that stock shouldn't be down. But Carl, when I look at PepsiCo, what I say to myself is, somebody has to bite the bullet. Now, we know Costco, which we'll be talking about, has said that the only thing that hasn't worked for the premium Kirkland Signature brand is they've never been able to knock off soda. They tried to knock off Coke and Pepsi, they couldn't. But Frito-Lay, I checked in my Ollie's Army, the flyer that you got today, Dave, if you remember Ollie's Army, they're discounting Hers potato chips like they're going out of stock.
Hers.
Hers. Not Hims and Hers. H-E-R-R-S.
H-E-R-R-S.
Hers. Hers. From Philadelphia, it's Hers.
Why do you think that is?
No, because
why do you think that is? Discounting these
potato chips got too expensive.
Oh, they did.
Not that he would. No, Pepsi's going to say that. That's Ramon LaGuardia is very abject about it. Now, I will say this: you're selling that stock at an incredibly high yield. You're selling that stock when they had a great July 4th. You're selling that stock when this company has the optionality to do a lot of different things. You're selling a premium stock where the international numbers are the best they've ever been. So I may be willing to take the other side of the trade down 5 on this.
We've been watching a lot of staples, whether that was General Mills. LaGuardia today did say price sensitivity across all income groups. Here's what he said.
In the U.S., there is clearly a consumer that is more challenged, and it's a consumer that is telling us that in particular parts of our portfolio, they want more value to stay with our brands. That is not for all the consumers. It's some consumers. That is not for all the portfolio. It's some parts of the portfolio. And we have been working different tactics to give the consumer what they want. And we see that it's working. And that's why we feel comfortable about, given the oxygen that we have in the P&L, that we'll be able to deploy in a very targeted way.
Well, this is very interesting. What you're basically saying, listen, instead of being able to buy, say, 5 bags for $20, they want to get it down. They want to do $5. They want to be able to say, listen, we're going to do 1 bag at a time. The customer is balking at anything that's $20. Now, that is really something. Mentally, the customer doesn't want to pay. They're spending $50 at the grocery store, and they're balking at a very high price point Pepsi. Now, I will, and it really
What wins out, Jim? Does higher margin? No, for the company, from an investor standpoint, higher margins or lower volumes?
Right now, lower volume is hurting them.
Overtaking.
Yes,
is more concerning than the higher margins they are seeing.
Oh,
right?
Low price point. It's $10 is a psychological level. Now you have to understand the input costs here went up 40%. Think of it. It's cooking oil, all right, fertilizer, corn. You're talking about heavy Russia.
Yeah.
So they have higher input. At the same time, they're not giving us the volumes we want, but they can fool around with those volumes.
And do we think that there's any real impact yet from GLP-1?
Okay, so they are telling me point blank, Jim, drop it.
I know.
Drop it. ConAgra saying drop it. Enough with the GOP-1. We're not seeing it. And they're using focus groups. It's not what's driving it.
Would they know? Would they know?
I got to take their word for it because I've known these guys for 25 years. They've never bagged me.
Okay.
I don't know what to say.
Hey, I think market research would argue, they have a clue.
They have a clue.
They do. I mean, these are really good companies with really
what do they
good
do? They sit people down and
yes, they do. They do market panels.
Say, are you on Wegovy and
Yeah, and what they're saying is, look, we're not spending with $10. Well, I'm not spending this much for potato chips. You guys have raised the price too much. That's what they're saying. They're not saying, hey, listen, I take GLP-1 and I can eat just one.
While we're on the topic, it doesn't sound like you're that impressed with Pfizer's oral formulation.
Like the chief scientist, what was that the other day? All right, now listen. Dr. Bourla, I'm not saying he's overpromised and underdelivered, but there has been a consistent issue with Pfizer that they haven't delivered. Period. Not overpromised, haven't delivered. Dave Ricks has got a phase 3 pill. Okay, phase 3 is well ahead of phase 2, David. I don't know if you know that game. And he's building factories to do the pill. So you know what, Pfizer? Go pound sand. I am not going to buy Pfizer on this. I am not, because Pfizer has not been a delivery machine. You know that they said that they couldn't make this. Now they can make it? What is that, David?
Yeah.
What is that?
No, it does raise a question as to why they're. I mean, listen, it's an enormous market. It doesn't need to be dominated by 2 companies, conceivably. But that said, unless you have an entrant that in some way is either going to be lower priced and almost as effective or more effective, why would you bother?
Okay, and we know it is a big market. It's a like cholesterol market where everybody came in the end. But
yes, that's true.
Believe it or not,
everybody did come into the end, and there are certainly plenty of winners there. So
yes, there are.
Although the greatest was Lipitor,
yes,
a Warner-Lambert drug that was bought by
Merck
Pfizer.
Was first
many years ago. Yes,
and then Warner-Lambert leapfrogged. So you're looking for the Warner-Lambert
You're looking
situation.
for a leapfrog,
and they did not leapfrog, and that's what matters. Now people don't understand. I mean, Jacobs makes these. Well, it's J now. These plants. These plants are much more complicated than a typical.
You've said this before.
Right. And so if it costs $5 billion a plant, and Borla's fooling around with like a phase 2, maybe not, he's Hamlet.
Is he?
Yeah.
You think he is?
To make or not to make? That's the question.
Their biggest investment was in CGen and
we're waiting.
Oncology.
We're waiting. Now, look, maybe Borla has a magic bullet here, but I just find I don't want people to go buy it on this, and I do want to say that there's some notes out of Lilly that are so positive, and David Ricks has been money, and he's got phase 3, and I'm doing a drug right now, believe it or not, and I'm talking about what's phase 1 to phase 2. Not so bad. Phase 2 to phase 3, when you already have a drug, the FDA is not interested in promoting a lot of new drugs if you have a drug. That's the way the FDA works. So, I don't know. I'd say take it with a grain of salt. Lilly's had a great run.
Yeah. Really quick, are you surprised that futures couldn't benefit more from this print?
I think yesterday was a fantastic day in anticipation of some great numbers.
Well, we're going to talk a lot more about it and what it means for certainly September odds, now above 80%. When we come back, the business of football in the streaming era, an exclusive with the NFL Commissioner Roger Goodell, live from Sun Valley. Julia Borston's got that. We'll get to Delta, Costco, Alcoa, MicroStrategy, and of course VW QuantumScape when we come back. Some prominent business leaders convening at Allen & Company's annual conference in Sun Valley, Idaho. Our Julia Borson is there this morning with a very special guest. Morning, Julia.
Good morning to you, Carl. That's right. I'm joined now by NFL Commissioner Roger Goodell. Thank you so much for speaking to us here this morning in Sun Valley. So before we get to all the conversations here and the implications of streaming and media M&A, I have to ask you about the lawsuit, because I last saw you testifying in this DirecTV, this lawsuit about DirecTV's Sunday ticket package, and you lost and then appealed. What do you expect to come from this lawsuit, and how do you think it will impact Sunday ticket and other deals going forward?
Well, we obviously disagree with the jury verdict, and we are committed, obviously, to following the legal process. It's a long process. We're aware of that. But we feel very strongly about our position, our policies, particularly on media, that we make our sport available to the broadest possible audience. Sunday Ticket is just a complementary product. So we're committed to following the litigation and all the way and making sure that we get this right.
Well, we will continue to follow that trial. Now, speaking of rules, there has been a lot of discussion about the rules about private equity investments or ownership of the NFL teams changing. What's your perspective on that, and where is this going to go?
Well, we've been very deliberate on this, just looking at our ownership policies in general, and as sports evolve, we want to make sure that our policies reflect that. We created a committee last September that looked at all aspects of our policies, including debt and including private equity. We've had a tremendous amount of interest, and we believe that this could make sense for us in a limited fashion, probably no more than 10% of a team. But that would be something that we think could complement our ownership and support our ownership policies. So we think we're moving in a very positive direction, and hopefully I'll have something by the end of the year.
No more than 10%. Other leagues have capped ownership at 30%.
We're not other leagues, Julia. So I think we're going to do what's right for the National Football League. And we feel that we like our ownership policies. We think this is a compliment. But this is also something that's the initial cap. Could we raise it at some point in time? Of course.
Yeah, well, certainly, potentially some owners or investors here as well. Of course, in Sun Valley, everyone always talks about M&A, and the big deal this year is the one that was just announced between Paramount Global and Skydance. There's been some discussion of the fact that if there's an ownership change of CBS, which broadcasts some NFL games, then you can renegotiate with CBS because of its new parent company. Do you plan to? What do you expect to happen?
Well, listen, CBS has been a great partner for us back to 1956, I think. They've been extraordinary right up to the Super Bowl this past year, where we had record ratings at the Super Bowl, over 200 million people watching. So they've been a great partner. We'll obviously paying close attention to the process. We know Skydance. We're partners with Skydance. They've done a terrific job with our relationship. So we'll look at the structure of the deal. We'll see how it impacts us. We'll see how it impacts our business. And we'll make the best decision for the NFL at that point.
But given the fact that the NBA is now negotiating for its rights, $75 billion package roughly, do you think you're underpaid for NFL rights? I mean, you negotiate a
probably a lot of people in the NFL think they're underpaid. But I think, listen, we have great relationships with our networks. And a lot of our media is not about the dollars as much as it is how do we reach more fans. That's the primary objective for us. Obviously, we want to be paid fairly, but for us, it's about reaching fans. And being on a free platform like we are allows our fans to see that. And I think that's what's led to the great, not only popularity of the league, but obviously the great ratings.
Speaking of new partners, Netflix, you announced Christmas Day games on Netflix. I saw at least one co-CEO here in Sun Valley. Explain to me the strategy of partnering with all of these different platforms, especially when there does seem like there's a risk of fragmentation or simply making it very expensive for your fans to be able to watch all the games.
Well, over 85% of our games are on free television, and we've committed, even when it is on a platform that's a paid television platform, that in the local markets of those two teams, it will be on free television. So I think we're going where the fans are, Julia. You see the changes, and so fans are moving off of paid television platforms. So we want to be where the fans are. Netflix has close to 300 million subscribers on a global basis, which is really attractive for us in being able to reach that global fan. As you know, international is a huge initiative of ours. And I think they want to really make this an event. and Christmas Day, and we think that's important, just like Thanksgiving. And so we've seen that. I think of the 3 games we played at Christmas last year were in the top 25 of the entire season. So I think they're going to take this, they'll globalize it, they'll put it, a Netflix twist to it, and I think it'll be great for the fans.
So what does that mean in terms of international expansion? More games for Netflix?
Maybe all of that. I think our objective here is to try to globalize our game. And so we're playing 5 international games this year, including a new one in Brazil that will be part of a super kickoff weekend with NBC. We'll kick off on Thursday night in Kansas City, come back on Friday in Sao Paulo, Brazil. And so we think that's going to be great, and come back on Sunday night with NBC. So we believe that the game is going to be incredibly popular globally. We just have to bring more games to it.
No, unfortunately, we're almost out of time, but I have to ask you, because it is so dominated the conversation here in Sun Valley about politics, the NFL is something the whole nation watches, just looking at the ratings, especially for big events like the Super Bowl. Are you worried that a polarized election season could impact your viewership, or do you think that you're worried that some of your players might speak out about the election in a way that could impact the game?
Well, Julia, it's always a difficult period in the country when you go through an election, and I think it's important to hear voices. We support a program called NFL Votes. We ask our players, our teams, our partners to stand up and say to our fans, go vote. That's a democratic way. That's what we all support. So for us, that's the important platform. But we understand our platform. We understand, frankly, that we unite people, and that's what we like to focus on. So hopefully we're that harbor where people can come together and get away from politics or anything else and enjoy football for the day.
Well, we have so many more questions for you, Commissioner Goodell, but unfortunately the bell is about to ring. We'll have to leave it there. Thanks so much for joining us. Guys, I'll send it back to you at that point.
Julie, appreciate that. We'll chew on that one after a short break here as we get ready for the opening bell. Jim, you got immediate thoughts on 10%?
You're just happy to see it. High. What, for that to do that? No, I don't know. I did think that, one thing I did think about Rodgers, I was shocked that he just said, listen, CBS, great partner for a long time, we're going to stick with him. I mean, why? I mean, Amazon's doing incredible product. Why not just say, listen, Amazon is possible. They want to. We see the hyperscalers willing to pay far more. Who cares? Who cares? I mean, Amazon product on Thursday nights, every bit is good. I'm just surprised that there's any loyalty, and I say that because as a season ticket holder from the Eagles, I see no loyalty whatsoever. None whatsoever.
Yeah, but they want to have a diversified platform. They want streamers, but they also want over the air. They want to make sure as many people as possible have access to the games. They, as you said, have a long-term relationship there. They have a contract in place. I think it's very unlikely that they would break that deal.
85% is free. He could do whatever. Look, our first game is in Sao Paulo, okay? I'm not going. I don't know. I mean, I was looking, the subway to Sao Paulo is very expensive.
What does that have to do with anything?
I'm just saying that they do anything for money, and I love the NFL. But the NFL is jump ball when it comes to that. It's jump ball. And that's because the owners are, I think, overall, recognizing that the product is the one thing that people really want, and they can go to Amazon, they can go to Alphabet, they can go to any hyperscale.
I mean, Alphabet does have a YouTube contract.
Yeah, right, but they could take
Amazon
everything.
does have an NFL contract.
They could take everything. Apple could take everything. Microsoft could take it.
There's no doubt that there could be significant competition for even more from those, but the NFL's approached it, as I said, in that way. Maybe as the landscape changes even more dramatically and so few people get anything over the air, maybe you'll be right. But by the way, these contracts are in place for many years to come.
Yes, but I'm saying younger people do not care where they get it. They don't care. And I just sit here and just wonder, how did these companies get to be at $3 trillion? And the answer is they get anything they want. Anything they want.
Sounds like a case for the Department of Justice.
Look, I'm watching Warner Brothers Discovery. I hope we hit that. Because they need a level of concentration to this industry that's not possible.
Well, that's what Zaslav was saying in Sun Valley, that he would like to see the ability to actually have consolidation. We talked about that yesterday. We don't need to go into it again.
They got a Friday game. Amazon got a Black Friday game. They'll do anything. They'll do anything. And the gross margins for I'm sorry, I just say...
Well, they're getting the NBA for streaming. Of course, Warner Brothers Discovery may very well compete with that and or even litigate Yes. Because of the difference in sort of approach in the NBA in terms of the streaming.
Yeah, what do you think about that, Jim?
The hybrid that.
Good morning, retail traders.
Would offer.
But when you're offline, do these people not tell you who they're most concerned about and scared of?
Spy's excited.
Everybody's scared, of course, of the enormous power of
Well, I'm just saying,
Apple,
CBS
Amazon,
has a
and
50
Alphabet.
whatever 50-year record. Okay,
You can't compare the two.
Come on. I love the NFL and CBS.
Got it.
I'm just saying that it's just highest dollar, and we all know that.
We're not like other leagues, Julia, as Roger just said.
Ooh.
Highest dollar. And let's stop fooling around. Let's accept that they don't care about the season ticket holders that much at all. They'll do anything, anytime. They'll run Christmas Day games. They don't care.
We gotta go. We're gonna miss the opening bell. Stop talking.
We'll get Kramer's Mad Dash and countdown to the opening bell. Don't go anywhere.
Clocked out. We have 5 more minutes. I'm going to prepare by taking off my shoes, grabbing my morning tea, getting it prepared. had a situation. Okay. So the red, we got United's down pretty good here. I'd keep an eye on United, right at open. Oh yeah, I'd definitely keep an eye on United. We gone far enough? No. 44.16 maybe. And 43.43. So check this out. What's SPY doing? I want to check out SPX. Okay, we got a bearish flag right at open. Got inverted hammer. Was the first 1 minute. And 2 minute is an inverted hammer on a SPY. We're at the 200. We opened at the 200. UAL, I'm very interested in this one right now. Delta earnings are coming. Why it's a better bet than American. Well, I don't know where to set my alert. I kind of like it right here at 44.16. Here we're getting close. Let's see what we got. This is kind of risky. We hit 44.23, so I'm not that far off. Hurry up. So the 19th, oh, there's not that many in here for next week. $50 strike. That's way too far out. I'm going to see if that 48, 45, if I just buy, ooh, look at the spread. There we are. We're right on my number. I'm 1 penny off. So these are the $45 strikes for next week. I think as the spread tightens here, it should go higher. Delta Airlines posts downbeat earnings. Let's not get too excited here. Now see, this was the one that they were really harping about. They're expensive, but I heard their service was good. Downbeat revenue outlook. Well, quit charging so damn much. You go look up a vacation, and if you want to try to get the shortest hour flight, you'd be paying $300 or $400 more. That's kind of interesting, though. I'll put UAL over here and watch it over here. It's good. Oh. We got a yabba dabba doo going on. Bitcoin, are you yabba dabba doing? Yesterday we talked about Mara. Oh shit. Oh. Oh. CLSK we talked about. Our IoT after this should even be running. CCL down 30-some cents. Netflix is at 670. Let me turn this over here. There's some good ones on sale. You got CCL here dropping some. I'm not saying get in it. I'm just saying it's a good watch. Netflix 667. Oh, that's pretty damn close for Netflix to find a support. And I'm going to do it off of the wicks. And I'm going to do it off of the body. So we hit the first support for sure. This looks tempting. Here, look at the 5-minute, 5-day. Yeah, see, we're right on it. We got Dell down. We got Apple down $1.55. See, I could drop more. And it could be close to a support too. That wick to that wick. See, we're right on it. Did you see that before I drew that in? And we got Walmart. They've been yakking about it. TSM down 76. ARM down 75. TSM down 90. Where are you, bitch? Okay, stop. Got it. We got a knife. Sasquatch, adjust price target to 250. Oh, Jim, your tea. You let it soak too long. So this is when I need an intern. I'd say, intern, drink this tea and make me a new batch. Good morning, Randy. CoinMera and CLSK boom. Can I assess IWM? Yes, I most certainly can. First, I'm going to look at the Fordham. Oh, what was that? What the hell? What happened here? Indexes are trading higher following a softer than expected June CPI figure. Wow. Well, when I first saw it, magnificent, I was going to say, I said, what? And I talked about the Russell yesterday. Now, my second thought is we can go much higher. My third thought is no lower than 203.86. My fourth thought is I got to keep an eye on UAL. We're at the 9 right now. It's a little overreaction. I'm getting conflicted stories. The airports are packed, and all of a sudden, I don't know about that. Goodbye, Jim. You should work for Schwab. So to keep this thing bullish, 206.64 is my opinion for the IWM. And I think this is definitely, you have to look at it and go, oh, wow, you know, ooh. That means you'd be chasing it if you jumped in it right now. You'd have to scalp it only. That's my fifth opinion. SPX on the 2 minute, we're at resistance. So 2 minute resistance is 5336.46. You want to skip to the 65th opinion? Again, I just can't leave out 64. So if I look at the 64, I have to go to the weekly time frame. And I go, the new resistance, get this down on paper. You made me do it. Rule number 64, 208.19 to the pity is your hard resistance. Yeah, I'm talking, but I'm not making no sense. What? You got it. Everything's working on my side. Hello. You can't hear me? Pay attention. No sound on YouTube? I don't believe it. Let's have to double check. This could be a big problem. YouTubers, can you hear me? Yes or no?
On YouTube.
I can hear me. Sounds good to mannequin. So again, 20819's resistance. Did you get that down on paper? For the IWM? You're not serious, are you, Jim? More dead serious than a dead flea on a pile of cow manure. That's opinion number 64. The crowd's going wild here at the sports arena. Now, if I was a betting man, the odds of this happening will be 9 to 10. Because I said so. Uh-oh. Damn, we were already there. No, it can count now. It can count now. Still, that's perfect. Now I got another confirmation. So confirmation number 65. Magnificent. Is that we've already hit that resistance once before. So it'll be a double top. It has to break. If it doesn't break, then it will automatically pull back. The crowd is really going wild here at the sports arena as Jim drinks his sour tea. Though it's still, ooh, that tastes good. I like this oolong tea. Okay. Does anybody know what 7-Eleven means? $7-Eleven. Can anybody in the room tell me what 7-Eleven means? And I'll get on to the next subject. Woo! Well, that's pretty good. That's a good answer. I have to. Wow. I think you just went up a couple grades there, Magnificent. I thought you were just mediocre, but no, you're smarter than the average cookie. You just proved that to me right there. I think we all should give him an A+. Because I didn't even think about that. That's better than my answer. My answer is it's a convenience store chain. Now it's Come and Go. The K, not a C. Michelle knows what they are. Panama sticker cards. Okay. We're watching the IWM. We got the SPY. We kind of did break the VWAP for a couple, 3 minutes. 4 minutes, less than 3 minutes. So if we come up and retest one more time, now watch what I'm talking about. This is a fallen wedge. This is a fallen, almost a symmetrical flag, an expansion pattern. We're going to call it a bull flag. Okay, Jim, the crowd's going wild here at the sports arena. It would be smart for it to move on up for the third time now. So as I prepare my ticket. Jim, you weren't prepared. For that, you get an F. Oh, look at United. Look at United. Uh-oh. Uh-oh. IWM broke resistance. What happened here with United? Damn, I missed a good trade right there. Oh my. Oh well, that's 40 cents. It could have been 50 cents right there. $50 a contract. And I called it, but I didn't take it. That was a bad mistake. I should have had a follow through. I should have kept my eyes on this one. I could have been done for the day. $250. And when would I have sold this? Yeah, I'd have probably got out right here. And it came back respectfully to the head and shoulders. Perfect. If I wanted to get back in it, I would have added on right there. Or got back in right there. That's United. And then I was watching Dow. It's going to be one of them days where I'm missing all my trades. See, it's a pretty good sell-off. But when you go talking about the outlook, so we got the 2 minute on the SPX, and we just broke resistance for a couple of minutes. And it probably wasn't even that long. So we're squeezing. We got triple top on 5 minute. 56.38.45. I don't know if I'll get that same number again or not, but we'll see how close we can get it. It's right about there, really. Oh, a little too high. I mean, that's a pretty good spot. We'll probably be shy of it. I'm really not really that encouraged to jump in yet, but we could build this thing up. I like that spot right there better. That's a little bit lower, and that's on the 1 minute. Perfect. 56.38.38. Yeah, I missed a good trade here on UAL. 45 strike. They got down to 158. They're at 208. So that's $50. And to me, that's pretty good. You get 5 of them contracts. You got less than $1,000 in it. And it's just one slot, but it's next week. Today's Thursday. There we go. Boom. Somebody made a statement. Damn, Joe. That's quite interesting. The 562s or the 63s. Somebody made a statement. Jimmy called it. I said, if you can count to 3, you can trade with me. I get a knock on the door. Jim, we broke it, man. We did the 1, 2, 3, and I got up out of my chair and I did a backwards somersault, landed on my tits.
FBI, open up!
Open up. Now we're above the 63. You gotta be kidding me. That's the VWAP, Jimmy. Apologize to your friends. Well, we are above the 63, but okay. Now the 563s are much higher. We're at 136. See if we can get to a five-minute here. So that was a 1-2 triple top break. This thing can go higher now. Just looks so much cleaner on a 1 minute. I'm so used to using that 1 minute. Here's another one I'm going to shoot myself in the foot on. See how we held the 200 on here first thing in the morning, and then we had the breakout into a bull flag. This is a fallen wedge, or it could be a descending flag, but it's more turned into a fallen wedge by the time it got down there. I don't see it, Jim. Lower lows, lower lows, lower highs, fallen wedge, then into a bull flag. So this thing can pull back and hit the top of the bull flag, and then run up to 562.96. So we could get us a deal here at 120, 124 maybe. The 563 strike. Ten of them. See, right now it's up 5 cents. So if we get a knife, so we're watching the SPY right now. We're watching call 12th, July 12th. $5.63. Crowd's going wild in the sports arena. Come on, man. We're getting ready to squeeze again. Crowd's going wild, and we're patiently waiting for the knife. Just got to, Jim, why are you waiting for it to knife? Well, there's two reasons. Because I know how to count to 4. We had 1, 2, 3 breakout. And then we have the VWAP. See that there? So that thing comes back down, and that's another reason to be back down here at that old resistance level. I don't see any reason to take it off to the upside but that their hammer. The crowd's waiting. Uh-oh. It could, and it could fail that and hit the 200 and fake us all out. But to remain bullish, it's got to stay above the VWAP. What do you think about that, mannequin? Crowd's going wild for Tesla again. Oh God, look at Dow. Oh my. That wasn't in my forecast. Whew. Does anybody want another new resistance for Tesla? I'm going to give it to you. Now, we really got two options here. This one, right there. 274.76. Or 286.89. You tell me. Support. Let's get this right. 261.06. Okay. Ah, I did it. Goodbye. 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 $261.06, no lower. This is can Elon Musk propel Tesla stock back to the Magnificent Seven for glory in the second half of 2024? I don't know if he can, but us cult followers can. Whoa, Tesla. Nancy is telling me. She wears the pants around this house. So we got a 1, 2, 3 here on the SPX. We kind of went below it. What's it do with IWM? And IWM just made a new high. Right in front of our eyes. And look at the QQQ take a knife. Keep your eyes open on the QQQ. I noticed that. It was very interesting. We're definitely at support here. Jimmy said we could come back down and touch this lower channel. We broke support. He's now looking at his calls. The 563s are 102. Got a lot cheaper than I thought I could. Or 98. Very interesting. I could buy them now, or I can see if I can get a sale. Right now, every time I speak, they go up a couple cents. And then I buy it, and then it knifes. Like now, see? I finally gave up. Okay, I'll get it at 102. If I was to take the chance, I'd go for 90, 96, 97 for the 563s for tomorrow. It's 97, 95. Ooh. We might get them cheaper. Here, soup. There we go. So I think this is it. We'll find out right here. SPY calls 563s at 89 cents. Okay, we're waiting. Tight stop. How'd you trade with my undies? And I've had these on for 3 days. Jimmy's taking the big guess here. He could have got a little bit less, like 84. He can get it for 83. So if I get another 10 contracts, we really don't want to go much lower. Ugh. Well, that didn't turn out too good. Ooh. Test the knife too. Mara knife. Ooh, look at Mara. Everything kind of knifed. GM looking nice. I gotta figure out, get out of this trade. Interesting. If I had the balls, I'd get 65 cents right here. Right now. There it is. Okay, the crowd's going wild here. Take a drink. You can do it, Jim. You can do it. risk. You might have to put a stop on this one, take a loss. Because this could get brutal. Oh, right like that. Wow. It's the bottom of that channel. My lowest support. I mean, if I can load another. No. This would be the spot. You got quiet all of a sudden. Nvidia down $4. Oh, look at Nvidia. Nvidia took a spanking. We got a snake with a diamond shape pattern. Oh, this looks very tempting. Very, very tempting. It's got divergence and everything on our side. It's timed, it's not. This looks nice. Need to bounce on SPY. It's still in SPY, but it's looking much better. Not good, but much better. Hmm. Well, after that sell-off today, it makes you wonder. The SPX here, I'm looking at it and going, interesting. Right now we're on the cusp if it wants to break out or pull back. $56, $24, $53. And the SPY's $560, $82. Actually, it should be a little higher. Come on, baby. In the video, 132.99. Okay, Jim, take off your shoes. It's now 7:11. Go play a game of Pac-Man. UAL just broke the 200 SMA. Okay, we pull back.
The mega caps and the AI and the cloud stuff's kind of lagging behind. Does it like rotate, or do you think that we need something like material to shift? Because like if they're lagging while the AI stuff's booming, what happens if the AI trade slows down?
Yeah. So I think, AI is fairly extended here. I mean, we could have been saying that over the last, 6 months or even year, but it continues to have dominance until it doesn't. We do, in our discussions with financial advisors, hear about, some fatigue there and concerns about valuations and concentration risk. So I do think that there will be some natural rotation across the ecosystem that is related to AI. And while valuations may fall off on some of the AI names like, the champion NVIDIA, we still believe that the business case there remains strong. And actually the investor kind of base or the capitalization may broaden out to not just focus on, some of the top 2 or 3 names in the chip side and get into some of the other verticals that are very supportive of AI. So we see this as, an opportunity to kind of have an ancillary trade related to this, but do so at, better valuations and at an earlier stage than maybe AI is in terms of current valuations.
Got it. Hey, Christian, want to make sure we talk the weight loss fund, THNR, thinner, nice ticker, and making high basically as we speak. This has been about as reliable as AI. Is it as extended, or you think this is more early in the running?
Yeah, I think this is more early innings, Oliver. I mean, weight loss drug and treatment stocks with the thinner ETF, I think, have a huge runway. Certainly we know Eli Lilly and Novo have done really well, but there's a variety of competitors doing clinical trials right now that have different types of applications for these drugs, whether it's pill format, whether it's not injecting, but maybe taking a dose once a month. There's also different peptides that are being looked at in the GLP-1 area. So we think there's a lot of innovation here, potentially a lot of M&A potential. So we think it's a great kind of early theme to get to be a part of. Most investors don't have exposure to many of these names beyond the top 2, so very diversifying. And gosh, if you look at the numbers, this industry, this weight loss drug industry is supposed to 15x or more in the next 5 years, which is a massive amount of growth. And when you look around at our population, whether it's obesity, cardiovascular risks, even diabetes. GLP-1 seems to present some very compelling solutions there in a massive use case. So this should be the #1 selling drug category of all time, and we have the first indexed ETF to harness that. You don't have to pick the 1 or 2 stocks that are going to ultimately be the winner in this diverse space. Instead, you can buy the basket that's professionally selected and own the names that are not only out today with drugs, but are in the midst of clinical trials, as well as some of the groups that are doing third-party manufacturing or even making the injectable pen. So thinner, I think, is a great way to kind of play this space, and again, early in the game relative to AI.
All right, so far chart's looking good, Christian. Good stuff. Always fun getting your perspective with the different options of investment themes there. Have a good one, sir.
Hey, good to see you, Oliver.
Likewise, Christian McGinn, CEO of Amplify ETFs. All right, thinner, looking pretty solid. Chartmaster, back to the banks when we return. We'll take a technical look at Wells Fargo and Citi. So that'll mean we've hit Wells Fargo, Citi, JP Morgan, Morgan Stanley. What else can you ask for? What other network is going to give you 4 previews ahead of earnings? Russell making even higher highs. Small caps just going crazy.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Come on. Might make my lunch.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends?
All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
All right, let's look at the charts for a couple other banks. Citi and Wells Fargo also on our list here. Jenny Horn, Big Ducat, getting ready for earnings. So let's talk maybe Wells Fargo first, because I think that folks would be surprised, and many don't realize that over the last 3 years, the only other bank that's done as well as JP Morgan, return-wise, is Wells Fargo.
I know the outperformance of this name, I think this is really interesting. And I think overall, the banks set a good tone for the overall earnings season. I mean, I know they're not indicative of big tech, but as far as expectations goes, the finance sector is expected to be up as far as earnings, 8% from last year on about 5.5% higher revenues collectively for the group. So that's strong. And analysts, it seems like as far as earnings outlooks have only been improving lately, particularly for the second quarter, as we've seen only revisions, as far as I could see this morning, to the upside. So Wells, like you said, it's outperformed its peers. We've seen it trade, though, in this pretty narrow range since its last report, between around 57 to 61. It's struggled to hold above $60 a share, which I know is somewhat ironic because that's exactly where it's trading right now. But this level has been seen as key to watch as we go into earnings. Now, in the first quarter, they met expectations on strong earnings, lower credit losses, and some net loan charge-offs. They did report around $120 a share in earnings, which comparatively was lower on a year-over-year basis. But had they excluded this FDIC special assessment, their first quarter earnings would have blown past expectations at around $1.26 a share. So now, for the second quarter, we're expecting around $1.28, with analysts having raised their estimates only late. That's been revised about, a few cents to the upside over the last month. This would mark about 2.5% growth. And we also are expecting not a ton of movement, though, because I was looking at what the options market is pricing in. These are not your volatile names. However, I do think that the outperformance in Wells has been notable, especially after major company-specific mishaps.
It's a good point on the expected move. That was what Joe Tigay was referencing earlier, just looking for small kind of upside in his JP Morgan trade. But Wells Fargo does have quite a bit of chop on the chart. Not so much on the year, Rick, but the longer term does have a little bit more of a wild ride that you've had to keep up with. But so far in the last 52 weeks, pretty solid.
Yeah, a pretty good take there, right, I would say. If you were to show me this chart and not show me the name of it, I'd be kind of surprised. It was a big bank because we've seen such a dramatic rise off the yearly lows. We're up 56% from that point here. But indeed, chop more recently, kind of triangular price pattern we can see. Very prolonged, sideways, narrow range.
WFC.
Volume profile, point of control. This thick red line is the area of heaviest trading according to our volume profile.
You're the spy.
We did break out to the upside. We pushed into some new highs, but since then, triangular shape here. One trend line going
Do or die right now on the spy.
One trend line going down across the highs. And, just kind of struggling to find a strong directional bias right now here as we kind of move within this range here. In the very short term, we can see that we had this small gap up. The post-gap lows are our green line here, $58 about. That would be an obvious supportive area to the downside if we were to work through our moving averages here. Yellow 21-day, orange 63-day exponential moving averages, with the recent highs giving us the top of this range near 61.18. Similar triangular shape on the RSI, long-term downward slide with the highs in the RSI getting progressively lower here. So a little bit of bearish divergence here. If you tried to make a bearish play on it, probably wouldn't have worked out super well over this time period.
Banks tomorrow.
Kind of caution people, don't just make trading decisions based off of one indicator. You kind of got to look at the whole picture and the general price movement.
It's a pretty extensive divergence, though. And pretty reliable. Kind of amazing. All year, essentially, as it's been making highs, the momentum's been slowing down.
Good eye.
So that does kind of seem to, obviously err a little bit more on the bearish side, but maybe it's just a situation where you kind of bet that it's going to stay within this range. So, maybe I don't think you're going to get much by selling downside, given the implied move is so small, but maybe selling upside or something could be a little bit better of an approach if you think it's going to still kind of get funneled into that triangle.
Yeah, perhaps. I think we've got maybe a resistance zone here between the recent highs and the 52-week highs. So between 61.18 to 62.55, that could be an opportunity for what you're describing.
Yeah, if you think it's going to kind of continue to get squeezed and that some of this long-term bearish divergence is going to weigh on it, maybe selling a spread above 61 or something, because I just don't think you're going to get much selling it down below, given the light vol going into the report. Okay, Citi.
So Citi has been doing actually quite well as of late. We're up about 4% for the month, so it's one of the better of the banks, at least on a month-to-date basis. Last quarter, though, was not great. We saw 200 basis points contraction in their revenue. We saw earnings per share shrink 21%. Much of this diminishing top line, though, has been because of their non-interest activities, which slowed about 6% year over year, which I'd say, you look at the fixed income and wealth revenue across the board, we're just lower. But now, as we've seen this quarter sort of come to fruition, there's many that are saying as overall this downturn may be behind us. And that's obviously the hope. I was reading probably the most optimistic note on bank earnings, but some are arguing that while lower yields could have dented their mortgage returns due to their negative durations. However, credit spreads have ticked up pretty substantially over the last 3 months, suggesting that their net loan yields might have increased. And numerous other factors also signal some positive momentum, like yield curves might have shifted lower, which provides the argument that their asset base and some of their trading departments could have experienced gains. So again, this was a very optimistic take. I think you could argue that Citi has been somewhat disappointing on earnings, but its chart actually has been quite the opposite of disappointing.
Yeah, it seems like the market hasn't cared because, to your point, the numbers last time were pretty ugly. but a breakout. I mean, it looks definitely better than the other chart, right, Rick?
This is a beauty of a chart. I mean, this is you couldn't ask for much more in terms of bullish activity here. Steep rise up, moderated into a more gradual rise here, but still consistently making higher series of lows here. You can see our blue trend line is still in play, but we've accelerated even more to the upside. The trend has increased in terms of the magnitude of the gains. Our white trend line still in play here. We did drop off a little bit this morning. We touched on it. We're pretty much flat from the open right now here, but this trend line's still active. We weren't quite able to crack 67 bucks yesterday. 66.99 is the high to make at this point here, and indeed we did back off a little. RSI, we were in the overbought area. Now we've dropped out of that threshold of 70, so that is a bearish signal here, but we're still holding pretty strong here. The RSI trend line is also still in play here, so really it's up to the bulls now to kind of push this one a little bit higher and kind of break us above this ceiling that we've established here. If that were to happen, we can use our standard deviation channel study to project where we might find potential resistance if we do get some kind of runaway breakout price move in the coming days. For right now, one standard deviation above our blue linear regression line, which is actually quite close to where we hit our lows today here, comes in near 73.48. That would be a bit of a stretch. That's not close. But just exploring a possibility for where you might find resistance going forward. Support at the previous highs at our green line, 64.88, which lines up almost exactly with our linear regression line. So that's our idea of fair value.
All right, kind of looks like it's got room to run as long as they don't drop the ball on earnings, because the chart
Citigroup.
Better looking bank charts out there. Nice, good work. Thanks, Rick. Thanks, Jenny. Little market discussion when we come back, as Russell's still way out in front and the NASDAQ keeps slipping, so we've got a monster spread that we've haven't seen in a long time. I'll try and get some numbers for you. A 4 percentage point spread, more than that, between the Russell and NASDAQ in favor of the Russell. That's kind of madness.
Yeah, it is. American Airlines down big too.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
All right, we got a really interesting day underway here. Continuing strength in the small caps, escalating as the Russell is our leader. Thanking Hall back with us from New York, and Kevin Hanks here in Chicago. Kev, I do kind of wonder what the odds are that they might try and flip this back into the NASDAQ.
You got a falling wedge on the SPX.
In the past, when the Russell leads out front early, those are often the days that we fade it back down. Today, it's like in a different world, but that is the truth, you know.
It is the truth.
Yeah, but this those days that happened is a different scenario than you're talking about here, and here's why.
I generally agree.
I'll spell something out for you. And this is a topic that Alex Coffey and I were just debating out at the desk. If stocks rallied with a high inflation, bond selling off environment, and the NASDAQ rallied, aren't we in the exact opposite of that right now?
Yeah. Well, this is.
And so if that's the case, where stocks rally on this too, then stocks just rally in both cases?
Well, that's the way it's been. Yeah. I hear you.
That is no determining factor of future.
Sure. Momentum's momentum for a reason, though. But no, I mean, I hear you. Can we have it both ways? Have our cake and eat it too.
If that's the case, then why is the NASDAQ selling off? And by the way, if you look at the Magnificent Seven, these aren't small numbers we're talking about here. These percentages are not meek.
Yeah. I think, Diane,
Hey.
is that there isn't as much money on the sidelines as people have been saying. And so if it all comes from the same place, then it's got to come from tech, basically. Because that's been kind of a myth that I've been trying to bust through. Everybody's saying money on sidelines. That stats actually don't really add up.
But, okay, so I think this is kind of to extrapolate Kevin's point a little bit more, in terms of what we're seeing with the Russell and the gains in small caps. They've been looking for a reason to break out this year. That reason hasn't been on the table until today when you see this CPI print that we had that was cool, right? It gives a reason to run for the Russell, especially when you think about this higher for longer interest rate environment we've been in. That is a headwind for these small cap companies, right? They don't have the same balance sheet that these mega cap companies have, and so that makes it kind of more difficult for them. And now with the change in inflation that we're seeing in terms of the print from today, it increases the odds now for the September rate cut to be on the table, right? And that is a tailwind for small caps. And then I think another piece of the puzzle when you think about the Russell and the composition of that index versus say the S&P 500, a smaller portion of small cap of that composition is in the tech sector, right? And just as you mentioned, the tech sector has been where we've seen the rally, and it's kind of the if it ain't broke, don't fix it trend in terms of the gains that we've seen so far this year. But now there's a catalyst for small caps.
Yeah, it's very true. And right now it looks like we are running with that through old resistance. So the fact that there's been no rejection yet and we keep piling onto it on the day, I mean, it looks like it's a very conviction move. It's just, again, I think it's kind of a zero-sum game at this point. It seems like it's has to come from big tech to rotate in. You know, the money on the sidelines thing that I'm talking about, Kev, is there, we've seen fund manager surveys showing that the fund managers, the Bank of America fund manager survey, cash is real low. They are fully invested. Households are fully invested. Now, people argue there's all this money market cash out there, but that's earning now. And people don't want to take that out. They want their 4.5%.
That's not sitting there doing nothing.
Exactly.
The money market is an investment. So that's money still may not be able to buy a dip if it's invested in the money market. You're right. It's making money. T-bills are paying what they're paying, and that money is not sitting there idle. It's invested.
Yeah. All right, so, I mean, the dollar's still getting hammered, though. Bonds very firm, yields down. There is really no pushback. It's definitely a conviction move here. I mean, ultimately, a lot of it does stem from that September odds jumping up another 10 percentage points plus, Diane.
I just checked the Fed's.
Well, they all look like they're wanting to squeeze.
And now the odds are for a 0.25% rate cut for
QQQ, SPY, and the SPX.
Since last week. So, I think that is certainly what we're seeing in terms of the market action. And then I think what we're seeing in terms of the cap, because I know you talked about, kind of, we're seeing the Russell take off with the S&P 500 not participate yet, right? There's still, a lot of day left in the trading day, but we just had that record yesterday.
GME up 80 cents.
That might be the new floor compared to what we were talking about when we saw it punch through 5,500.
Yeah. So, all right, Kev, what do we watch here? How do we figure out if this can go through into the weekend? Because rotation like this is, this is totally different, right? It's totally different.
If it starts to pick up momentum, watch the VIX, right? If people start coming off the sidelines for protection, the VIX will show you. Bonds, if they extend, that'll show you. Look at the risk off assets.
Yeah.
And that'll tell you if people start to get a little jittery going into the weekend. And watch how, remember we have a PPI number.
Feels a little jittery right now.
The consensus is it's about firm to a little higher.
Okay.
So I think that's important as well.
Throws any cold water on the party. All right, thanks guys. Diane, Kevin.
Got it.
Muchas gracias. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides is up next. See you at 2 p.m.
Baba double topped.
Trading at Schwab.
Boeing boom.
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through.
A little washout for 7 minutes right there on the SPX. $50, $52, $56.20 strike. I might grab two of them here maybe. $3.80. 370 right about now. It's right now break time. $56.20s here. Or 360. Break it. We're waiting. 5620s. SPX, I'm watching it. We're at 320 now, the 5620s. Let's go, baby. Break the 9. They went to 360. The crowd's going wild here. Faz? Okay, we're trying to be soon. 370. Break it. We are out at 450. 460. I'm making business decisions. The crowd's going wild here at the sports arena today. Hey Jim, I heard you're back on StockTwits. I can't believe it. Man, there's some serious shit going down here today. Not bad. And I can go to the bank. They didn't take down my post. I'm going to give everybody a fair warning. La 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 la. Can't believe these things are still at this price. They didn't depreciate. Something right here. Yeah, they didn't depreciate. That's good. This thing can jump. I say I got a good price on this. Jim, outstanding call on the SPX. Now, what do you mean by lotto? Well, here in Missouri, that means it's a hick saying for today. Same expiration. I don't know how you do it, but you did it, Jim. So cash right now and just be happy. I'm about ready to go in there and make my lunch. Salads have been mediocre. I'm out of all my good ingredients. Oh, I do have a piece of salmon. Okay, never mind. Change of idea here. We're in the SPX Lotto here, July 11th at 56.20 at $3.20, and right now we're at 410. So this is where it's got to break out from here. We have a 1-2 freebie. We have a flag. So let's draw this up. All you virgins out there that are listening. It's all right. Admit it. Nothing wrong with it. We did have a small little breakout of the snake. We had a 1, 2, 3 breakout, pull back. Now we got a flag here at the end of the snake. Jim, you explain it so easily and understandably. So we got to put that there. Now we're just now breaking out of the flag, so this is important. I'm going to stay in this trade. Soon I'm going to have to do something, though, make a business decision because I don't want to lose on it. Now we're at 350, 370. If you're watching this trade, watch it closely. Crowds are going wild here at the sports arena. We really needed this pullback and a rotation into small caps. Yes, I guess we did. Fortunately. So I'm going to tell you people what not to do. I'm back on StockTwits Disney. This is what got me kicked out of StockTwits for almost a year. When does a tranny movie come out? Back to 86. This was on November 30th of 2023. It took about a millisecond for it to BAM! What not to do. Let that be good advice to everybody. If you know what I mean. I gotta play it real cool or I'm gonna get banned for. This was a permanent ban, but they put me back on. November 30th. So I think we understand what to say and what not to say. Right now I'm about ready to say something that'll get me banned on YouTube. And the proper way to say it would be SOB. Now I'm back at my entry and $10 less. I got to make a business decision. I should have sold it because I was up $500. Jobless claims, inflation to drive narrow pre-market gains. I think they're using word scramble against the Fed. had a bear attack. Yeah, it's definitely a bearish day. It didn't take long. Yeah, that tape's all over everywhere. About any numbers coming in there. That's a dollar spread right there. $55.93, 43 to $59.92.95. Fuck. UAL bounced up here off the 63 on the 1 minute for a little bit.
Because, you know, percentage-wise, that's a lot of money. And what does happen, and folks have to understand this, is that on the commodity stocks, when they're small, the percentages are bigger, okay? But don't be fooled by that, because if they go down, the percentages are bigger also, okay? So make sure you keep your stops in and all of this. But this is a good stock. They take a huge amount of copper in.
TGB.
Two different things happening. They have a track record, number one, and number two, these larger companies all want into copper. So it's like, okay, they're growing by 5% a year in the mining business. That's pretty big because most of them aren't growing like that. You know, so my take is that this wants to go higher, number one, just on price. And number two, though, some of these larger companies just might come in and say, okay, instead of building a whole mine, I'm going to try to take this guy out, because on a market cap basis, it's still a small market cap in the context of a Barrick, a Newmont, someone that's really large. They could eat this stock in about a second.
Yeah, I was just looking up Freeport-McMoRan also in copper, and also a winner, but up about 20%. Pales in comparison to the 80% of Taseko. Let's see what Ben has to say, please, about the charts.
Hey, Nicole, on this one, I'm going to have to default to Tom. The patterns, the charts, they're just really not jumping out at me. You know, when I see it, I like to lean in. Here, it's a bit confusing. Let me show you what I'm talking about. Depending on which time frame you're talking about, you're going to see a couple different scenarios playing out. First and foremost, a bearish scenario, hourly chart. Taking a look at the move lower we've seen when copper topped out, I think it was up around 520, the futures, and you can see a V-top is a very unusual pattern, but it just messes things up for a technical analysis standpoint. On this hourly candle chart, you can see three areas of consolidation that my eye was drawn to: 310, 286, and then again currently balancing around 250 right now. So sort of in a random phase, range bound, contained, not a lot of conviction, but values moving lower off that high that we saw again. That was back in, what was that? May, end of May. Let's step away from the hourly.
Come on, brother.
You're going to see a different depiction in terms of price activity. We were looking bottom left, top right. or top left, bottom right. Our last example here is bottom left, top right. Look at this. You can see a well-defined uptrend playing out here since October of last year. You got balance forming at 120, 140, high conviction move up into April, into May, and that's where we topped out again, that V-top type pattern. Very unusual to see that in the marketplace, but they do happen, and as I mentioned, they just kind of mess things up a bit. So I took a look at this with sort of that
SPX added on here.
Talking about 270, which again opens up some door for both sides here right now if you're going to be rotational and see a little bit more of a 270.
I want to add more, but I don't want to take too big of a
One
chance.
more time into a weekly candle chart, and here you can see kind of similar to that hourly depiction that we looked at. Top left, bottom right, bears in charge here. One thing that has me a little bit concerned in terms of Tom's call for revisiting of those recent highs that we just came off of. I think that's the level he's thinking that we could work our way back to. Is we just rejected that, and that coincided with a couple key levels that we'd seen 2017, 2021. If you do fail at this level here, build momentum to the downside, yeah, I mean, you're talking about back to that $1 level quick, fast, in a hurry.
Yeah, understood. Thank you for all of
Understood.
that. Great charts as usual. Final thought, Tom O'Brien?
As Ben said, this is a messy chart, no doubt about it, man. And you know, what I like is that we had gone from a buck to 315. We only did a 0.38 to retracement on the way back. And there's no doubt, you know, when copper went, I mean, that was a parabolic move. I think we're going to be back there, though. So I get it. I definitely get it. Even when I was doing it, you know, I knew, you know, we know each other well enough. I'm saying to myself, I know it's going to be a messy chart. But, you know, we'll see where it shakes out.
Flag that, yeah.
No doubt.
Ben's on it. He's going to flag that, right. That's why we're a team here.
Come on, sucker.
That's right. That's right.
Thank you.
Thank you
Always
very much.
great looking at all those metals, right? Gold, silver, copper stocks. Thank you. Tom O'Brien, CEO at TFN, and also Ben Lichtenstein there on the charts. Coming up, a spotlight on Costco, which recently hit a high. We're watching the stock.
Back to 195 here.
Have been on the rise, and that gave the company a boost. It also reported June revenues. Right now, it's down about 3.5%. Loop Capital maintains a buy. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Welcome back to Trading 360, live on the floor of the New York Stock Exchange. I'm Nicole Petalides. Time for a spotlight.
UAL
Jen Rogers-Niffen is with us.
came back and touched the 63 like it did right here.
So much for being with us. So
They called that a little touch.
Shares were trading higher. The company announced a membership fee increase. They have since turned into the red, now down 3.5%.
I don't want to take a loss here, but
membership fee increase.
we just had a new
First
low.
one they've had in 7 years. The last time they did this in 2017, the stock went down a little bit too. People always immediately go, oh my gosh, their renewal rates will go down. And they won't. They're at 93%, the highest anybody's ever had, I think. And they'll continue to be strong because is anybody going to be surprised that there's a fee increase? Everything anybody has bought in the last 3 years is more expensive
Breakout.
than the time before. They're going to look at this and go, okay, no surprise, and this is still the best deal in town. So I think it's a great idea, perfect time to raise it. It'll increase the rate of growth for their business. They'll be able to reinvest some back in the business and still take some of the bottom line. I'm a huge fan, as you know. I've been a huge fan of Costco forever. I always say they're the best or the second best retailer in the world. That hasn't changed.
And first best would be what, Walmart?
It's either always Walmart or Costco or Walmart. Right now, I think Walmart's the best retailer in the world, but Costco hasn't missed a step. They're still fabulous.
Yeah. So they announced the increase in the annual membership fees, $5. That's effective September 1st. You said this is the first time that you're doing this since 2017. You're not surprised to see all the analysts raising their price targets on this name as well. We're seeing a slew of buy ratings. Bank of America has a buy and put a 962 target.
Breakout.
Buy and a 950 target, just to name a few. And Loop Capital.
I need 255.
What is Costco doing right?
Costco delivers better value, and they gain market share with it consistently. Their earnings growth is always good. They're always better value than the S&P 500 because they're the best at what they do. And what they do is they edit better than any other retailer. When you go in their stores, they have edited the selection to be what you want to buy. And then they give it to you for free, and they charge you a membership fee. You can't beat their model. It's just, and they execute it so well. The other thing they're doing, online was up 19% year over year. So they were late to the game on online selling, but now they have a pretty darn good online business, and it's growing. I mean, Amazon, Walmart, and Costco get 70 cents out of every new dollar of retail sales now. No wonder as a group, they're 25% of the retail business. They're just better than everybody else.
Right, it's amazing. So they're not being greedy. You talked about how they give things for free and the company provides value. When we think of other retailers, what would be the opposite? I mean, is there a retailer that's getting it so wrong?
Wow, are there retailers that are getting it so wrong? Well, I mean, look across the business. I come from a failing industry, right? The Saks and Neiman's are about to merge. They're both struggling. Do I think they should merge? Yes. Do I think they'll still struggle? Yes. Macy's, Kohl's, they're struggling, right? And they're in a very tough industry, and nobody has solved that Rosetta Stone for that consumer yet. But when you look at somebody like Costco, they're doing a great job also in discretionary retail, not just the stuff you have to have. So they're just executing extraordinarily well. Walmart, same story. They're doing a great job in discretionary retail, and they're doing a great job in the stuff you have to have. So it's just execution, reinvestment, loving your customer. They're doing all of that at Costco. They have customers that really believe that when they go there, they're going to get the best deal and the very best product. And Walmart's falling into that category now too. Very, very strong with the consumer. And before, the wealthier customers went to Costco. They didn't go to Walmart. We're still seeing some of that customer at both of those companies now. We haven't seen that before. So it's really hard to look at the ones in the failing industries and saying, well, what would they do to make it all better? Could they really invest enough to do that? Well, that's really hard because, it's hard to be a really well-capitalized big winner in this business. But these guys, they can invest all they need to invest in all the technology and all the AI and all the customer service that you could ever want. And if you're Walmart or Costco, you can do that all day long.
Yeah, I was just looking at the fee, and I was going to ask you if you thought the $5 was appropriate. So it's raising $5 to $65. The executive membership is going up $10 to $130 a year. But those members will be able to earn a maximum of $1,250 in rewards versus the $1,000 that they get. So they're getting a nice bang for their buck there. And it's 52 million estimated memberships that are impacted by this. So do you think the price point was right?
Well, I'm one of those executive members, and I don't think that you're going to be surprised at seeing your price go up by 8% on anything that hasn't gone up in the last 7 years. Because the price on everything else has gone up 20% in the last 3 years. So I don't think anybody's going to be surprised at this increase or resistant to the
Boeing
increase.
dropping a little
I
bit.
don't know about you, but I have never not made my $1,000 back. I'm 100% sure I'll make my $1,250 on this one. So I make my membership back every year. Most people that are in the executive class do, and they're still going to make it back with the $10. So I don't
Yeah,
see this being any reaction at all.
Right, right. A little off the cuff here on Amazon. Aren't we approaching the Prime Day? That's coming up, right?
Oh gosh.
Yeah, yes, we're coming up very soon.
Okay,
You know,
so what do
we
you
just-
think about Amazon? Are you an Amazon fan? Do you think it's a winning platform the way you think the model of Costco is a good one?
I think Amazon is one of the worst retailers in the world.
Woo.
They are, however, the best one-off individual distribution system in the world for any one item. And they have
That's
the
a low
safest
blow.
website that's ever been created. And they are winning the game because we want convenience and we want to be able to shop 24 hours a day and we want it to show up on our doorstep. So am I a fan? Yes. Do I think they're any good?
Oh man, Amazon's taking
No,
a
they haven't
beating
built stores
today.
that are successful. I don't think they're very good at Whole Foods, but they are the best distribution. If you want to buy one pencil and have it show up at your house, they can do it and amazingly make money.
Yeah, yeah, and all the other retailers then start to do their own deals ahead of the Amazon Prime Day.
Interesting.
So we'll have a busy week with that. Jen Rogers-Niven, Jay Rogers-Niven, WWE. Thank you always. Wonderful to see you, Jen. Thank you.
You too.
Coming up next, our disruptor. We're taking a look at Spotify. In fact, I got an upgrade over at Jeffries. We'll have some details there for you and an example trade as well. We'll be right back.
I'm going in the kitchen, going to start my salmon. Yeah, we still got another couple hours to play here. UAL popping. Okay, Jimmy.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere. on any
It's kind of
device
rude.
for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Look at developing stories this morning. I'd like to bring in Diane King Hall, senior market correspondent here on Schwab Network. We're taking a look at Conagra, which, right, we heard from Helen of Troy, we've heard from Pepsi and Conagra. It looks like the consumers pinching the purse a bit.
Right? I was surprised, even for a company like this. I mean, we're starting to hear the trend of consumers being more choosy with their dollars and seeing it across a wide range of companies. And you would think with consumers cooking.
Are they acting a little negative before end earnings?
But they missed in terms of their results overall. Adjusted EPS came in better than expected at 61 cents a share, but they posted a loss on a net basis. The loss was $567.3 million. Revenue came up short. Revenue was $2.91 billion. The expectation was $2.94 billion. The company saw sales decline overall. They fell more than 2%. They just had trouble in terms of both pricing and the mix. They talked about the difficulty with the inflation-driven price and mix and that being difficult for the company. So they forecasted their guidance for fiscal year 2025 is less than expected. The range they're projecting now between 260
Oh,
and
boy.
265 a share. The consensus was looking for 270 a share. They saw weakness in both grocery and snacks. That fell more than 2%. Even in their refrigerated and frozen verticals, that fell more than 3.5%. So you're just seeing weakness across the board, and they're just having difficulty.
I'm surprised I'm calm too. I'm not really calm.
They are in terms of how the consumer is making choices with what goods they're going to buy and the trade downs and trade-offs that consumers are making.
Refrigerated and frozen fell more.
I just got to be smart about this. I can really make some good money if I do it right here.
Right? Because these theoretically are cheaper than going out.
Yeah,
right.
You would certainly think so.
But I guess they're out on it for the moment. So you see it down across the board.
Yeah.
They make Slim Jims too. Another
do.
goodie. That's a
Yes.
goodie. All right. Thank you so much, Diane Hall. Good luck there at Conagra, down 2.6.
Well, I have a lot of contracts.
The disruptor, George Silas, is with us, senior markets correspondent here. Today, taking a look at Spotify. A bullish note from Jefferies. Let's hear some thoughts there.
Yeah, Nicole, I mean, I think if you look at Spotify, there's been a lot going on with the business. I mean, they've been expanding quite aggressively internationally, but they've also increased prices pretty significantly over the past year or so in North America. But there were some concerns about the potential for attrition of customers moving to competitors like Apple as well as Amazon. But if you actually look at what's happening, there seems to be a very loyal base that has actually downloaded and has content collection libraries on Spotify that they're willing to not give up, despite the fact that there have been price increases. And this is essentially what Jefferies is looking at with their call today. They actually increased their price target pretty significantly from hold to buy to $385 from $242. And they actually see this price
This is
hike
nice,
that the company went through
5,600
as a good
strike.
strategy overall, plus the fact that the company's margins were already starting to expand close to break even on a GAAP basis coming into the last 2 quarters. And even if you look at a forward basis, the company's expected to earn about $5 a share for 2024 this year and about $7.50 a share next year. So they're expecting EBITDA growth to increase by about 50% compared to for 2025 versus 2024. And so therefore, it looks like the user base is going to stay with Spotify, as well as the fact that the price increases are really trickling down to the bottom line. So it's really a story for profit expansion for Spotify. Operating expenses seem to be very much in line. And now it really comes down to the accretion of those additional dollars spent on a per user basis to the shareholders.
Right, understood. Do you have an example trade for us on Spotify today, George?
Yeah. So if you look at the stock, Nicole, since April, it's been in a trading range, and that was the last earnings result published. They are coming out with earnings coming out on the 24th of this month, so you have to keep that in mind. But with that said, the stock is trading below its 50-day moving average, and I think it could settle down to the $270 area,
Just scalped
which puts it at a support level
the
position
SPX.
going back to April. So with that said, the trading range is there. It's trading, like I said, close to that level. So we're going to essentially put on a neutral strategy or an iron condor or a credit combo. So we're going to select the August monthly expiration with about 32 days, and we're going to sell the 350, 360 call spread. Now that's above the current price, and then below the current price, we're going to look at selling below that support area of 270 by structuring the 260, 250 put spread. So these are again sold for a credit. Now altogether, you can earn about $3 a share, or $300 a contract. So ideally speaking, we just need the stock to stay range bound beneath the 353 high, and then of course a 257 low. That's your break even. If it does hold those levels between now and expiration, that premium will erode to zero, and that's the whole objective of the trade. But you do have risk, which is again the spread difference, which is $7. And that loss, max loss, will only occur if the stock hits 360 high or 250 low between now and expiration.
All right, thank you for that. Good to see you, George Silas with Spotify. Listen to this, George. Everyone take a look. Tesla is tanking, and this is on some breaking news. So the high of the day on
Tesla tanking.
was 271, the low 246. You can see the big drop off, and this is according to a report that Tesla plans to delay the robo-taxi unveiling. It was supposed to be in August, and everybody has been hopped up for that. In fact, over 1 month, Tesla's stock has jumped 45%. This month of July, and it's only July 11th, it's up 28%. But today on this breaking news, this is really crushing the stock, because August was the day that everybody had put in their calendars. 8/8, everybody was looking forward, according to this report. And this is all, alleged. It's not really confirmed, but that they want more prototypes before the robo-taxi event, according to certain sources. So if this unveiling is delayed,
Tesla
you know
delay.
what that means? It could mean some really good news for the likes of Uber and Lyft. In fact, we are seeing the complete opposite charts. So just like I told you, Tesla's down 4%. Now we have Uber up 4%. And Lyft is also gaining 5.5%. So you are certainly seeing the reaction here on the plans of Tesla to delay the robo-taxi unveiling to October. It's causing Tesla to be down about 4% and bringing up Uber and Lyft along with it. So some big moves here as we go to break, folks. But there you have it, the breaking news on Tesla. And you know that everybody wanted Tesla to hear about this. 8/8 was the big day, the unveiling. And this stock, as I noted, 1 month up 45% on Tesla. But today,
Come on.
on this news. We'll be right back.
Yeah. Nicole. I'm about ready to break up with you.
Be part of the latest commodities action on Futures with Ben Lichtenstein.
So I'm still into my first SPXs, and I scalped
Anywhere on any device for
the 5600s.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens. And
I mean, you got a great job, guy. How come your grades were a lot worse than mine? You hardly ever showed up to school, and then all of a sudden you applied for the same job. You got the job and I didn't get it. Now I'm trying to go after the chartist artist's job on Schwab. He's a better talker than I am. So I gotta figure that one out. Maybe some kind of food poisoning or something. Yeah, James Howard there. This is Schwab. We're wanting to see if he would like to come on the show today and be our master chartist artist for a week. And for some reason, our chartist artist is at home sick with a tummy ache. Jimmy's back. I should have double the amount of followers. Tesla's delaying the autopilot deal thingamajigger, robo taxi.
Yeah, and look, even though we talk about the record that we just saw the July 4th weekend, we saw a record number of travelers. I believe it was 3 million. Robbie, what do you think? Because they don't have the same pricing power. We have seen prices for flights come down a bit. What did you think of the report, and what does it tell us about the group?
Well, I agree that Delta is a company that's in really
Jimmy,
good shape.
might have
As
sour
far as the
grapes on this
sector,
trade.
Yes, there's pricing problems. There's a bit of
I'm not done with it
overcapacity out
yet.
there.
I could get a miracle.
Capacity this year is up about 6% domestically, July.
Prepare to scalp it
July.
again.
So that's just dragging down the overall sector. But
5,600.
because it's known as the premium airline, it's spent really a decade or more cultivating that. They run a good operation, probably maybe the best or one of the best. You know, their premium cabins are probably the best in the U.S. sector. They're able to outperform, and you see that. Their domestic revenue was flat. I should say their coach revenue was flat, their main cabin, but their revenue on premium products was up 10% for the quarter. So I think there's a little bit of two stories, the whole sector versus Delta.
Is there going to be a catalyst? You know, we have the Olympics. You know, I don't know. The summer travel season's already on. To your
So
point,
Jimmy's got more of the SPX. We just got to wait.
prices for them, but that they are already correcting for that oversupply. So they are making the moves needed. That being said, when you see a stock down 5%, what do you think, Tom? You know, what's going to be the catalyst to turn this group around a little bit? Because you said it was a pretty good quarter.
Yeah, it was. On the financials, you're absolutely right. It was a good quarter, and Delta, I think, is going to continue to reap the benefits of positioning itself as the preeminent airline, the luxury top-tier airline, especially when we're talking about business travel, which it appears is continuing to be strong. But I think really what you're seeing in Delta, you're seeing sort of throughout the transports more broadly, right? Transports are leading edge of the economy. And I think that both from a business standpoint and now from a consumer standpoint, you're seeing these transports really begin to come off the boil. Now, keep in mind, most of them have done well over the past year, but at the same time, we're slowing in the economy. We're losing some momentum. I think if we can get some good economic data, that'll help this space pop, including retail sales data.
Right, understood. You know, when we take a look here, Robbie, what do you think about the other names in the group? I mean, Delta is always regarded as one of the better bets in the group. We've seen some consolidation. Are any of the other names, you know, well positioned, well funded, or do you see more consolidation that should happen?
Well, we're still waiting to see.
Tesla double bottoming.
Between with Alaska seeking approval to get Hawaiian Airlines. You know, it's an interesting sector. Obviously, we have Southwest. There's a play by Elliott Management, and they've acquired about 11% position, and they've put out sort of a treatise, so to speak, on what they'd like to see happen at Southwest. So it's really, I think, a story of a two-part story. You have the discount airlines that have continued to struggle, and that even includes Southwest, which isn't truly a discount airline. And you have Delta and also United that are in better position, have more international and European exposure and a better premium product.
Yeah. And look, we're out of time, but Spirit down 85% 1 year. We're also seeing more downgrades in the last 24 hours, so one to watch. Thank you both, Thomas A. and Robbie Silk. Thank you. I'm Nicole Petalides, live on the floor of the New York Stock Exchange here on Trading 360. I'll catch you at 2 o'clock. Join me then. In the meantime, download our free Schwab Network app. Best Market is next.
Be part of the latest commodities action on futures with Ben Lichten.
Get lunch ready.
8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Oh.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rand.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Discussions and option strategies. We'll take a look at some earnings in the big banks. JP Morgan, which is near all-time highs, into their report tomorrow morning. And Citigroup, which is up about 27-28% so far this year into their quarterly report. And Likefolio is going to break down sentiment data on holdings, which has jumped nearly 40% so far this year. And it's outperforming its competitors such as Nike. Now let's take a look at the major indices, which are mixed at this point, mostly in the red, though. The S&P 500, the benchmark, down nearly 0.9%. The Dow slightly in the green, up 64 points. NASDAQ 100 leading to the downside, down 2%. And the Russell 2000, little rotation trade going on today. Small caps up nearly 3%, but coming off of those session highs. To help me break down this market action, let's bring in my co-host. That's Kevin Hinks. Kevin, a little rotation trade today on that CPI data, and I know you've got.
Who saw this coming?
Well, I mean, I've been talking on the show for the last few sessions that overbought conditions. We're not going to stay here for those. But rotation trade, it's not like everybody's, running towards the exit. At least the Russell's doing well after that CPI data.
So think about this: a strong U.S. economy with inflation that needed interest rates to go to 5.25% in the Fed funds rate, right? If that's not the case anymore, and inflation's coming down, what happened to stocks during that period? They rallied. So if the opposite is the case, what could happen if yields come down and the dollar comes down?
SPY new low.
The U.S. economy isn't as strong. what can happen? Well, is it a chance that the opposite could happen? Yes. And now, interest rate sensitive stocks like the Russell will benefit from these higher debt, less profitable.
Yeah.
They're going to do better in that environment. But the NASDAQ, I don't know if that's going to do better with a slowing U.S. economy. The S&P, I don't know if certain segments of that are going to do better with a slowing U.S. economy. So if one is true, then the opposite must be true going the other way, at least in theory, and that's what I think you see playing out.
Yeah, yields taking a hit, dollar taking a hit. That's helping small caps right now, as we mentioned, up nearly 3%. But Fed expectations of a rate cut in September now up to 94% as we speak, according to CB.
That's a heck of a sell-off on Tesla.
And then J.P. Morgan came out and stated that, hey, we're raising our estimate for the first cut from November to September. Well, join the party.
Thanks, Captain Obvious.
But let's bring in our next guest. It's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, welcome back. We talked on Tuesday when you're on the show about overbought conditions. Now we're starting to see some weakness here in the S&P 500. NASDAQ breaking streaks. The S&P 500 had been on a 7-session win streak here, but seen a little bit of weakness, and everybody thought, hey, Nate, here's the question. Was the weaker than expected CPI data already baked into shares as far as the major indices go?
Well, when you look at valuation and just how stretched we got on some of the technical indicators, like you mentioned, Tom, I would say that it largely is. The rotation, though, that's going on, I think it has to do with the setup, and that being the crowded trade that was technology and AI and all the chips and all those related type plays. So it's the setup of that RSI that was around 80 heading into the report and getting, when you get that crowded, then you get you were asking on Tuesday, what is going to be the catalyst, to get that kind of correction? And you can look for reversal patterns and everything else. I think that catalyst was the rotation trade, and that gets into the psychology like, we need to go to where the underperforming areas of the market in order to get some alpha, because we're so stretched on all of this tech trade that's going on. But the interesting thing about this rotation, we'll see how long that it lasts. I think Kevin's right that the concern for the markets would be, if we're seeing some slowing, if we're seeing some disinflationary trends, if we're seeing some softening in the labor market, to what extent does it soften? And if it does too much, then, what does that mean in terms of valuation? Because it feels like if you go way back when the Fed is cutting rates, it's normally because we have, recessionary type flags, and the market usually isn't trading at all-time highs. And this go around, because we've kind of been conditioned to be so pay so much attention to the Fed and their interest rate policy, we pulled forward a lot of this narrative, and we've moved markets to all-time highs. We've moved the S&P to a forward PE of 23. And so at this point, the money's going to look for some type of relative value. That's what it's doing today. Regarding technology, probably a visit down to the 20 simple moving average, 20-day simple moving average in the NASDAQ 100, NASDAQ composite. That would be your standard one step down in an uptrend, 2 steps up, 1 step down. You're 1 step down, likely to the 20 SMA. We'll see how long this rotation lasts.
Yeah, and we'll see if Russell holds up here, because every time Russell's rallied over the last month, they crack it down, and we'll see if it holds, because if it doesn't hold, maybe that just puts more pressure on the overall market. Kev, but we talked about the CPI, and some of the data points within it, I think, are really important for our viewers, because some of the components that were down, that dragged that headline down to minus 0.1%, that's the lowest level since May of 2020. Maybe that reverses next month.
Well, here's the thing, and this is what I talked to Ben Lichtenstein this morning, talked to Oliver Rennick about this morning, and it kind of a table-pounding event, which is this week's CPI data we got was overwhelmingly energy, okay? Now, put up a 20-day chart of crude oil, and it's up about 10% in the last 20 days. So when was this measured? I look at food, up 0.2. Food away from home, up 0.4. Shelter up 0.2. Rent and owner's equivalent rent up 0.3. Apparel up 0.1. So there were some positives, though, overwhelmed, though, by energy. And airline fares were down 5%. Down 3.6 last month, down 5% this month. Used cars and trucks down 1.5. New vehicles down 0.2. All of those are good. How about this? Motor vehicle insurance. That ticked down last month, back up 9/10.
You know that's not in the PCE though, and everybody's talking about like, you know, that's a preferred, Fed's preferred gauge of inflation. You know, stuff like that you need on a daily basis, like auto insurance.
Yeah, like you mean like food, shelter, apparel, and insurance? You mean those? Yes, all higher.
Yeah, Nate, just give me your take here on the CPI data because it's going in the right direction, right? We'll see if it stalls out or maybe ticks up a little bit higher next month. But this is what the Fed wants to see. But it just feels like the market had already priced this stuff in.
Yeah, it certainly does kind of feel that way. I mean, we've been talking, it seems like all year, Tom. I mean, you guys know we've been just pounding on this Fed and inflation story that you know, it's the most telegraphed kind of disinflationary report that we've been, you know, anticipating for some time. But the cracks in the consumer, to Kevin's point about, you know, a lot of these costs here, they're popping up more and more. If you look at commentary from PepsiCo, if you look at what Delta Airlines had to say, Helen of Troy earlier this week, Pool, McDonald's, Starbucks, etc. So, you know, even within the services, which we saw the ISM move into contractionary territory last week, I believe that was, maybe suggesting or it's speaking to that softening of the economic data. So how much do we get in terms of softening going forward? Let's assume inflation is on its path. We look at the dot plot and basically at the end of 2025, what they have 4.25%, which tells you have 100 basis points between the now and next year. Yes, that can change, but unless that economic data starts to come in, you know, significantly weak, the Fed probably isn't going to be adjusting that 4.25% for next year too dramatically unless it kind of warrants it in terms of, you know, a slowdown. And if we get more of an economic contraction than the market wants, what does that mean for stocks? And so I think that's going to be the question here over the next couple of months as we get some more of these data points that Kevin mentioned, the SOM rule and the 4.2%. Is the market going to be okay if we go to 4.2% and we get this recessionary flag that's been accurate 9 out of 9 times since 1970?
Yeah, and we talked about that, Kevin, over the last few weeks. And I was, you know, pounding the table. If that unemployment rate gets up above 4.2 to maybe 4.3, 4.4, that's going to cause the Fed to act more than anybody else expecting them to do what maybe the market wanted them to. But Nate mentioned earnings. Delta's down about 5%.
Off its lows, though.
Off its lows.
Because they overcooked this, I thought, early in the morning, Tom, and here's why. Ed Bastian, we had our second best quarter ever.
Yeah.
Ever. You know what the number one was?
The comparable.
A year ago.
The comparable.
Which comped to this one.
Right.
Which skewed their numbers. So Delta Airline is much more healthy and catering, and we know because we report on this a lot, it's the gold standard for airline customer service. So and yet their PE now 5.5. It went down from yesterday at 6. So the stock got cheaper, even though. And what's the reason? Capacity, Tom. That capacity word in airlines is like the third rail. You can't touch it, you can't add to it, and they all did.
Yeah.
So they're all doing better. But I thought Ed Bastian, we got to have him on because he's really good at laying out the landscape for airlines. How discount airlines are flooding the market with capacity right now because of summer travel, and that's going to wind down at the end of the summer.
Yeah.
So capacity levels should get better. It was a fascinating interview. He's good.
And it bounced off its 200-day moving average. It's now an area of support because it's rallied. I mean, the stock hit 52 or 42.5. Now bouncing on that. But Nate, you know, you mentioned Pepsi. It's now positive. It's not surprising that stock was down into those earnings. But I kind of wanted to focus on Tesla before we have to take a break because they just came out, according to Bloomberg, announced that they're delaying their robotaxi event until October now. They want some more testing done on some of their models and stuff like that. But I mean, this thing turned around. But Nate, it was on a path of 11 straight days of gains for this stock. That's quite a parabolic move, right?
Oh, absolutely. Yeah, 25%-ish, in a couple of weeks. Some of that is technical in nature, and you have a lot of short covering after it broke 200. Some of it had to do with Musk's pay package. I think the narrative is, they did beat on deliveries. I'd be a little bit concerned about this earnings report coming up in margins. If they beat on deliveries, they likely cut costs quite a bit in order to get those delivery numbers, which tells you there's probably a read-through about margins and what they're going to report there. But it feels like investors are coming back into the water,
come on,
into
SBX.
Tesla water, so to speak, and they're looking at Tesla Energy, like Adam Jonas mentioned in his price target increase.
I'm going to come out a winner on this.
Looking at the AI story and the robo-taxis, that's still there. I wasn't aware. That's breaking
Especially
news
if we
to me.
break this to 63.
Their robo-taxi events, so that's probably going to elicit some type of.
I could have sold it right there.
Like we're seeing right here, because
At
that was kind of
150.
the catalyst to be in the stock heading into that August 8th event. But it's one of these stocks that has so many potential growth avenues, and we're not there yet. But it feels like Kathy Woods continues to believe in the name and believes that full self-driving, believes robo-taxis, etc., and these types of growth avenues are going to shift the focus away from the EV softness in the EV market that we're seeing over to some of these more robust potential segments of growth that they have within Tesla.
Yeah, and it was a three-pronged attack, I think, for the rally was, hey, they didn't miss that badly on those delivery estimates.
And maybe that's bottomed.
Right, and then, you got the earnings event on the 23rd. That might be a catalyst to the upside based on those delivery numbers. But I like your thoughts there on as far as margins go, because I know they discounted in China pretty heavily there, and the robo-taxi event. So the three-pronged attack, we'll continue to watch that one over the next couple weeks. But guys, we've got to take a quick break here. When we come back, we're going to start talking about the financials into earnings. We're going to lead off with JP Morgan Chase. That stock's had a pretty good run so far this year, just below all-time highs going into that report. Stick around.
Back down to support again.
You think they buy this dip?
Do-do. Do-do. Do.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rand.
Oliver!
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're kicking off earnings season. We're going to lead off with JP Morgan Chase. Stock's up about 22% so far this year, just below all-time highs that it hit earlier this week. Let's bring in Diane King Hall, Senior Markets Correspondent here. Help us break this down pre-earnings, Diane, because this is the Fortress balance sheet bank for JP Morgan Chase. And it seems like, hey, if you want to be in the banking sector and you got scale, JP Morgan's a place to be, right?
It's true, especially when you look at how the stock has done year to date or year over year, especially when you compare it to the S&P 500. Yes, it may not be the lofty heights that we've seen in terms of the mega cap tech stocks, but certainly nothing to sneeze at in terms of the growth you just mentioned and what we've seen year to date, up more than 20%. Again, beating the S&P 500. So here's where the expectations start. And we know we get a flurry of results from the big banks tomorrow. JP Morgan Chase, typically the leader. The expectation is that they're going to report adjusted EPS of $4.19 a share. That's the expectation. Revenue is expected to be top $45.6 billion. Now, to put that in perspective, last quarter the company earned adjusted EPS was $4.63 a share. A year ago, that number was $4.37 in terms of EPS. When we look at revenue, last quarter revenue was just shy of $42 billion. Last year, that number was $41.3 billion, just over that. So in terms of revenue, if we nail that number, it will be better than the same time a year ago in terms of what we're expecting from JP Morgan Chase. In terms of that quarter-over-quarter decline that's being baked in, I don't know what that was down here, that's expected to represent just higher provisions for credit losses and just overall operating expenses.
You know, Diane, we know they're going to do well, right? It's a pretty good, safe opinion that they're going to do well. But here's the problem. It's the comps from a year ago, right? A year ago, earnings per share up 54%. A year ago, revenues up 34%. This year, they have to compare to those and looking 4 to 5% on earnings per share and revenue, somewhere around there, is going to look paltry when it gets to, no matter how healthy this bank is, they made it through the stress test. They were able to raise their dividend and buy back more stock. They're going to do incredibly well. They already kind of guided on June 12th that investment revenue is going to be, plus 25 to 30%. They're going to do well, but are the comps going to hold the stock back, Diane?
It's true. That is a good question. But one of the things that JP Morgan Chase has potentially as a tailwind for the company is the expectation for the direction of interest rates, right? If there are cuts as they're expected to be later this year, because we know that the CME Fed Watch tool now projecting that we'll see a September cut, the odds now more than 80% for that. That will be a tailwind for JP Morgan Chase. It reduces the cost of borrowing, makes it can help beef up its lending. So that would be something that investors will be watching out for, what it looks like now, but also the potential and projection for the future. And yes, JP Morgan Chase does have this tendency to beat, and they tend to beat on a double-digit percentage basis. So we'll be watching out for that as well.
Yeah, watch those net interest margin numbers also, because those have been pretty robust. If we see any cracks there, that could provide maybe some volatility. All right, great stuff. Thanks to Diane King Hall, Senior Markets Correspondent here, breaking down JPM ahead of earnings. But now let's bring back in Nate. Nate, I mentioned that, the bar's high for these banks. They don't trade, with high volatility going into earnings like a lot of names. We talk about that every quarter. But I think this is going to be key, for maybe a lot of the financials and maybe the overall economy, the outlook that Jamie Dimon gives for the economy, because we've already seen it from some of the consumer staples. They're starting to pull back. People aren't spending like they used to. The services are still doing well, but they might give us an indication here, Nate, going into earnings, that, hey, maybe the economy's not as good as the market thinks it is.
Right, and Diamond has
maybe you're right.
Cautious for a while over the past year or so. I think with the financials,
I said it. No one believed me. Way overbought. But
variables, from that have come from the pandemic, from inflation, etc. If you're in financials, I think that would be a concern that if we go into a recession or if we contract more and they are cyclical, it's likely going to hit financials in the coming quarters or the coming months. But having said that, you've got a stock here that's basically trading at a PE of around 14. Now you might say, hey, that's great compared to a 23 of S&P 500, but guys, typically 10 to 15 financials, they generally trade around here. You got to go off the price to book. JP Morgan is about a 2.0 price to book. Citigroup, for comparison, is 0.7. Why is JP Morgan up there? It's the quality of management, the quality of earnings. I think for this quarter, when they report tomorrow morning, like you mentioned, Tom, it's going to be that net interest income. And I say that because last quarter, they really punished the stock when they just barely missed on net interest income. And then they left their full year 24 net interest income at around $90 billion. They didn't upwardly revise that. And I think after reading the reports, that seems what the investors really clued in on, and then punished the stock, sitting it down, 3 or 4% last earnings report. So yeah, it's probably going to get scrutinized again here.
Yeah, definitely. Option market pricing in about a plus or minus $5.80 move in the shares, Nate. And, we always talk about this. Historically, we don't see big major moves in the banks, but we have seen them over the last couple of years on earnings. How do you want to look at this one from an example trade perspective?
Yeah, it's an interesting setup. I mean, you're basically at all-time highs heading into the results. Is everything priced in? And then to your point, Tom, yeah, the financials, even if they put up really good numbers, if you look over the past decade or so, generally the post-earnings performance hasn't been that great. But you could say, well, perhaps we're getting some steepening of the yield curve. We got the 2-year down 14 basis points, 10-year down 10 basis points today. That would be good for financials. So, I could probably argue either side of the case here if you wanted me to put on a bear suit or a bull suit. But if you're looking at the implied move, about $5-ish or so, and you're hoping that it might make that implied move, but you're not sure whether it's going to go up or down, you can put it on a double calendar.
I'm going to say down.
So I selected the 212.50 call strike and the 202.50 put strike, roughly $5 up or down from the current price right now. Selling that 202.5 put, selling that 212.50 call for this week, and then going out to next week for protection, the long double calendar here, buying the same strike at that call. You get the IB differential that you're going to benefit from. It was about $1.40 or so last I saw for, or $1.60 or so for the net debit here. And bottom line is you would like to see it obey that implied move that the options market is pricing in.
All right, double calendar position on this one going out to July 19th. So 8 days to expiration by the 212.5 strike call and the 202.5 strike put. Sell those same options in the July 12th options that expire in just 1 day here. $1.45 debit is what we've got up here on the risk profile. It takes your break evens, Kev, about 199 on the downside, maybe about 218 on the upside where you can remain profitable. So you have a range, but to Nathan's point, you're not picking a direction. You just are banking on the 1 standard deviation move, or your expectation is of a 1 standard deviation move either way.
Yeah, 66 implied vol in the front expiration, 32 in the July 19th expiration. So this is just a play with, void of direction. It can go either one. You're looking for it to move towards those strikes. The quicker or the closer it gets to those strikes, the better for your P&L, because tomorrow is expiration day. So, you didn't spend a ton of cash on this. $1.45 for 2 spreads is relatively low, but you need that movement, right? You're collecting theta, but you outperform, as you can see, at those short strikes, Tom, is where you go. And by the way, it's tomorrow, the expiration.
Yeah, and with the 202.5 strike put and the 212.5 strike call, they're both, worth over $1.10 or about $1.10 on both sides of that, Nate. So you're taking advantage of that time decay that's going to come ramping up tomorrow also on this one.
Yeah, absolutely. And then the big thing with this, Kevin's right. This really is a one-day type of a trade because you're setting up a strategy where you don't really have a bias on this stock. So if that's the case, it's not likely that you're going to be holding those long 212.50 calls and 202.5 puts after tomorrow. So it's all about position management tomorrow. And depending on what it does, if it's fluctuating around that strike level, if you get the implied move one way or the other, every hour is going to make, put a difference. I mean, they're highly, it's gamma on steroids right. If you're around that strike. So it's going to be around the trade management. So you kind of have to ask yourself going into this, I'm putting down $1.40. What would be a good profit for me to exit? And if you achieve that, kind of stick to that rule and determine when you might close it out tomorrow.
Yep, and I got some assignment risk on those short options going into it, but paying, $145 in risk on that. Do you, if the market's open, do you close it right away? If it goes at or near either strike, based on you're going to see a fall in implied volatility.
Right now, we're running into overhead resistance.
Where, even if it stays right where it is,
on McDonald's.
That collapse in the near-term options that you sold, you just don't want a massive 2-3 standard deviation move either way in this one. All right, great stuff, and thanks to Nate Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data on holdings. The athletic apparel and shoe stocks up nearly 40% so far this year, outperforming in the sector. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Uber bounced up today because of the RoboCop news. IWM, boom, baby. Home Depot.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at Likefolio. Andy, welcome back to the show.
Thank you.
All right, so we got you now, Andy. So we're talking athletic apparel. I mean, we've hit on this. Nike's earnings at the end of June, kind of reflective that they're not innovating. They've got some competitive pressures. Then you look at On Holdings, you look at Deckers with their Hoka brand. They're actually doing pretty well. On Holdings up 36% this year. What kind of data do you have for us on this shoe company that's, kind of taking market share at this point?
Yeah, everything that we have supports this entire concept that Nike is losing, losing its dominant position, and companies like On Holdings are the ones taking it. There's several reasons for that, I think. On Holdings is essentially, I think, taking a page out of Nike's book that it innovated
Better
on
not.
the 80s and early 90s, and that is focusing on the performance of the shoe and building, shoes that have a unique look to them. I think we all remember the Nike Air when that first came out, and you could see the little air bubble in the sole of the shoe. That was very innovative at the time and made a difference in performance. On Holdings has a very, very similar approach, and people really like it. I think, this is a company that has been really disciplined in the way that it creates shoes and creates partnerships. They have a very high quality shoe that people like, and you see that in the Likefolio sentiment data. On Holdings is at the top of the list by a considerable margin. Nike at the bottom of the list. Nike's kind of lost that performance edge, that aesthetic edge, and like you said, Decker's Hoka brand and On Holdings are the two kind of leading the pack and taking that market share for good reason, because consumers love choice. They love going to the next big thing, and I think On Cloud shoes from On Holdings has proven to be that next big thing. There was a lot of people that thought this was just a fad kind of shoe company that came along, but we've been bullish on this company for a long time, and we see considerable runway into the future. I think they're just getting started at chipping away at Nike's big dominant position.
Andy, what's really interesting about these companies is the fact that On Holdings is kind of taking Nike's game plan, right?
Yeah.
Where they're going after the elite athlete, and if you watched Wimbledon, On Holdings was all over the place because of Roger Federer. 2-time winner of the Boston Marathon, running in On Holdings shoes. So they're really doing like a mini version of Nike, and the quality that everyone raves about and the happiness that you talk about showing up in your data is legit. I watched, for some reason, a lot of Wimbledon over the 4th of July weekend. On Holdings was all over. And did you notice some of the details? The player had On Holdings on. His family and staff all had On Holdings on. It was consistent across. But I mean, they're taking Nike's business model and putting it out there with a higher quality, kind of a Lululemon feel to it.
Yeah, exactly right. I think that they've, if you look back at what Nike did, it was Andre Agassi, it was Michael Jordan, it was, putting the product in great athletes' hands, improving the performance through the fact that they would go out and win in that product. On Holdings is doing very much the same thing. I think that the timing, of this company starting to get onto the radar of not just, Wall Street, but just across Main Street as we head into the Summer Olympics in Paris, I think is an unbelievable opportunity, because this is a company that has international ambitions. They're starting to expand internationally. I think they're going
Might
to
be my next pair.
Their second store in Paris during the Olympics. They'll have their shoes on a lot of
Need a casual.
The highest caliber athletes in the world that that get zoomed in on. For their
That one might
60
work.
seconds or 4 minutes of fame, whatever race or event that they're in. and On Holdings is going to be there to pick up, a lot of market share from that. I just think it speaks to Nike's distractions as much as anything else. I think Nike kind of got away from who they were, and, On Holdings has been there to pick up the pieces, and I think that will continue.
Andy, quick question here, because, On Holdings isn't immune to a slowdown from the consumer. And we've seen that across consumer brands, whether it's things you're wearing or, a Starbucks that you go get. So they're not immune from it. But because, that they've done well on earnings, direct-to-consumer actually grew when Nike's fell. Is that going to help support the stock, according to your data? Because, if we do see that continuation of, the consumer being finicky on what they're buying, I have a pair of these. They're not cheap by any stretch of the imagination. So will that have any impact?
Yeah, I actually think that the headwinds are very real there. That we're talking about the consumer. We talk about it, on this show all the time. I think they're getting a little bit worse even, but not necessarily for the demographic that On Holdings is targeting. For the Nike demographic, which is very broad, there is a segment of their customer base that is getting hurt significantly, and it makes part of their customer base much less likely to go out and buy new shoes. I don't think that that's what's happening with On Holdings. It's still definitely a headwind. It still impacts them. But I think if anybody's able to pierce through that headwind, we've seen it time and time again, it's those companies with the higher end income customer with that focus on quality and focus on kind of that luxury niche, and I think On Holdings fits really well into that.
All right, great stuff, great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data. And Kev, full disclosure, I used the same running shoe or the same brand for 15 years until I switched to On Holdings. They're spectacular.
Well, here's the thing, because it's a dual discussion, isn't it?
Right.
I saw a great piece by a guy who's on air and talking about, and he called Hoka and On Holdings ankle biters to Nike, right? They're so small that they're just little. Ankle biters starting to leave a little mark. On Nike,
making Nike limp a little bit.
But it's another conversation, and it's Nike, Lululemon, they're all down 20% or more. On Holdings down 20% off its highs.
Right.
Lululemon, it's bigger numbers. Nike, it's bigger numbers. So, what do you do? The whole segment is down.
Yeah, Deckers was down 5% yesterday.
There you go.
On no news, really.
Yeah. Well, because they hit Lulu.
Buck to 140 on the SPX.
And that probably, it's now a sector. It's like everything. This apparel, the shoes are now a sector. So you got to, if you're going to pick, right, it's a fraction of the size of Nike.
Right.
But like I said, it's down 20% off its highs as well going into, like I said, it had a really good Wimbledon, still having it, by the way, and Boston Marathon. I mean, they're going the elite athlete route where Lulu didn't do that. They're starting to, but they didn't originally.
Because they're small, they can pick and choose who they want representing their company, and they're expanding not only from footwear, but from athletic apparel also.
But they're more like Nike because, unlike Lulu, they started in shoes and now we're going into apparel. That's the Nike template, like word for word.
Their margins, they're trying to get to 60%. They're getting close on those. But you got an example trade for us? Likefolio had some pretty positive data. Break it down for us.
This is just simply, they've got an August 13th earnings date, so I wanted to stay ahead of that. This is a traditional stock replacement strategy, Tom. And what's the difference between that and, say, it's a diagonal, but it's a deeper delta on the long side. I went to the 72 delta, which is the August 9th 35 call. So I'm a couple dollars in the money here. I'm $1.68
Come on, SPX.
in the money on the 35 call. Then I went out to next week, 11 days, and I sold the 19th, July 19th, 38.5 call. Right
160.
Expected move time. That's all I did. So the 35, 38.5 diagonal, or in this case, it's a stock replacement. And how do I know? Look at the delta. It's a 45 delta on this spread. So it's chunky. It's not a calendar spread. It's more of a stock replacement strategy.
Yep. Let's break this one down. August 9th, weekly options kind of looks at 29 days to expiration, buying the 35 strike call deep in the money, as he mentioned.
1 to 160.
Selling the July 19th that expire in 8 days, the 38.5 strike call. $3.50 wide, bullish call diagonal to the upside. Paying roughly, we've got 260 debit on here on a risk profile on this example trade. Trading closer to 240 right now, so you can get a little cheaper. Stocks pull back a little bit. But it takes your break even to about 37, Kevin. But by doing the diagonal like this, where you've got that higher delta, it reacts. The higher the delta, it reacts more to the stock moves. You don't need that big of a move if the break even's around 37 and you have the opportunity to roll that short option or adjust it over the next few weeks.
remember, you could do a 36 or a 37 and a half strike and make it a tighter diagonal, but I wanted some duration, so I went out a month. I wanted to stay ahead of the earnings event, so I went.
So we had the snake breakout pullback.
I wanted something with a little more delta.
Fallen wedge.
To something that will.
Now we've had to break out from that. So now we kind of need to consolidate and go boom.
This is a more capital.
Sorry, guy, but I have to overtalk to you. Now I've scalped this thing twice now. And I'm still in this one here from the low. Last time was $1 to 160, and this one was 450 to 650. That was a 5,600. I just had a nice piece of salmon, man. That was good with that salad. Thick, 1.5 inch high salmon, and take big teaspoons off that fillet and it's coming back down for me again. We got a 1, 2, 3 support, which is right around 35.90, 55.90. Right there. We're right at it right now. We're right on the support. So it should reverse here. We're at 110. Still early. So we could get it cheaper. Back at $1. We could drop a little bit more. If we break out here, if we hold this, it means we're stronger than if we did if we come down here. Oh, they're dropped. Now watch this. The 5600. The 5600. Jim, are you going to take it? Yep. You got a lot of big balls there, Jim. $3, baby. Okay, we're at the double bottom here. The crowd's going wild at the sports arena. Come on, Jesus, let it be. Jim's looking at yesterday's word phrase, which was double bottom. Let's see if he's got it right again today. Riding day. Risk level. Pretty high. Fat bottom women, double. Double bottom. I think you can do it. Come on, Jimmy. Double bottom. 5600 lotto. Come on, Jimmy. The crowd's standing behind you here. I don't care. I don't care. You better care. $30-year bond auction. Oh, God. Not too many of them. I'm going to make it up with this. You watch. Jim, what ticker are you in? I'm in the SPX. Yeah, he'll shit his pants when we get up to like $4 or $5. Hey, Nancy, I'll eat this fish skin if you come here and give me a big old smooch. Nancy, would you turn the tea kettle on there to oolong? Baby, come on now. While you're in there, give me a shot of vodka and Valium. Breakout. Every second seems like a minute. Every minute seems like 5 minutes. Break it. You think you're pretty funny, don't you, Magnificent? I do, you comment. Yes, I do, he says. I'm quite arrogant in my laughter. Because I know. Especially after I called you one of the smartest men in the room. I always did say traders had it. Oh, God, come on. Well, I'm down $40. Huh. I'm just going to be patient here. I got one, so if I can get 5 or whatever I want after this. 4. Back to 3. Let's break it. Right, 3:30. So we're in the 5600 and we're back to 3. Now I could have got them at 260 on this dip. 5 of them and I would have been up 74 times 270. Four times 70, $27, 270, 280. I mean, get your gem. Four times 7 is 28. Randy, what are you laughing about? No, I am not Joe Biden. Shoulder gonna hold? Yep. We've had 2 confirmations. Left shoulder, right. So we bounce up a little bit, and then we pull back down. Now, we got to hold here, though. And we got to see a little bounce up. I know what I'm talking about. I really do. There it is. See, that's what I wanted to see. The crowd's going to wild here.
Hello, everyone. This is your Action News reporter with all the news that is news across the nation. On the scene at the supermarket, there seems to have been some disturbance here. Pardon me, sir. Did you see what happened?
Yeah, I did. I was just standing over there by the tomatoes, and here he come, running through the pole beans, through the fruits and veggies, naked as a jaybird. Ethel's over there in the jams, jellies, preserves, and pickles. I hollered over there. I said, "Don't look, Ethel!" She dropped a whole jar of kumquats and fell back into the sweet midget cider. Hit us too late. She done been in since. Boogie dad, boogie dad. Boogie dad, boogie dad. Well, yes, they call him the street. Fastest thing on 2 feet. He's just as proud as he can be of his anatomy. He gon' give us a beat. Well, yes, they call him the street. Like to show off his physique. If there's an audience to be found, he'll be speaking it round.
Yeah.
Like public critique.
That hurt.
Hello, once again, everyone. Your Action News reporter on the scene at the gas station. There seems to have been some disturbance here. Pardon me, sir. Did you see what happened?
Yeah, I did. I was just sitting here trying to get some air in my car there, and he just appeared out of the traffic. Come streaking around the grease right there. Didn't have nothing on but a smile. Ethel's in there getting her a cold drink. I hollered in there. I said, "Don't look, Ethel!" Too late. She done been flashed right there in front of the shock absorbers. Boogie dad, boogie dad. Boogie dad, boogie dad. Well, yes, they call him the street. Like to turn the other cheek. He's always making the news, wearing just his tennis shoes. Guess you could call him unique.
Hello, once again, everyone. Your Action News reporter in the booth at the gym, covering the disturbance at the basketball playoff. Pardon me, sir. Did you see what happened?
Yeah, I did. It's halftime. I just went down there to get Ethel a snow cone. Here he comes, right out of the cheap seats. Right down the middle of the court there, didn't have nothing on but his high-top Reeboks. He was a dribbling. Made a jump shot, got out through the concession. I hollered up there, I said, "Don't look, Ethel!" Too late, she done got a free shot. Grandstanded her right there in front of the home team. Oh, yes, they call him the street. Whoa, here he comes again. Fastest thing, who's that with? Ethel? Is that you, Ethel? Where do you think you're going? On his anatomy. He'll give us a beat. Oh, yes, they call him the street. Ethel, you back to show off his beat.
Once again, Mr. Stevens, you have managed.
Definitely have a problem in the vegetable aisle right now. I got one at $3. I could add maybe 4. But I think I'd be playing with the devil. 180. The 180 would have been nice. I had plenty of time, I think, to get it too. I'd be out of the trade now. Maybe I'd stay in it. Well, I was fooled for sure. That higher low got me, and then boom, then all of a sudden. Yeah, UAL's been a good one today. $255. I'll be able to get out of this even or hold it and think we can get up here to the shoulder line. So we get 1, 2, and I'm not going to count that as a 3 unless we broke out. But the body did not touch it. So that's going to be your next resistance right there. It's hard to say where we could put that candle. Could be right here, where I really want to put it. That's where I'm going to put it. Yeah, I think I did the right thing. Yeah, that would have been a nice $1.80. We're at $2.50 now, and I got 4 of them. So right now is an exit idea. If you did get them down there cheaper. Now we got a 2-headed snake. It's 12:10. Oh, 15 more minutes. We're positioned in a good spot. Okay. I got you. Whoa. AMD double bottom, with Meta with a double bottom. Apple had a breakout, and get Amazon being bad-mouthed. First they tell you that it's left out, and then they tell you that it's not left out. There's a reason why it's left out. So what else do we have? Cannabis. ACB's up pretty good. Cron's up today, and Hillary had a bounce. And CGC. And what we got over here? SMCI, Tesla, Uber, and NVIDIA, my other one. And Tesla and NVIDIA, my two favorites are the ones that hurt the most. And I'll be watching NVIDIA. Eventually, it's like that old saying, if keep saying you're sick, you're going to end up getting sick. And the same thing if they keep talking down NVIDIA, eventually it's going to get sick. This one here, I wish I'd have jumped in. UAL got me right out of the gate. I want to trade it. That was a missed opportunity. Now we got NVIDIA down here. So the first thing we want to do is pull up the weekly time frame. Depends on what kind of gut feeling you have right now. Let's erase all this shit. So I want to find which time frame I like the best and figure out how I want to trade it. Right now we've got a shooting star, or could be a gravestone. And see what it looks like by the end of the week, which is tomorrow. That's the weekly. That could bring us back down to this here area right in here on NVIDIA. Under 120. And we see it respected the 9 before, the 21. The 21. So if it gets in a hard sell-off, you're bullish above the 9. If it doesn't hold the 9, then you take it to the 21. And go very long. So I kind of like that chart, that time frame, but now we're going to look at the daily. And the daily easily tells me that we're going to go to 125. That we did have most of the week. We stayed above the 9. And now we're touching the 9. So that's a solid support. If that doesn't hold, I think it's an easy touch to the 21. So I'm definitely going to put a price line through there. I like this chart a little bit better. I'm going to put me an alert. At the mark, at below, and I'm going to say the 21 EMA on daily. Now I know the reason why I took this alert. And then I want to go to the 1 hour. 20-day 1 hour. Yeah. That alert, I'm going to move it up above the 200 SMA. On the 1 hour time frame, because that could stop before you get to the 200. You got a couple of reasons. You got this right here, one. And this one here is pretty close, and it did stop there at one time. So that could be it. One more little dip, and hold that 125.24 area. I'm going to call that a major support, because if that doesn't hold, I think we can get down to this lower area right in here at 122.71 somewhere. 122.81. And that's tight. And then a solid buy under 120, right around 120.50. So I wouldn't be in a hurry to buy it yet, but definitely have it on that list. MU 131.16. No, I don't know. This is called Top of My Head. Fuck. I can't believe Intel. I hold Intel for a month and it didn't do nothing. And then it expires and then all of a sudden, boom. I know it. Okay. That's depressing. Same with Nike. Mike was right. You remember, Mike? Are you kind of gloating on that? I know you are. I told you so. You're not as smart as you think you are, Jimmy. That was months ago when you mentioned that trade, and I laughed at you. IWM 250. Are you serious? God. Look how beautiful that is. That's called a breakout. I traded IWM here this week or last week. It was a good trade. So we got 5 more minutes and the fat cats are coming back. Let's see if they're happy with what we've done. I think they're very pleased. Very pleased. Jim, you're actually green. Did you know that? I said, yeah, I know it. Don't tell nobody. The crowd was a little bit worried about Jimmy there for a second. And if I'd have got them at 180, 4 of them, all I hear is crickets. Perfect. You got it. We're in sync. Laurel, we're going to go a long ways.
China.
Break it. I'm going to break it. I'm at 370. This here will buy me dinner tonight. Not a very expensive, $50. Because I got to pay taxes on it. Think I can get me a longhorn salad with salmon or a steak for $50. Which if I didn't have that fish today, which is so juicy. Do we have any salmon cookers out there on YouTube? Yes or no? So you get very serious. Yes, I did. Starting to dream about steak. I had one hamburger in 2 months. I'm in love with a hamburger. I've had hamburgers all around the world.
Fascinating.
Canada, Jamaica, Mexico. My favorite hamburger was definitely Hawaii. Crab cake, hamburger, and a pineapple. Oh, ramen noodles. Ugh. I used to eat them. I used to eat bologna sandwiches. Okay, get back on the subject here. I met one guy on YouTube that said he drank water and coffee all week. Lost 50 or 60 pounds. No, I forgot how much he said. Not that much. He lost quite a bit. Hamburgers don't even taste good anymore. Jim's having a breakdown. More that I hear about, more that I understand about Randy, he sounds more like a caveman. Or a pirate. Maybe a caveman. Zana, Zug Zug, come meet me at the cave. Zug Zug Zana. Can you imagine what kind of willpower I have, Roaring Kitty? That salad, and tonight before I go to bed, it'll be probably 5 or 6 slices of cucumber or a small tomato.
Fascinating.
Yep.
Nothing for you.
I don't think there's too many people. Everybody I've mentioned to anybody about beets, I haven't met one person that likes beets. Not one. Ew. You serious?
I know nothing. Nothing.
We have Roaring Shitty likes beets. Randy hates beets. If it doesn't have a bone in it, he won't eat it. Here we go, Jimmy. Something's going to happen here. We're at 3:40. Now, Jimmy called this here. He said we were going to go up to the shoulder line. I got a knock on the door. Hey, Jim, you dumbass. You should have loaded up when it was down there at 180 like I did. Now I'm telling you, we're here at the shoulder line. It's either we break it or I get out of my trade. You see what happened? Called you up. I tried to help you out, and I just took a $50 loss per contract. I could have sold him at $350, man. Fat Cats, we're very pleased on how we traded the market today. I think we're going to do it. It sounds like they're kind of indicating that they want the market to pull back. That's how I feel about it. There's so many mixed messages, even on Schwab. That was the right shoulder line, and I said we'd probably hit that and pull back, and which is exactly what we're doing. Now this critical support level right here, we have to hold it. Why you say that, Jim? I'll show you. See. That's the 9 EMA. Yeah. Well, I thought Frankenstein was going to be up there. Well, they're talking about Dow.
More than 5% lower. than the same time a year ago, and then also lower when you look at it month over month. So it speaks to the demand that we're seeing in terms of people continuing to travel and continuing the trends that we saw in terms of the revenge travel, revenge spending. So
Let's see a discount on airlines then.
Where Delta needs to increase capacity is on the premium side. And it said, look, it does expect to see some capacity increase on the premium side. You get more bang for the buck when it sells the, say, first class and business travel, which had been slower to come back in a post-pandemic world than the economy seats as well. And then the other headwind that Delta is dealing with as well is travel with regard to overseas travel because of the Summer Olympics in Paris. So that has impacted the demand it has for overseas travel. But it expects obviously that to be, that's more of an isolated one-off situation compared to overall international travel. But Delta is saying that they are fairly well insulated, and look, they're looked at as the premium player within the airlines. But the problem with Delta facing these issues is it's causing a drag on multiple airliners today. You see United under pressure, JetBlue was under pressure earlier as well, American Airlines under pressure, Southwest as well.
Yeah, so that's exactly what I was going to ask you about, because I know that Delta always typically reports first in the cycle of like earnings and airlines, but I was curious actually, because I feel like Delta always kind of sells off after the report, and they set the stage that it's going to be this sort of blistering to the downside earnings season for airlines, and it doesn't ever feel like it is that way. So this actually, if we close lower today, would mark the 7th straight quarter the stock suffered a post-earnings loss on the session, which is kind of amazing that 7 quarters we've seen this happen now. So, I mean, in your thoughts, like, is this necessarily indicative of what we could see from the other airlines, or is this just maybe right now we're just leaning into the selling on Delta because they're first?
Well, I mean, it's possible. It's a trend that we should certainly watch out for. We know they're the first to report, and they're considered the leader. But again, it shows that the trends we'll need to pay attention is how much are fuel costs weighing on bottom lines across the airlines, and then this pricing pressure that that we're seeing in Delta. Are we going to see it in United? So we'll need to pay attention to that. When they report next week. So we'll be on the watch out for that. Obviously today the reaction is investors are like, okay, we're going to get in front of that news.
Yeah, and I think well put in here. And obviously today still off of their 52-week low substantially. I mean 45%, but not the move you want to see if this is now going to be your 7th quarter of downside post-earnings, which is just amazing. But great insight as always, Dan King, Hall, senior markets correspondent for the network. So when you look at this name, I know that airlines, you have a lot of thoughts about trading on.
No, I know. I want to get to trading in a second, but I wanted to say something that's kind of off topic, but it's on my mind and it's bothering me. Airline fares are coming down, right? So basically saying filling the seats up the same way. TSA traffic has been strong. They build up the capacity, so airfare is coming down. Companies like Nike are essentially saying, "Hey, we're not selling stuff the same way. We got to discount it." Lulu's saying the same thing.
Where you
Lulu doesn't like to do that. Okay, Target's struggling. All these companies that kind of are like, they're bigger purchases, but they're not iPhone purchases. Yet we're supposed to believe that we're going to back up the truck. We're lined up around the door again for the new iPhone because it has AI. I'm not going to let this go. They said they're going to sell 10% more of these iPhones. I will believe it when I see it.
I know, that's exactly. I mean, it's again the expectations versus the reality. I mean, I think that I completely agree. I think that actually airlines are almost a better read on like economic health for consumers than anything, because this is like where all the money was going, right? We were moving away from goods into services. Airlines, as far as I'm concerned, should be crushing it, because the last several months we've had several of the busiest travel days in history. So, I think that this is concerning. Even I know a totally different company, but PepsiCo also said they're going to have to lower their prices to remain competitive because everyone's spending less money. So,
and here's the other thing too. I know we always talk about that Warren Buffett quote, like the best way to lose money is to invest in airlines. It goes to show, you just talked about it being like the best ever for the airlines right now in terms of traffic. They've only gone up 3%. This is the best in class company in 3 years. And they're coming off of like really, beat up times around COVID. So it's tough. That being said, not often do you see best in class companies down, 10% in a month, and the overall market's doing pretty well. So all things considered, it touched the 200-day moving average. Maybe this is one of those, kind of plug your nose, think about dipping your toes in, risk-defying strategy if you still believe in Delta.
I know, it's just a frustrating thing, honestly, because it's like no matter what it seems like the economic health or
Think I'm gonna get another chance.
consumers are traveling, these airlines like move on their own sort of accord. I know we've had fuel costs have also been somewhat of a concern, but trading now, as we just talked about how difficult these are to trade, walk us through how you think about trading this name.
Yeah, so doing what I basically said, which is leaning into the weakness, kind of taking a contrarian stance, because the quarter was largely strong, maybe just disappointing to that higher bar that we've seen given those TSA travel numbers and some of the pricing pressures. But went out to the August monthly cycle, well actually the following week, so it's an August weekly cycle, but the weekly cycle had single dollar wide strikes, and so we went to the 44.41. We wanted a $3 wide spread to collect $1 to make it a 1/3 the width of the strike. Easy math, 2-to-1 risk reward, risk 200 to make 100. That 200-day moving average was around 42.5. So the break even here at 43 is slightly above that, but close enough that you sort of have your break even at that support level. It is risk defined if that breaks and it does fall lower.
I like that 43.
I think that's important because you're truly leaning into weakness here today. The stock's down 10% in a month, 5% today after earnings. Not every stock makes a V bottom after they have an earnings sell-off. Sometimes they do, sometimes they don't. But as often as they do, there's just as many cases that see continued weakness after. So you'd only do this if you believe in Delta, you see it as an opportunity, but risk defined in the event that you're wrong.
And I will say that, like, versus the other airlines, like on a year-to-date basis, United's still up around 10%, American's down like 22%. So Delta is still like the year-to-date winner somewhat in the space. It's just, yeah, the 200-day moving average just basically flatlining it at these current levels. But we will leave it there for our FOMO discussion. Now coming up next, time to talk all things Amazon, as we did see some potential NBA rights. They're one of the major players, as well as a partnership with Workday. Updates with AWS. A lot of headlines right now with Amazon shares down about 2.5% on the session.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to talk all things Amazon with lots of headlines today, but unfortunately shares moving to the downside, I think, with the rest of the overall tech space, as we're seeing the NASDAQ still down about 2.2% in real time. But I'd like to welcome in Kevin Green, Senior Markets Correspondent for the network, to dive into all of the various things. So Kevin, maybe we start off with the AWS Summit, as I think so far it seems that was received positively. Obviously not indicative by today's price, but still, I think that it seemed like the analyst feedback was positive.
Yeah, and from a price action standpoint, we can kind of talk about that later because there's other dynamics that are really kind of keeping it depressed at this moment. But the AWS Summit, the focus obviously was generative AI and some of the tools that they're going to be able to provide and implement within this space. Now, they kind of tried to differentiate themselves by really showing the full stack capabilities as well as utilizing customer data in order to improve and enhance processes. So this was actually a bright spot in some of the news that we have seen today. They have some other news as well, but we are getting some good commentary coming out of JP Morgan, which does project the AWS revenue growth acceleration because of these tools. Could average around 19% for the remainder of the year if you're looking at the fiscal year 2024, and then edge up to 20% in 2025. And they continue to reiterate it's a best idea for JP Morgan, and they also have an overweight rating on the shares with a $240 price target. So generative AI, really not surprising, continues to be a focus, but this is also allowing them to expand their network. And one of the other news items is working with Workday. They actually have a joint venture that they're kind of working on right now to be able to work on tools to bring them to market in order to provide a better experience overall, utilizing it for new customer experiences as well as also trying to utilize it in-house to be able to hire efficiently and things of that nature. So overall, it's a really good story when it comes to AWS, but we just have not seen a lot of the enthusiasm when it comes to the generative AI piece, and they're starting to try to roll that out piece by piece here over the next couple of quarters, if you will. And we probably will get an update on their efforts along with their earnings announcement within the next 2 weeks or so.
Finalizing NBA TV rights deal as well, Kevin. But I don't know that any of these three things have anything to do with the stock price today. I think today there was this waking up collective feeling that, hey, if the interest rates are going to get cut, but we're still going to have this soft landing, we can buy other things besides these 7 stocks. And you're seeing the cohort of which Amazon finds itself in, and it's been very rewarded for being in that cohort, struggle today. I don't know that there's that much else to really think about when it comes to that, but maybe some of the levels that it's found a bid at do make sense. Kev, what are you seeing from a technical standpoint in Amazon?
Yeah, so you bring up a really good point, right? We are seeing this rotation happening in the S&P 500, at least for today, where around 80% of the stocks are still green on the session. I know you had some information around the NDX, kind of similar when it comes to that structure here. But when you're looking at Amazon, the reason why we haven't really seen it pop above that $200 level is because of this concern about Jeff Bezos selling some shares here. And the assumption is that the orders are being worked at around the $200 level. And if you kind of notice, every time it hits $200, we do see a pullback. That's been happening over the last couple of trading sessions here. So I think that was kind of a headwind over the last couple of trading sessions. And then today, obviously, yeah, we were seeing a little bit of rotation out. But we have to take a stair-step approach when you're looking at the the first area of support to kind of keep your eye out on is going to be the $190 level. That's been an area of resistance in the past between May and also in April of this year. And then if we break below that, Alex, that brings us down to around the 180, 175, 180 level, and that's the one that you really have to have that line in the sand. When we break below that, that's where we could see a little bit of a closure of that gap that we saw earlier in January of this year. So from a technical standpoint, it still looks promising, but yeah, we're seeing a rotation. But we've seen these rotations happen in the past. They haven't been as aggressive as what we are seeing here today, but sometimes they don't last. And so you need another couple of trading sessions, maybe even a week or 2 weeks, to really come to the conclusion that this situation is going to really take hold, and we have risk on sentiment going into small caps, going into interest rate sensitive sectors like real estate and also industrials.
Kevin, the last thing you said is critical. We don't know what's going to happen next, but this rotation, even every time it has not worked at all. It's been so short-lived. Heck, the Russell has barely made it as the leader intraday on any of these days that it's the leader. I don't know that it's going to lose that right today. I think it's got a pretty firm lead on the NASDAQ intraday today. But I don't know. Maybe it's a seismic shift. Maybe it's not. It's one day, though, thus far. Final thoughts before we say goodbye.
Yeah, I agree with you. I mean, we have PPI data coming out tomorrow, another inflationary metric for the producers. If we do see, once again, a pretty much a flat print or even a negative print there, that could kind of lead this narrative of, potential rate cuts happening in September, and that could also kind of fuel the rally for the small caps. But the thing that's going to be the sustaining factor for them moving forward, in my opinion, is going to be regional banks, which are performing really well. They're up around 7.5%, almost 8% over the last 3 trading sessions. And that's going to be providing the earnings power for the Russell once we start getting into earnings season, which is going to be really critical for institutional traders to really take that risk on in small caps and try to get out and diversify away from mega cap names that have the cash on the balance sheet.
I totally agree, Kevin. I was actually looking at the banks and how so many of these analysts have revised some of their targets to the upside. So now there's just a lot riding on the big bank players. And we'll hear from Citigroup, Wells, and JP Morgan, I believe, first on Friday. So I think that will be very, very interesting once we get some of those numbers in context for a lot of this recent upside. But we'll leave it there. Great conversation as always. Kevin Green, senior markets correspondent for the network. Now, coming up next, it's time for Under 30. We are looking at GM as well as Harley Davidson, 2 beneficiaries from the Biden administration's push into EV assembly. We'll discuss that more with George Tellis coming up next.
Hog.
Empower your port.
Google down 5.83. Google looks kind of interesting. I mean, just right now, but I mean, I don't know. Is it overbought? Or is it just collection day?
Here, George, what's going on?
George.
Well, I mean, we're in a political year, and there's been, of course, political allocations of federal money to specific industry groups. And so today it looks like the Biden administration has allocated via the Department of Energy $1.7 billion for electric vehicle assembly plants across multiple Midwest states, including Ohio and Pennsylvania, which coincidentally, or maybe not, are swing states, typically speaking, during elections. So if you look at the allocations of that, about $500 million are going to, or $500 million is going to General Motors. About $89 million of that is also going to Harley Davidson for their e-bike assembly plant.
$500 million.
So this is really a situation where we're actually seeing sort of a political play, I suggest, to help shore up some of the union jobs in some of the swing states. And again, it's actually benefiting the shareholders for these two companies, because if you look at the allocations and do some math, some simple math, if you look at $500 million to General Motors, it's about 1% of their market cap, but it also constitutes about slightly less than 5% of their net income, because the net income last year was
Bailing them out again.
$6 billion. So it's a good chunk of change for General Motors. But on the other hand, Harley-Davidson, which is getting a little bit more of a boost from this, $89 million is smaller, but it is a much smaller company, and it does represent about 14% of their net income, which was around $687 million last year, and about 2% of their total market capitalization. So I think it's more generous to Harley-Davidson, and I think Harley-Davidson needed this mostly because if you look at their e-bike, which is their LiveWire division, even with revised guidance, they are still expecting to lose about $110 million. So at the very least, this $89 million to Harley-Davidson is going to help fill that gap of operating losses for their LiveWire division.
Woo.
So, George, I'm curious because, okay, Harley-Davidson is obviously the laggard of the two. I mean, GM has been, a star as far as, like, the auto space is concerned this year. But I am such a skeptic on, like, the long-term, I guess, actual impact of some of these grants because, I guess, I just look at Intel, and, like, Intel has gotten the most money from, it feels like, the Biden administration as of late. And then look at the performance of the stock and look at some of their earnings. So, I mean, like, I guess I'm speaking out loud here to, like, my skepticism on what this actually means for GM, which has been still a turnaround story. I don't want to discount that. But Harley-Davidson, I mean, like, how can you execute here with this additional cash?
Well, that's the thing, Jenny, you're spot on. I mean, if you look at the performance today, obviously this is gaining traction today because of the math. I mean, you're just giving the company money, and it's a reallocation right to shareholders. But nonetheless, if you look at Harley-Davidson, because, you're looking at this company, their revenue growth is actually expected to be down in the next 4 quarters. So I agree with you. I think it's short-lived at the very least for the companies. It's short-lived also for shareholders. They're getting a boost, and I think there's also perhaps a sympathy play to what's going on with Tesla. Tesla's obviously down because of their own idiosyncratic news, delaying their robotaxi event, and some of the other automakers and maybe some of the other EV manufacturers, which include General Motors and Harley-Davidson, are getting some benefits from the sell-off in Tesla. So I think General Motors, if you look at that stock, outside of this is probably not going to impact GM more or less than it is Harley-Davidson because the benefit to GM is a lot less. And I think that the market also agrees with that notion because the performance of GM stock is less than Harley-Davidson today. So nonetheless, I think General Motors in and of itself, if you look at the profit margins, have expanded quite nicely over the past year, and the stock performance has actually represented that quite nicely.
George, would it be safe to say that these are pretty cyclical names when you look at these, like all of them? Like Tesla seems to be in its mind of its own. The Chinese names tied to China, but GM, Harley-Davidson, or Hog. I mean, if we go into a recession, are we really going to be buying new motorcycles?
Well, probably not. I suggest, in total, they're going to see some sales decline. In fact, they are denoting some sales decline, and it's a function of interest rates, discretionary. Some would say motorcycles are more discretionary, some are not. So I think overall, Harley-Davidson has struggled because of that. I think General Motors has benefited this year because they seem to be selling sufficient number of cars. Margins are improving. And I think it's moving higher also in sympathy with Tesla earlier this year, let's just put it that way, because of autonomous driving, which GM is a big player in that space as well. Lastly, I'll say this, General Motors may benefit from a recovery in China as well as lower interest rates. And I think this is another name to consider from an international sales standpoint.
Yeah, and I think that's also a good point here, George. And just two names that are interesting to look at here with nice upside on a collectively lower day, I guess, outside of the Russell. But we'll leave it there. Great insight, as always, George Tillis, senior markets correspondent for the network. And closing things off, I'd say slightly worse than where we started in the S&Ps and NASDAQ, Alex, but better than where we started in the Russell. So the divergence continues.
Yeah, it's getting kind of uglier in the NASDAQ, and it's improving in the small cap cyclical names. Well, we're basically on session lows of the big caps.
I know, and then you felt that in the major tech names. But we will leave it there for our show today. Coming up next, we have the watch list with Nicole Pelalides.
exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
What time is it?
Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange. A lot to discuss in this show. Of course, we got our CPI print. We're waiting on more. We've heard from Powell. We're watching Tesla. Much to discuss. So we're looking at the June CPI print. We have the Tesla delay to the highly anticipated robo-taxi. That's down 7%. We'll get a close look at the real estate market. We'll get an update from Dolly and Jenny Lenz and what they're seeing. In fact, a little bit of a summer rush. They'll explain. Jeffrey Kleintop will join us with some global perspectives and potential catalyst to what to watch in Japan. In the meantime, after all of those wins and records for the S&P and NASDAQ, it looks like we're about to snap those record closes. How many did we have? 7 in a row? Anyhow, so you can see that looks like we're about to snap those. The S&P's down 1%, the NASDAQ's down 2.5% roughly. The Dow is up just fractionally. It's the small caps that are having the best day of the year, up 3.4% at 21. This is the group that's doing better. This as yields come down on the softer CPI print. So for some of the big stories in the markets, Kevin Hinks is with us, host of Fast Market here on Schwab Network. And we begin with the CPI print. We saw the reaction. Some of your thoughts, because it's all about inflation for the Fed, at least in part, right?
Hey, Nicole, yeah, and if you were looking at the surface of the inflation data today via CPI, they were pretty solid across the board. It's not till you dig into the numbers that you see some concerning signs. First off, CPI month over month down 0.1%. That's 0.2 better than expected. CPI year over year, 3.3% to 3.3% even. So 2 big beats in terms of lower inflation on the headline. Now here's the core: from 0.2 to 0.1%, and from 3.4 to 3.3%. Now, the question or the problem that a lot of people have is, this was a report dominated by energy, Nicole. All the big movers. Energy down 2%. Energy commodities down 3.7%. Gasoline down 3.8%. Fuel oil down 2.4%.
50-50 today.
So this inflation data that came in soft was dominated by energy that we all know, if you watch the markets, has rallied the last 20 days. So the question is this number going to hold? Now, there were other good things here, like used cars and trucks down 1.5%, new vehicles down 0.2%. But here, food up 0.2%, shelter up 0.2%, rent up 0.3%, apparel up 0.1%, motor vehicle insurance up 0.9%. So all these things that are still higher that are concerned to Americans, but energy kind of drowned them all out because that move was so big, Nicole. Very interesting look at the CPI data.
Yeah, and look, we saw that quick reaction on the Fed funds futures for a more likelihood of a cut in September. That was sort of being pushed out further to November or December. So the Fed will have to decide what they will do, right? They're all in the 90s now. September's at 92.7%, November 96.8%, and December 99.6%. How about this about Tesla? I mean, we were also focused on August 8th. I mean, I go to sleep and I say August 8th, and I wake up and I say August 8th. You know, it was all everybody could talk about, and now it's been delayed, and the stock's down 7%.
Yeah, that news broke about 11:20 to 11:30 Eastern time, where they had the August 8th scheduled event about the robo-taxi. That's been pushed back. It's delayed. Why? Because they're unveiling. They're delaying the unveiling to allow teams working on the project more time to build additional vehicle prototypes, is what Tesla said in their release. All investors know is it was August 8th. Now it's in October. Stock down 7.5%. We'll try to figure out more about what that means, but right now, a little disappointment in a stock that's run a long way, as you know, Nicole.
Yeah, I saw the high of the day was 271, the low was 241. So certainly a big swing just today alone, which Tesla has run up so much on this news. In a good way, right? They had hoped it was up like 40% or something in a very short period of time, but we'll have to wait and see now. Thank you, Kevin Hinks. Now let's take a look at the bigger picture. Ira Rothberg's with us, portfolio manager of the Hennessy Focus Fund. Thanks for being here. So it looks like we're about to snap the recent record streak. But are you feeling still positive or not so much?
I'm feeling very positive. It looks like Chairman Powell and the Federal Reserve are going to be able to stick the soft landing. But we really build our portfolio in the Hennessy Focus Fund from the bottom up. And I'm excited about our individual positions. It's also supportive of the market that we have seen inflation really start to ease, shelter, rent really start to ease, and the job market
I know it.
A little bit, allowing the Federal Reserve to ease.
That would have been so nice. Been a nice president.
Right. Are you in the camp that we're getting at least one cut, maybe two? I don't know. You tell me. And what timeline do you see for those?
Based on Chairman Powell's testimony in front of Congress, it sounds like the Federal Reserve, the FOMC, is getting much closer to easing, and it may in fact happen before the election. I think there are a number of consumer discretionary names, big ticket consumer discretionary names that have lagged, and many of the products that they sell are financed, and so I would expect a recovery or reversion to the mean in many of those names.
Right, understood. So how's the Hennessy Focus Fund doing? HFCSX. How would you describe, running this kind of fund over the last few months, and what's your outlook?
Sure. So we run a very concentrated fund with generally between 60 and 80% of our assets in the top 10 positions. And we're a very low turnover fund with about 10% annual turnover. So
Spy's got a fallen wedge
to the portfolio on an annual basis, and we can be very selective. I'd say, if you look at the last 6 months, there's been particular underperformance in small cap equities relative to large cap. In fact, it's been the largest underperformance of small cap relative to large cap in history through the first 2 quarters. And so we see particular opportunity in a number of smaller cap businesses.
Yeah, and look at small caps today. Are you surprised to see that move? I mean, this is probably the best move of the year. It's up 3.5% for the
It is. It's a big one.
It's interesting. I mean, it's only a 10 basis point decline in the 10-year Treasury yield, but there's so much of the trading in the market is based on factor risk, and so much of it is algorithmic. So it's odd to see the Nasdaq down 2% when many of the higher growth tech companies in the Nasdaq, the Magnificent Seven that have been driving a lot of the performance. You run a DCF model, you lower the discount rate, it actually increases your intrinsic value calculation. So it's odd to see this big rotation, but certainly the Russell 2000 is definitely underperformed.
So I thought it was interesting how you said you have a majority of the money in the top 10 holdings, and so I also have your stock picks. I don't know if they overlap. What are some of the big holdings that have served you well in the fund?
Sure. A long-time holding in the fund is our position in Ashtead Group. They own Sunbelt Rentals, which is the second largest equipment rental company in the United States with about 11% market share, second only to United Rentals. And what's interesting about this business is they operate in a highly fragmented industry where mom and pops control the majority of the business in equipment rental. And the company is really benefiting from government largesse, things like the Inflation Reduction Act, the CHIPS Act, the Infrastructure Act, and some of these very large mega projects, call them $450+ million. Only a couple companies, only Sunbelt and United Rentals, can really serve those big projects. And the big companies are advantaged because they have a better equipment availability, better service levels. They're able to buy equipment at a bigger discount from the equipment manufacturers. And the industry is transitioning from equipment ownership to rental, which is a long-term growth driver for Sunbelt. This is a company that we think can go from about 11% market share to about 20% market share over the next decade. And in the process, we think they'll be able to compound their earnings per share at least a 15% clip. And the business is available at a compelling valuation of about 15 times our estimate of next 12-month earnings.
Wow, that's a big projection to double market share. That would be wonderful for this company. I don't know if you get to speak with the CEO. I mean, sometimes the smaller companies are a little more accessible, but certainly an exciting prospect for growth there. How about AST Spacemobile?
Sure, a slightly smaller cap company, an earlier stage company. Just a little background, we've been shareholders of American Tower, the country's largest cell phone tower owner and operator, for more than 2 decades. And our investment in AST SpaceMobile is really an outgrowth of our knowledge of the tower industry. The terrestrial network can't really serve all geographies across the continental United States. There are holes. I mean, my phone calls drop from time to time. They're dead spots. And AST SpaceMobile is partnering with mobile network operators like Verizon and AT&T to fill in those dead spots. So if you're in a national park or you're driving from New York City to the Hamptons, your phone call won't cut out. And they are building a constellation of low Earth orbit satellites that will deliver that service to you. And it's a business that should have very high margins. And the opportunity is not just a domestic opportunity. They have relationships with over 45 MNOs across the globe, representing more than 2.8 billion subscribers. If you run the math on very modest assumptions about their average revenue per user and their penetration rates, the revenue numbers could be enormous. This could be a company with more than $10 billion of unlevered free cash flow, with a market cap today of just over $3 billion. And I should mention that John Stankey, the CEO of AT&T, has commented that he thinks 30 to 40% of his customers will take this type of supplemental service from a provider like AST SpaceMobile. So a very exciting opportunity in our portfolio.
Yeah, I mean, these are sort of in the weeds, but not, because they have a footprint that can certainly grow and have the backing, or at least some positive comments from the likes of AT&T. I know you have CCOI on here as well in the world of also in the world of communications, internet communications. But what's interesting is the theme about how you're going about picking these stocks. You're not looking for high flyers or crazy growth stocks or Mag 7. You think that these have these sort of wide moats, I guess, or value that seems more attractive?
Yes, we're trying to buy businesses that have a wide economic moat. So sustainable competitive advantages that allow them to earn an outsized return on capital for an extended period of time. And we're looking for businesses that can reinvest their profits at high rates of return. They have long growth runways. And we're looking to partner with management teams that excel at operating the business and at allocating capital. Because if you're going to own a business for 10 plus years, a lot of capital is going to get allocated over your holding period. And we've been able to find businesses trading around the market multiple on average that generate about twice the level of earnings growth as the market. And so we like to own these growth businesses at discount valuations.
This is fun.
Misunderstood or out of favor.
All right, good to see you. Ira Rothberg, Hennessy Focus Fund. Thank you for the conversation today. Appreciate it. Coming up next, Options Corner. Tom White standing by. He will highlight unusual options activity that we're seeing. How investors are looking how to trade on some recent news for some of the big names you know. Starbucks, Delta, Unity. Don't go away. Trading 360. We'll be right back.
with the Schwab Network. Available anytime, anywhere,
Be
on
right
any
back.
device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. For that, we welcome in Tom White, host of Fast Market here on Schwab Network. The first name you're taking a look at is Starbucks. Got a downgrade today. What was interesting also, you'll tell me about the downgrade. I do see JP Morgan with an overweight and a $90 target, but what a chart. And they face some supply concerns, but this chart, especially after the last earnings, a tough one. Let's see what you're seeing in the world of options too, Tom.
Yeah, a lot of brand names that are focused on the consumer have a similar chart, Nicole. If you look at McDonald's has been sliding, in the fast casual space, and then you look at Lululemon, Nike, a lot of these big names, brand names that are, top 10 in the world have been sliding, and it's kind of reflective of what we're seeing out of the consumer. They're picking and choosing what they want to spend on. And it's not high-priced coffee drinks over the past few quarters. Stock down about 24% this year. They report earnings on the 30th of July, so we'll get some clarity on whether they're seeing a continuation in that deceleration in comp sales, because last quarter declined 4% overall. That was down 3% in North America, 6% in the international markets. Competition really ramping up. One of their big growth areas, Nicole, has been China, but Luckin Coffee over there has been expanding at a rapid pace at a lower cost point, which is putting real big pressure on their sales in China and their expansion plans for that matter. So we'll get some clarity at the end of the month, see if they can turn around these comp sales that have been sliding. But if the consumer remains under pressure, I wouldn't expect any big move to the upside. We did see some unusual option activity in there. Put volume is about double normal daily average volume, but one that stuck out to me was out in the September monthly cycle. The 65 strike put out of the money to the downside here. A trader sold 12,500 of those 65 puts in September for a credit of $1.21. So when a stock's been beaten down like this, a lot of times you'll see traders put on this type of position, Nicole, where they'll sell some downside puts for a neutral to bullish type of stance. And that's what I think this trader's doing, where he doesn't think the stock's going to go down much. How can he take advantage of it? Well, he can sell some puts, collect that credit, hopefully, just profit on the puts that he sells. But if the stock continues down below $65 a share, he gets to buy the shares at a discount. Now, this trader sold just over 12,000 of these for $1.21 credit, so that takes that break even down to $63.79, and that's over the next 71 days. So you got plenty of duration in this position. That's about 12% below the current share price. So if this stock does continue to slide down, this trader's obviously comfortable owning the shares 12% where they're 12% below where they're trading right now. But watch that earnings event at the end of this month. I think that might be a catalyst. But we also saw the trader sell some 70 puts in September also. So this is a preferred way when you're seeing a stock down this much in the year, where maybe it's been beaten down too much. Maybe it's going to rebound or at least consolidate at these levels. This is a type of option strategy this trader took, where you can take advantage of the down move by selling some puts.
Right, and sort of staying with the sideways action or tipping down a little bit,
Yeah.
and you make your money that way without having some big dramatic drop. I get it. With JP Morgan, I think the cut is what we were referring to, $90 from $92. Still an overweight rating. It's up 1.2% today, but as you saw, it was down 7 days in a row, and the last couple of days been giving it a go.
Yeah.
Let's take a look at Delta, which today, we've had analysts on who thought the quarter looked good, but the lowered guidance spooked folks on this name. What are you seeing there? In fact, you saw a bullish trade, right?
Yeah, I saw a lot of bullish trades in there. Not surprising, Nicole. The stock was down 9% at one point, but it did fall pretty precipitously at this point. It's still down on the day, but it did bounce off its 50-day moving average, which is sitting around $42.50. Now, if you look at the report, it wasn't horrible. The comps from last year, the quarter from a year ago levels, was a really difficult one. That's probably one of the reasons you're seeing some weakness, along with the fact that this current quarter that they're in right now, they lowered their range on EPS to $1.70 to $2, and that's below the $2.05 expected by the street. So a little bit of weaker guidance there. Air travel demand continues to hit all-time highs. TSA passenger data, we mentioned this earlier this week. 3 million people went through TSA on Sunday. People traveling by air in 2024 is outpacing 2023 by 6%. But net income did drop about 30% from year-ago levels to $1.31 billion. So that's a headwind. And then also operating expenses up 10% year over year. So those employee costs coming into play there. The CEO at Bastion, he gives a great interview. He gives a great outlook every quarter. They're the best in the business as far as their balance sheet goes. Also, they have the highest margins in the airlines. But if you look at the PE ratio on this right now, Nicole, it's about 5.5. And I think that's why you're seeing a lot of bullish momentum in this name on this big slide. I think people are taking this opportunity to buy, position themselves for some upside. And one of the trades that stuck out to me in the option market was in the August 16th monthly cycle. Trader bought 10,000 of the 47 strike calls in there for an average debit of just under 60 cents. So the break even for this trader, 47.59 over the next 36 days. It's about 8% above the current share price. And just yesterday, ahead of earnings, Nicole, the stock was at the break even before sliding towards the end of the day, and then of course sliding today. Now this trader is taking this position on the August 47 calls because he sold out of a long position that had a big open interest, the August 50 calls. So they're rotating down a few strikes on this slide. And then remember, earlier this week on Options Corner, Nicole, we talked about a bearish trade in Delta where a trader bought 10,000 of the July 12th weeklies that expire tomorrow, the 45 strike puts for a debit of 60 cents. So those are working out well for that trader earlier in the week. But this trade's based on the fact that, hey, maybe we're seeing a bottoming out here, that 200-day moving average is going to hold. But taking a shot here over the next 5 weeks that this thing's going to rebound.
All right. Maybe he's watching and he gets a congratulations for a good trade that worked right here. He's watching Schwab Network. Perhaps, you don't know.
Yes.
How about Unity? The 1 year the stock's down 62%. You're watching this name. It's near the lows that we've seen. 15, 16 was the low. It's at 16 and change today. Why did this one jump out at you?
Well, I think because of the move up, shares are up, 7-8% so far today. And this is one of those areas. It was a big high flyer after when IPO'd in 2020. The game engine developer, right? They develop, they have all these tools that allow developers of games to use those, to use AI to kind of improve them. And whether it's 3D, whether it's the VR headsets they're developing games for. This was a high flyer for a while, but as you mentioned, down about 60% so far this year. It did hit those all-time lows, just above 15 earlier in the week. They've got earnings on the 8th of August, so we'll get some more clarity. They did have a takeover, basically, Iron Source. It was dilutive to them. So even though the revenue rose in 2023 by 57%, that was all based in organic.
She bounced to the 200.
Merger with Iron Source. So they've got a new CEO. He's going to try to change things up here a little bit, leading mobile cross-platform game development. He was at Zynga, which was bought by Take-Two. He served as the COO there. So they're kind of banking on what may happen in the future. Now, as far as unusual option activity, we did see some there in there today. Not surprising to the upside when you see a stock like this has been beaten down and it's rallying about 7%. Out in the August monthly cycle, the August 16th monthly options, so you're going to capture that earnings event on the 8th. Trader bought 8,000 of the 16 strike calls, so these are at the money. Paid an average debit of about $2. So where this trader starts to profit is above $18 over the next 36 days. That's about 8% above the current share price in there. Call volume, about 4 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, on this pop today, and there's really no reason besides maybe some small caps, a little rotation trade. You saw the Russell up 3% today. Maybe it's getting a little bit of a reprieve on those lower interest rates and the lower dollar today. But somebody thinking that we're going to see a surprise on earnings on the 8th of August by buying these August calls.
All right. Well, and you made the point. It was a high flyer. I mean, remember when this thing shot up and everybody couldn't stop watching it and it went to 210? Now the average price target on Wall Street is $25.75. The street high is $33.50. The street low is $14. And we appreciate that bullish trade and bullish look at Unity today, which is up 7%. Thank you for Options Corner today.
You got a 1, 2, 3 bottom on AMD.
Next, let's turn our attention straight over to real estate. In fact, it's the best performing group today. But it's really more about yields, availability, prices, the real estate market. Dolly and Jenny Lenz are with us, and they will add some real perspective because they certainly know the deal. We'll be right back.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging.
He's very proud of the price he was charging. $100. You throw a window in there for about 15 minutes. You get 5 or 6 of them done. You go home. You made more than you have all month long. Your dad was very smart. There's Mr. Frankenstein. Well, man, it's one of them kind of days. The 2 sucker punches today. I'll be right back. We got a half hour to power hour, so I'm gonna get my laundry ready.
Dolly Lenz Real Estate and Jenny Lenz, Managing Director at Dolly Lenz Real Estate. Great to see you both. So we were well aware that the new homes were doing better than the old homes, right? People stayed in the existing homes for the good rate.
Mm-hmm.
The new homes, they were able to negotiate with the home builders. Where do we stand now? Did more things come on the market? What's the theme here?
Well, inventory is definitely up, which is a good thing, a good sign. You know, interest rates they're hoping will go down, right? There's a little hope now because inflation data came out that was positive for interest rates, and maybe finally there'll be a little cut.
Right, so Chairman Powell said on Tuesday that everything's looking better. Like my mom said, inflation is down, so maybe he can cut his interest rates, which is very exciting. However, for the first-time home buyer, we're still seeing many factors at play. High pricing, still high mortgage rates. Even if they come down a little bit, it's not really going to help the first-time home buyer that much. But the bright spot, like Dolly said, is that there is more supply on the market. There's 4.4 months supply, and 6 months supply is considered equal between buyer and seller.
But most of that supply is
What brought more inventory? Is it the builders building more quickly and such, or is it people now willing to bite the bullet and say, I'm going to try and sell my home? And I mean, how do we have more inventory?
Most is new builder, but the inventory doesn't seem to have changed. Maybe they're just increasing the speed, like you said, of how they're building it or when they're offering it. Maybe they're offering it earlier in the cycle, not waiting till it's finished. Right. But still 1 million houses being built a year, only 1 million.
Right, but a huge portion of the supply on the market, 33%, is new homes, which is double what it's been in prior years. So people are going to be buying new homes, like you said, because home builders are big. They can offer incentives, mortgage rate buy downs, all the stuff they usually can offer. And people do like new.
Yeah.
And how are people feeling? I mean, at this point now, are they able to get mortgages? Or what kind of sense is everything still going sort of mostly all cash? Remember we had the bid up time when people would overbid each other, and it was that hot frenzy. You know, the price point's still very high, right?
The hot
Where do we
bidding is
stand?
over.
The hot bidding is over.
Right.
Okay.
Totally over.
So tell me some of what you're seeing there, some of the experiences that you've seen.
Well, it's also an election year, right? And that's always a cause of uncertainty. No one really knows what's going to happen.
Right.
So uncertainty, horrible for the real estate market. Real estate is a confidence play. It's not like a stock that you can buy today and drop
Toll
tomorrow.
Brothers up nice today.
Yeah, we're not seeing any bidding wars or anything. People who have a need are buying. They are bidding, maybe a little bit low, but the sellers who do need to sell.
Oh my, look at Toll. Toll Brothers up real nice.
So they're saying, okay, if I miss
This week.
guy, the next time they're taking the deal. Right? They don't necessarily learn on the first offer, but maybe they learn a month later on the second offer.
Did I see this morning a huge real estate deal in Manhattan? It was the biggest ever. Or
Yeah,
something.
the Amman Hotel, no, the Crown, Crown Hotel.
Building. Right.
The top
Yeah, that was a
5
missed
floors, which are
opportunity.
delivered raw, supposedly sold for $135 million. Now the question becomes, is it actually an arm's length sale? Or is that actually someone who invested money in the hotel who said, listen, I'm not getting paid back fast enough, give me those top 5 floors instead.
Right.
They're not saying who sold it, they're not saying
Okay.
How much was that a foot?
10,000.
10,000 a foot. That's pretty crazy for a raw space,
That's a
meaning
lot.
no
Yes, that's a
bathroom, no
lot.
floor, no nothing. You know, so it's a little bit
suspect.
Okay, so it was an unusual story, right?
Yeah, I mean, no outside broker did the deal. It was someone who walked into the sales office.
Right,
And, you know.
Yeah. If only that would happen every day.
Yeah. What are we doing as far as mortgage rates? Where do we see those headed?
Well, hopefully we're going to get a little tick down, right? Which will bring confidence. It won't bring.
What are we, around 7 or so?
We're around 7, 6 3/4, 7.
Right. Last year in June, they just started increasing from 6 to 7 to 8 in October. We are getting a little bit of a break, but again, it's going to have to be a pretty substantial one to make people want to run and dip their toe and buy if they're deciding to buy.
Look at that. That's a great chart from Freddie Mac. 2021, it was less than 3%.
Right. Crazy. We
went from 3. The whole thing was that
2
trajectory. We
3/4.
went from less than 3% to over 6% in no time.
Yeah, to
and
7
that's
and
what
8,
freaked
yeah.
everybody
And
out.
that's why it's all new builds that are on the market. Because nobody can leave, it's the golden handcuff story. Nobody can leave their home if they want to upsize or downsize because it won't make any sense. Where are you going? You sell your house, so just to pay double the mortgage rate you paid before and to pay an exorbitant price in comparison. So people are staying put. So those homes aren't coming on the market.
You know, and one of the biggest issues coming on, let's say in Florida and other places like that, again, mortgage rates are high. Insurance rates have doubled and
huge.
tripled and 4 times, right? So we have a lot of people who may need to sell their homes very soon. They cannot afford the cost. They cannot afford the adjustments and assessments that are coming, and they may not be able to hold their homes. So we're going to see that come on the market.
Then, right, it's not foreclosure, but it's just I'm choosing to sell because I can't afford the insurance.
And I'm hoping I'm not getting all the way at the bottom, because if you don't start that early, you know, you're going to be last, and there's going to be a lot of things for sale.
Well, are you allowed to own a home and not have insurance and make that your choice? Or
Yes, you can self-insure, but
not if
a
you
lot
have
of
a mortgage.
mortgages, right?
Yeah,
So if you have a
won't
mortgage, they make you have insurance, right? They don't want your house getting swept into the ocean by a hurricane.
Right, and then, you know, so they
So
make
that must be expensive too.
very expensive. So there's
Right.
layers of
Little
insurance.
spike on.
So you could say,
Uh-oh.
I can't get some insurance, but I'm going to sell.
Little spike on the
When
SPX.
that building in Miami went, collapsed.
Oh yeah,
that's
with the
when-
water, remember?
Right.
Somebody went in there and
So
gobbled it up.
New development, so it's okay.
Right, and you noted that that's true, and that will go over top dollar. You noted some of the rush that you're seeing, and I remember in the Hamptons sometimes when things wouldn't sell, people would go last minute and try and finagle deals. What kind of summer rush are you seeing? Because it used to be the spring selling season. What are we seeing now?
5600s are at 225.
The season was a big flop. Okay, so nothing that would bolster a market really happened, right? But trickle, but we weren't expecting a trickle. We were expecting a rush, like you just said, right? Didn't happen. So now people are like, oh, so what do I do now? Do I keep my property on the market? Do I pull it off? Did I put it back in the fall? So it's all this going on, and we're seeing most people keeping their property on the market.
Right, and usually second homes, take language. They take a lot longer to sell. So you have to make sure you have enough money, to keep your second
I had a
home.
friend who actually talked about second homes, and he swore that you rent your primary and you buy the second home because that goes up in value faster. Is that right?
Yeah. It's also that it's cheaper. Like you can buy a house in the Hamptons for like $1 million or $2 million that actually gets you a house. In the city, like what are you getting for
A
that?
studio,
You know?
right?
Yeah.
So, right, you can't live in a studio all the time. They're at least run to your
And
house.
with work from home, you can be out there, you can get on the jitney, come into the city.
Right.
Go
Blade
back.
if you're so
fancy.
Yeah, no, I love Blade. We've had Blade on the show too.
Yeah, they're great.
Yeah, and they're not just helicopters and choppers, but they actually do the boats.
Yes.
When you arrive at the Hamptons and your boat's too big and you can't. I'm sorry, to Shelter Island.
Right.
You can't pull up to Shelter Island, but you get the Blade boat.
Exactly.
And they take
Exactly. And a bus. And a bus beating the Ambassador now.
Oh yeah.
$275 each way.
Oh, I
Yes.
didn't see that.
But I think you get wine and a gift.
You better get a lot of wine.
Yeah.
for
A good
that.
gift.
All right, but the big picture is real estate is still hot, getting hotter, or just chumming along. What's the final?
I would say chumming along because people can't afford what their dreams are. So they're reducing their dreams, and that's kind of chumming along already.
Right.
And a lot of people are telling us, I don't know if I'll ever realize my dream of owning a home because they're really worried about all the other costs, right? Like the Cheetos effect we read today, Pepsi and Conagra are saying people aren't buying Cheetos.
Right.
They can't afford
That's
the
true.
extra money for Cheetos.
I mean, if you're dropping your Cheetos,
Yeah, man.
it's
Yeah.
bad, right?
Yeah.
I love
Yeah.
Cheetos.
Yeah.
No, it's true. We're seeing a lot of these companies. You mentioned Pepsi, Conagra, Helen of Troy. I mean, they make a lot of food and things like that too, and the same.
And that goes first,
But
right?
all the home building stocks are up today. A lot.
Yes, yes.
Lennar, Hilton
Right.
Group,
All the real
Builders
estate
First
names
Source.
are. It's the best performing
Yeah,
group
6,
of the day
7,
as the
Exactly.
yields drop.
That's why we're here.
% up.
Yeah.
It's great to see you.
Me
Thank
too.
you.
Thank you.
Always appreciate
Happy
it.
summer.
Dolly Lenz, Jenny Lenz of Dolly Lenz Real Estate. Thank you both for being here today. Still ahead, we'll get a global market perspective. Charles Schwab's Jeffrey Kleintop is standing by. He's going to take a look for us. And how about we talk about Japan? This is the Nikkei had a record close. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Peppolides coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. Looks like we're going to snap those record closes that we've gotten used to over the last week or so. Right now, we see the S&P and NASDAQ both to the downside. I think the NASDAQ's most important because you see it down 2% at this moment. This as that softer CPI print came in. Yields came down. And right now, the Dow is up 0.1%. The Russell soars up 3.3%. Let's bring in Ben Lichtenstein, Senior Futures Contributor. 90 minutes left in the trading day. And curious to see what you're watching here as we are wrapping up the market day.
Watching a big move, Nicole, kind of different directions depending on which market you're talking about, but across the board, I think it goes without saying that the response we saw to the CPI data was one of unexpectedness, right? The fact that the number came in lower, but lower than expected, lower than anticipated, and you know, whenever you see a big move like what we saw in terms of yields, the 10-year and the move back down to, well, what was it, the low that we actually saw, 4.16. I mean, again, you're going to talk about a ripple effect here, and that's what we're seeing. So investors trying to come to grips with the number, basically. Let's begin with the S&Ps. You mentioned the Russell, which is up 3.5%, the NASDAQ, which is losing by about 2% here, but the S&Ps have also been coming off. That was the high that we saw, a new intraday all-time high, 56.42. But yeah, we're going to have a hard time closing in positive territory and getting another record close here today after what's been a bit of a tear to the upside. So a bit of a pullback. The data, again, kind of something that investors are struggling to come to grips with. But you can also see, Nicole, how well the trajectory we had been on, we've gone from looking at the selling we've seen on an intraday basis today to this longer term rally off the October lows from last year. I mean, this is just a small blip on the radar, and in some ways it might be the start of something healthy. We've been talking for a while about how little consolidation up here would be, you know, not a bad thing in many ways, right? I mean, obviously the bulls want to just continue to see those higher highs and higher lows and the trajectory to the upside, but it's unsustainable. And so at some point, you're either going to form a V-top, or you're going to start to balance and establish something a little bit more sideways. They want the latter of the two.
Yeah, understood. I thought it was interesting when you said the low on the 10-year was 4.16, and Kevin was talking earlier about how much of the CPI print was really related to energy and gas and things like that. And, you know, do you get that bounce back? Because the other things are still high, right? Food, shelter, things like that. Let's talk about gold, which soared, and it's at $41 right now as they peak up.
Yeah, talk about ripple effect, right? This is more like a wave that's been created, a tsunami almost, from that number here today. Yields coming off the dollar took a hit, and gold spiked in a big way. Talk about the bulls being in control. Just another example of what we like to look for, right? These opportunities to participate in the longer term trend, and we just recently had one, that's for sure. We talked about how Bitcoin and gold were kind of both in that same area structurally, where if the bulls were still in charge, they would step up. Look, they did today. That's for sure. I mean, a big move here across the board. We're talking about earlier this morning, we were down below 2,400 all the way up to 2,430. We got down to around 2382, in fact, Nicole. So again, not every day you see a sharp spike like that or a intraday range like that in gold. But here now we've moved from that short-term rally in reaction to the number to the rally we've seen off the October lows from last year. This is what I'm talking about up here in this right corner, right? We talked a minute ago about how V-tops are not as common as balance forming, that sideways consolidation and a range-bound kind of area of value that gets formed. Well, in a trend up, the bulls are looking to buy the lower extreme of that range, which we just came off of right now. You build momentum through the middle. I always say, what, we retest the upper extreme. That's a possibility here at this point. And in fact, currently trading just about $30 off a historic all-time high in gold with momentum and energy like this. If the dollar continues lower, if yields continue lower, if we had another soft number tomorrow from the PPI producer side of things, then ultimately I think that all-time high is well within reach here, Nicole.
All right, we'll watch for all of that. Thank you, Ben Lichtenstein. Now let's talk a global perspective of the markets. I had mentioned earlier that the Nikkei had a record close. The yen made big moves. Jeffrey Kleintop is with us, Chief Global Investment Strategist at Charles Schwab. Let's start with Japan. Tell us a little bit about what you're watching and why we're seeing. Yeah. Tell us why you're seeing these moves. What are the moves that we're seeing and why?
Yeah, Nicole, you know, Japan's been one of my favorite stock markets for a couple of years now. As you mentioned, the Nikkei hit a new record. The yen It's almost up 2% today versus the dollar. So I know some investors are seeing some losses in their portfolio today, but man, internationally, Japan's doing well. In fact, Japan's stock market is up 8.2% so far here in the third quarter, but we're only like a week and a half in, and that's measured in US dollars for once. Japan is the largest weighting in the international indexes like the EFI index, so it matters a lot, and it's killing it this year. It's up 26% this year, but unfortunately, because of the weak yen in the first half of the year, in dollars 12%. That's not bad, but it's lagging the S&P 500. So what happens with the yen in the second year matters a lot, and I'm bullish on the yen in the second half of the year. Both the Fed and the Bank of Japan have meetings at the end of this month, July 31st, same day. The market-based odds of a Fed rate cut by the September meeting are now at about 99% with the CPI data today. September are nearly showing short-term rate differential continually seen since 1986, and more of those stocks passing through to U.S. investors.
Why does it matter? I mean, I know Japan has been a great stock market. We talked about the growth that we've been seeing in Japan and India. Remember, China used to be our China growth, and then that slowed and it became Japan and India. Why does it matter to investors here at home to see the moves we're seeing there?
Well, again, I mean, Japan is the biggest weight fee index. So if you have any international exposure, even through a broad ETF that covers the whole world, you're getting a big amount of exposure there. Japan is important to the world because it's a maker of a lot of important industrial products and consumer products, right? From the big car brands we all know to the big TV and computer brands. Also make a lot of earth-moving equipment, which is being used in China right now on a number of projects. They make a lot of capital equipment that's used around the world. So they're a real buyer to the rest of the world. In fact, for many of Japan's companies, only about 10 or 20% of their sales are in Japan. They're truly global in their operations and their sales. So really it does give us kind of a barometer on manufacturing and demand around the world. So it's encouraging. And one of the things that we saw in Japan here in the second quarter was that GDP in Q2 is probably about 2.2% for Japan. Now that's better than the forecast for US GDP in Q2 at 1.5%. So we've got faster inflation maybe in Japan in the second half of this year than what we're seeing in the US, and better growth. And all that points to more rate hikes by the Bank of Japan. You can see in this chart here, this is one of my favorite leading indicators of inflation in Japan. It's the PMI survey on input prices. That continues to rise, suggesting inflation in Japan might remain above 2%, keeping rate hikes on tap, supporting the yen, supporting a pass-through of those gains to U.S. investors.
Right, understood. Great to see you. Jeffrey Kleintop, thank you so much for that global perspective. Jeffrey Kleintop, Charles Schwab, thank you. He loves Japan. I'm glad he had the opportunity to talk about it. In the meantime, the CPI print that we got this morning, this inflation report, came in a bit cooler. But what do we really need to know about the numbers? And what does it mean for the Fed? We'll have a discussion next.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device, for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
Okie dokie, part of my getting ready.
Our team of passionate traders.
5600s are 250 now.
And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
Yeah, missed Toll Brothers.
Network.
Welcome back to the watch list. The highly anticipated inflation report, the CPI report, out this morning, and it was a little softer, and with that, we saw everything move, right? You saw the bid for bonds, you saw yields come down on the anticipation that the Fed had more of a green light to do the cuts that people have been waiting on. In the meantime, within the report, there's a lot of details, and what can we expect from the next report? Because that's really what it's about, right? It's the big picture on inflation. Ben Ayers is with us, senior economist at Nationwide, and Eric Packman, chief analytics officer at Bank Creek Capital Advisors. Thank you both for being with us. So, Ben, within the report, a lot of it was about energy coming down, and everybody got excited that, oh, the Fed can cut now in September. But gasoline prices have been trickling a little higher lately. Some of your thoughts on this report?
Oh, thanks. Great to be on again. You know, it was a really good report overall, I think. You know, you can quibble about the details, but in general, very solid trends for inflation cooling. And I think the most encouraging sign was that we're seeing a broadening of it. You know, much of the focus for the past year has been how goods inflation has really led the decline that we've seen in the overall inflation rate, but we hadn't seen much of that in services and in housing costs. But we did see that when we looked at the June numbers and really even back to the May numbers. In particular, jumping out was housing costs. We finally saw a cooler print there. We've been waiting for that. The Fed has been talking about that for quite some time. So between that and some cooling we've seen on medical care services, transportation services, there was really a lot of great news when we looked at the July report. You know, you look at a number like the super core CPI, which strips out, you know, the goods and the housing components, that ran flat for the last 2 months. It was only up 1.5% annualized over the past 3 months. So these are numbers that the Fed have been waiting for, and it certainly helps bolster their confidence that inflation's on a good path and that they can start to lower rates pretty soon.
Yeah, and Eric, you're in agreement, right? While so much of it was about energy, you still think things are in the right direction. What does it mean going forward?
Yeah, no, I mean, I have to say that I actually agree with both you, Nicole, and Ben. You know, if you actually look at the numbers, what we try to do at Ban Creek, or I do with the tools, is we'll say, okay, it was 3% overall, and let's deconstruct that and add all the components up to see what the you know, what the main drivers were. And so I compared the 3% this month to the 3.3% last month. You have 30 basis point gap of decline or favorability to explain. And about 20 basis points of that did come from energy. So 16 basis points came from gasoline and another 3 from electricity. And so I was not super excited right off the bat until I started looking at owner's equivalent rents of residences and rental of primary residences. Both of those have dropped to below 30 basis points of month-over-month inflation, which we have not seen since 2021. That is, those two together are 33% of all of CPIU. I mean, it's become so concentrated now that we really had to have a downward move in that. And now at below 30 basis points month over month, you can actually start forecasting this forward and start to see a glide path down to 2.5 and even a little bit lower than that if auto insurance inflation ever starts to behave, which hopefully it will someday.
You know, I think about the Fed. Thank you for that. I think about the Fed, and we've heard from Jay Powell over the last couple of days, and he noted, I mean, it seemed like we got a lot of what we expected, but he did note the risk, right? If you raise, if you cut, and sort of we're staying the course, and it's higher for longer, we got to make sure inflation is going in the right direction before we cut. But, you know, you guys may remember in March of 2008, right, as that financial crisis came on, I mean, the Fed cut rates 3/4 of a point. You know, we were having cuts sort of in between meetings. It became this, oh my goodness moment. You know, I think he's doing a good job of trying to translate the data, and we interpret the data, but do you expect any sort of wild card, Ben?
We don't. You know, we've been in a forecast that we felt that they were going to start to cut rates in September for a while. And the market, you know, went back and forth on that. First they said later, now they've come back to September. I think that makes a lot of sense given the numbers we've seen the last couple of months, especially if those continue. Remember, we'll get 2 more CPI reports before that September FOMC meeting. So if we see some continued cooling of the numbers, I certainly think they have the green light to go in September. Today we've seen the market participants have shifted out and said maybe they're going to cut 3 times this year. I'm not ready to go that far. I think they're going to be relatively cautious this time around because they know the risks. They know that if they cut too early, that maybe we will see inflation take back off again. We've seen that before. Just going back to last year at the end of the year, we saw inflation cool over the fourth quarter, and then it took off again in the first quarter. We don't expect that to happen this time around, but there's still the risk of that. And so because of that, we're sticking with 1 move September, wait a little while, see how things go, another move in December, and then probably when you go into next year, going to be pretty cautious as well. So we're not expecting sharp declines in rates. We're expecting a relatively restrictive monetary policy environment to linger over the next year, just finally starting to pull back the reins a little bit and move in the downward direction.
All right. Well, thank you both. I mean, because we have to wait and see what happens here. But we have the 10-year now at 4.19. You still have a pinched consumer. We heard from a lot of the companies, ConAgra and Pepsi. I mean, we saw it from Nike. I mean, Costco's doing well. But, it just feels like there's a little back and forth. Thank you both, Ben Ayers and Eric Packman. Thank you. That's going to do it for us here on the Watch List. Thanks for being with me. I'm Nicole Petalides, every day, 11 a.m. and 2 p.m. on Schwab Network. And you can get the Apple App Store, get the app. Market on Clip.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Ethan! How's my favorite client?
Great! I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. We've got a really interesting session underway here with an hour still left. Russell trying to hang on to monster gains, a total inversion of basically what's been the major trade all year. Big tech working, everything else lagging. Today's a major day for the laggards, the losers, and so the has-beens of the last 8 months that have been way behind. A 5.3 percentage point spread. I mean, it's just incredible. This market is wild, absolutely wild. To see such massive division within the market at an extreme like this kind of makes you wonder if rotation's a bit of a zero-sum game. Doesn't have to be, of course, but to go into the NASDAQ to take big profits, try and find new trades that might get a shot of life if inflation does come down pretty quickly. Very tricky gambit when we've seen economic data softening up over the last pretty much all year to date. Market really is trying to thread a needle by going after stuff that's more cyclical today. Value trades that have been beaten down. Some of the best performers, the IVE value ETF, one of the best factor trades on the day, up 0.9%. The factors that are leading today generally are those that have been behind. So it's obviously a huge shift, whether it's sustainable or not, something obviously we have to talk about. Nvidia down 4%. These aren't small moves. Bonds really well bid, of course, after CPI this morning showed a negative month over month. If you look at the equal weight index, something we've talked about a lot, which has been stagnant, which has been stuck, arguably a bit of a breakout happening on what was a sort of sideways triangle, some indecision, but generally strength now forming. If you take a technical perspective, kind of looks like a big deal, probably is. Make a higher high and suddenly you've got real possible broadening out of a market that generally has just not been the case. So there hasn't been a major breakdown. It's just everything else has been trying to follow along and mostly treading along.
What's a nice SPX chart?
Today represents a bit of a break from that trend. Now, it obviously would be more welcome generally if the big tech trade weren't breaking down like it is. So maybe it's a profit-taking moment. Maybe it's a real earnest attempt to shift into new things. But it does create a bit of an issue for many investors on the passive index side where you see concentration. Now, this is the negative side of it. The breadth today is way more positive. The majority of actual individual companies are up. Like the NASDAQ at one point was like 7 to 3 up issues on the day, but you're down. It's just crazy stuff. It's not really supposed to work like this. But after we got all of our market cap coagulated around AI, it's kind of having a little bit of a heart attack here. So does it kill that whole trade? You hope not, of course, if you're in the indexed market. Many others who've been betting on some
I got the 5600.
are absolutely thrilled to see the day, but
green
profits from it. Today brings up a lot of really difficult questions. How much do you want to project from one session? Because this is one of the most outlier sessions we've had in years. That spread between the NASDAQ and Russell goes back at least 4 years by different ways to measure just the percentage spread. So anyway, that's what's so bizarre about today. But here's what's also important is that technically you are getting some very challenging charts to interpret, like Nvidia. Did we just get rejected from a previous high? The semiconductors, which
that's
just
the weekly chart,
now have a giant red candle on them, taking that sector below its previous high. So then you have to ask the question of whether or not there were fake outs or failures to break out in the most important sector for the broad market. Really a totally different game where stock picking today actually works out, whereas the rest of the year, that's been the loser's trade. Now for the macro side, of course, there's the question of whether or not you should be cheering inflation going next.
Oliver. Oliver. What happened?
again, an extension of the trend for yields lower. Makes a lower low today after successive lower highs and lower lows. This is why I've had the green light on bonds and the risk radar for now about more than a month or so, because the trend has been to bond bulls. It's been in their favor, and today a fresh breakdown in the yield doesn't really show a lot of two-way trade. That's the bears and bonds are basically getting run over at this point. Lastly, a bunch of stuff in the market is just going to be interest rate sensitive. Real estate swinging to the upside when rates come down. Utilities going to the upside. But what's important is the regional banks still too. And if real estate's going to get some life, then regional banks get some life. This chart's still kind of in a range it's been in for 9 months, but on the very high end of it. A lot to process today. I got Kevin Hanks, Jenny and Horn with me here to continue that. And on the downside, all this tech stuff, maybe we just go there, Jenny, first, because look, it's kind of like a pick your poison, live by the sword, die by the sword. There's two different types of people, right? If you're talking to the people that are in all the other stuff, they're ecstatic today. And then if you're talking to people that have been in tech, and a lot of those have kind of gotten levered up, then this is a bit of a bloodbath. Tesla down 7.5%.
I mean, some of these moves, I was just curious, like, because we talked about basically this massive rotation we're seeing just on the session out of these tech names. But I went through, there's been 132 through today's close, 132 days of trading so far, so we have 120 left. Okay. The best performers so far, every single name is lower. I mean, like, obviously the losses are outpacing, like, then the strength, and we're talking S&P 500 names to clarify. But then I looked at the losers of the year, so like Walgreens, Lululemon, EPAM Systems, I mean Nike, Albemarle, Paycom, every single one is higher.
Even Walgreens.
Truly, the worst performing names on this year, green across the board, which I think speaks to the fact that we've been propped up by so few names, which has been a problem.
Yeah, it's weird to try and like do the show because it's like like a schizophrenic show. It's like, who do you talk to? You talk to the index investor, they hate this today. You talk to the tech people, they hate it. You talk to other people that have been buying the dips on the stuff that's way down there. Like, how many people have been trying to stab it like a Lulu in these companies? Like, a lot of people. They've been getting run over. So today's the one piece of relief they've had in months, Kev.
Each name is its own story, Oliver. That's really what this is. For the AI sector, it's for whom the bell tolls. It tolls for thee. I mean, we knew this was going to happen eventually, right? Yeah. Even though we've had so many days where so many sectors of the S&P 500 have been down, but those key areas have been up. Well, today you have 7 sectors of the S&P 500.
1, 2, 3. Jimmy called it on AMD. 1, 2, 3.
Decline is the best it's been basically all year.
Yeah, Oliver.
I've never seen in my career a time where you've got to dig deeper into the numbers to find what's really happening, right? I mean, if you look at today's inflation data, the number's the number. Pretty soft, pretty good. Bonds and the dollar reacted to that.
That makes sense, of course.
Right, the number's the number.
Yep.
But when you looked in the number and saw it dominated by energy like it was, and it was, there were some good things about today's CPI number, like used car sales, new vehicles, airfares, and then all the energy components. But it was still housing, food, apparel, automobile insurance. There's still parts of this economy, key parts for consumers that was higher, that inflation's not coming down. So listen, I think this is a rotation that was probably long overdue. Jenny talking about the stocks that are rallying today. Oh, Lululemon was hitting new post-earnings lows before it rallied, and it's still below those numbers. It just came up off the deck slightly.
And that stuff too is like the stuff that's way down. Okay, fine. Like that's still in the trash bin. I'm more interested in stuff like regional banks, like financials, like the stuff that really makes a difference if it starts to really lead the market, because that's then an expression of economic optimism. That's what's so fascinating about today, because the best explanation for everything that's happened in the concentration around tech is that is where the only growth has been. So today is basically this notion that maybe if the Fed's going to be able to do a deeper cutting regime because inflation comes down fast enough, then our economic problems are solved in a way. And I'm not sure I'm buying that from one particular session, but that's kind of the message. Then there's some stock-specific stuff. We got to talk Tesla in detail. So let's come back to that, Jenny, because they pushed back the robo-taxi thing. This has been one of the biggest winners, an extraordinary comeback move for Tesla in the last 2 months. This, to me, seems like any and all of that is subject to unwind now.
Well, because I think this is the risk of obviously things being propped up on expectations, not the actual delivery.
We talked about this so much.
We did. I think the same case we made for we talked about Apple and their 90 million iPhone 16s that haven't been ordered yet. And I think same with the August 8th event. We have been seeing. I mean, the delays of the robo-taxi event has been happening since 2015 was the first time he promised full autonomy. 2019 we also saw it delayed until 2020. Now in 2024 we're delaying it 2 months, which actually feels like pretty much a drop in the bucket at this point. But this is historically on brand for Tesla. They are not one to keep their timeline promises. I mean, frankly, no one should have been as shocked by this news. We actually haven't gotten confirmation from the company themselves, but Bloomberg has reported now various internal sources, and I think based on the reaction, there's some credibility to this. But I think overall, this shouldn't change your bullish or bearish thesis on Tesla, but it does when it's ridden up 45% over the last 11 sessions.
Valuation problem in the valuation expansion based on promises. I gotta say though, boy, he really played right into the bears' hands, and cynics' hands, where they all said, don't trust Elon on the robo-taxi stuff. It's always been the carrot and the stick deal. I mean, boy, I honestly didn't. I will be honest. I didn't think that they were actually going to delay this because it seems such an egregiously awful move for him to put something so close on the calendar and then not have it ready when the stock's been under pressure, when he's been under pressure. This is one of the biggest Musk blunders I think ever, Kevin. What do you think? Quick thought.
I do not believe that. But I think delaying something so significant,
killed, so
it's got to get it right. Well, stock's up significantly. It was like a 90 on the RSI.
Right.
So it's not good news. It's not good news. It doesn't mean that this major part of Tesla's necessarily a failure.
Well, I don't know. That's the thing. I mean, what else do we have to go by this guy's word? And then when he pushes it back months, when he just put it on, it's not like it's been on the calendar for it's crazy. Looks like he doesn't even know how to schedule a timeline.
I know, and I also feel like now the longer this goes on, the more we wait, the more it seems like the competitors, like Alphabet's Waymo, and GM has a similar type of business. These are leaping ahead of Tesla. That's what the more and more we wait, the more that competition seems to be able to do this, and they just can't execute. I mean, we do have earnings though. So there's still that to look forward to.
I think the stock is in a world of trouble until we get clarity on the robo stuff, because that was the only reason you could have justified the move for Tesla. Nothing else in the last month and a half.
Oh, come on, guys.
All right. Thanks, guys. Kevin Hanks, Jenny Horn, appreciate that.
Woo!
Talk some economics.
Low blow.
Back to us from Payne and Regal as a principal and chief economist. So, Jeff, when you see a number like this and the market respond, is this a seminal day of shifting the entire narrative?
I don't know if it's a seminal day. I think on the margin it matters a lot because we had a soft CPI in May, and that's followed up with a very soft core CPI reading for June. I think a lot of things went right in June to get that soft number, so it's possible, Oliver, that the June report maybe overstates the moderation trend in inflation. But be that as may, it's 2 months in a row of soft price pressures. So that's good news. I still think, Oliver, you need to see a couple more months of soft data to give the Fed a green light to cut rates. So maybe that will happen by September. So
I don't know if this will hold. We'll see.
Pencil in a September rate.
5,600 is at $1.
One per quarter out of the next 6 to 12 months. I think that's reasonable. But I wouldn't change my entire view based on one day. The other thing I think is next year, and I was listening to that great discussion, jobless claims.
Yeah.
Initial claims dipped back down to 222, Oliver. I think that maybe took a back seat in all the other flurry of information.
No, I think you're right. I think that helps, right? Because if you saw jobless claims bomb, then suddenly inflation coming down looks like it's at too big of a price, right? So the fact that jobs are steady helps some of the cyclical stuff justify the move.
Bingo. You nailed it, sir.
Bingo.
Moderating inflation and the initial claims that worry, we had it creep up in claims. It looks like it's settled back down. The economy's still holding in there. That really plays into the soft landing story. So I think that's a really key component here.
Yeah, really good point. We've seen steepening in the curve over the last, call it 3 weeks, a little bit more of that today. Kind of walk me through the way you see that, Jeff, because technically, like the textbook tells you that if it's because of cuts, that's actually usually when the recession's gonna hit. I know people are like tired of hearing about yield curve predictions, but technically that's what it is. It's not the actual inversion, it's when it starts to uninvert because they got a cut.
Yeah. Typically, when you get a steepening the curve, it's because the Fed is cutting. I see all that. There are some instances historically, though, where you've got the fine-tuning situation. So maybe your 2019 period can be seen that way, where the Fed cut rates a few times. We didn't have a recession, so that was the key period. Before that, you really go back to the 1990s. That stretch
dropped to 85 cents.
Where you had some fine-tuning from the Fed. So I think that the key thing to get really bullish duration, in my view, to think that Treasury yields across the curve are going to go down a lot, you have to be more in the recession camp. Doesn't have to be a hard landing necessarily, perhaps a garden variety recession, but that's the scenario where rates go down a lot. If we're just in a fine-tuning, where the Fed is just cutting rates once per quarter out over the
I'm
next
gonna get
year,
out of this real
the
soon.
economy is holding up, then maybe there's a modest downside to Treasury yields, but not that.
Well, here we go right here. Get out now. 5,600 at 120, 125. You might get a little bit more out of it. 125, 130. There it is. Grab it. All out. We don't mess around here at Sports Town. If I can get another bargain, if it get, well, might get a bargain. This is 95 cents. Watch this. 90. If you can get it at 90. It's the 5,600 lotto. And there's your 90. You know what to do. There you go. 90 cents. You can easily knife down here and hit the 200. We're at 85 cents. I'm just counting this as a 1, 2, 3 bits. Oh, didn't like that one. If it doesn't bounce, Jimmy, go ahead and sell it. It's just kind of risky, I think. It's a 63, you know, I do boast about it. It's just, there we go. Here's your resistance. Hurry up. Hurry up. Here's your support. It's called a pennant flag. We have a 1, 2 bits and a freebie down there at the bottom. And a 1, 2, 3, 4 bits at the top. So it really has to break now. I can get out of it at 105. I can get out of it real easy right now if I wanted to. Jim says, hold on. See, it's 110. This is number 4. It really has to break out here. Number 4. So what do you see, Jim? I see a pennant flag with a 1 bit, 2 bit, 3 bits. Oh, we just have a 1, 2 up here. Oh. It changes everything. It's 2:25. I about forgot about time. Yeah, that's not a smart idea. But, okay, I'm going to get ready to sell this because time. The moment of time. It wasn't recognized. And for you to recognize it, you have to pick the right time. Woo! Break it. It's time. I gotta feed the babies. Oh. No. Oh. Who in the hell did that? Well, there goes that trick. We did go to the 200, just like I said. And I make a business decision right now if I want to. Man. Horrible. Okay. It doesn't hold this here orange line, we go a lot, we drop a lot more. There we go. Oh, look at that knife. Okay. Bye-bye. Gotta figure this one out. Definitely broke his support. Oh yeah. Netflix at 650. $234. Okie
Have net they are still positive. And so that's why I say you have a little bit more wiggle room to go here, either to the upside or downside. We're not at that threshold yet where we have this dramatic domino effect to the downside. And in fact, if you kind of look at it, we're trading at the lows of yesterday, even maybe say the close of the day before. That's not that bad on a technical standpoint.
Okay. All right, so we're within kind of the bounds. We're still on the highway. We haven't broken off the guardrails yet, but do we now have sort of a force kind of pulling a little bit instead of buffering and helping us to the upside? Have we lost that kind of upside magnetism at all?
Yeah. Yeah, and the fact that the mega cap names are selling off is really going to make it a little bit difficult to get it to the upside here. I mean, last time that I checked, we still had around 75% of S&P 500 stocks still in the green here today, and we're seeing the IWM really just outperform to the upside. So at the end of the day, if we're going to try to have some positive movement, you're going to need to have those semiconductors. You're going to need to have the technology stocks really kind of maybe retrace some of the losses that they had today. So when you're kind of looking at the underlying structure, it makes it a little bit more difficult for these melt-up type of scenarios that we have seen. But when you're looking at it, once again, I just want to kind of stress it's not that bad, because I'm already seeing people saying, okay, this is the top that everybody wanted to see, buy the rumor, sell the news, and that might have been the event or the equation here. But it's not, we haven't lost too much momentum, even though the chart on an intraday basis may signal that we have.
Okay, all right. Hey, one other thing, KG, nice work there. Good description. The
150.
VIX and stocks. I mean, we did literally yesterday. The VIX up, stocks up thing was kind of when
Boom,
things get
baby.
a little lopsided,
Thank you.
kind of when things
Yep.
get a little extreme. So are we normalizing that, fixing it today, or what?
Yeah, we are. Yeah. So if we actually look at a chart, so this is going to be showing the last 2 trading sessions. Yesterday we had this movement to the upside, SPX and VIX moving in a 1-to-1 correlation, or close to a 1-to-1 correlation.
150.
You can see that on that indicator at the bottom. That's just showing a positive correlation is that number moving to the upside, negative correlation is moving into the downside. Normally 80% of the time it's moving to the downside, and that's what we have today, a new normalization. And just kind of just highlight here, Oliver, the continuation of the VIX to the upside is not as aggressive as you would think on a sell-off day like this. This is why we were just trying to put this into perspective. This is just showing the fact that the market is starting to balance itself out a little bit. It is starting to kind of regroup itself from the derivative standpoint, and hopefully we start having these normalized correlations moving forward. And so that's kind of what we are seeing to the upside. Now, if we close out the day in the next 15, 20 minutes or so, and we start seeing that VIX moving up and the SPX moving up again, that's when you can signify that we may have another ramp up in the making. I mean, we are seeing some flows going into the 56.05s and the 56.10s. So they're going to try to ramp this thing up as much as they possibly can. We will get the market on close numbers in about, let's say, 10 minutes or so. And if that market on close number does show a significant imbalance to the upside, or a bunch of buy orders coming in for equities, that's where you can kind of get that spark and rally. And that's where you actually can catch the market makers off guard to the upside rather than a downside move. Overall, it does still appear that the close wants to try to stay around 55.90 to 5600. That does appear to be the case right now.
All right. Thank you, Mr. Kevin Green. Nice. Good stuff to think about here. VIX up, stocks up. Like we talked yesterday. Calling tops short term 60% of the time. VIX up, stocks up works every time. All right. When we come back and take another look at some of the action here today, we're going to go to the NASDAQ. Mr. Gowsey's going to join us.
Yeah.
A couple of the big winning sectors are very rate-centric. Utilities up big. Real estate up big. We're going to give you an update on 592 as beaten down cloud company. Maybe has a suitor on its hands. Then we've got Lizzie Ann Saunders and Joe Mazzola joining us for the big picture panel. Lots ahead. 20 minutes till it rings.
See you later, Randy. Have a great week. Right, tomorrow, Friday. Oh, man. Oh.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere.
Definitely enjoy that vacation.
Network.
My dad was a hard.
No spamming. Oh. We'll enjoy that. I'm still trying to pick where I want it, how I want mine. If I want to be a local or if I want to be at a resort. I like the local, but it's hard to trust people anymore. Yep. Dominican Republic. That's one of my choices. Well, we've got, we still got 17 more minutes. How much do I got here on my? I'm doing my laundry right now. Okay. I'm gonna give it 5 more minutes. Be safe.
Months of July all the way to November, markets start exhibiting volatility as they digest political uncertainty. So that's one. We have monetary policy, and finally the Fed is looking to cut rates. We have a 90% odd of a September rate cut, 60 basis points of rate cuts priced in for December. We have an economy that's starting to slow, and we're starting to see the impact of tightened monetary policy and also a fiscal policy which is much more tightened. We're not seeing the pro-growth policies of tax cuts and deregulation. So that's the economy. And finally, for the fourth piece is earnings. So the markets are digesting currently a lot of information, and I think that's put investors cautious, and we're also seeing that vis-a-vis the NASDAQ investor flows, whereas we maintain a database of all the flows coming into all of our clients on the surveillance side.
Love that. Always love getting the specific lens that you guys see things through with your data, your surveys and flows. Appreciate it, Mr. Good analysis. We got to jump. Thank you, sir. Mr. Ghazi, lead analyst at NASDAQ IR Intelligence. All right, another good voice there on today's action and a good perspective from NASDAQ, too. Let's get our developing story real quick in the world of tech. 5.9, one of the worst beaten cloud stocks of the past year. Even them getting some love today, Jenny.
Even though I'm getting some love today, because see, it's fitting with our theme that everything that's been underperforming is outperforming today. But interesting that we got a report from Reuters that actually investment firm Anson Funds has built up a stake and is pushing now Five9 to explore a sale. Now it's unclear like the size of their stake, if these talks will even lead to a sale, but obviously being read today as a win here. And this is not the first time we've seen takeover interest with Five9 specifically. Actually, in December of 2023, it discussed that it was potentially in talks with advisors to field interest from potential buyers. That was roughly 2 years after it did scrap a potential deal with Zoom Video. But I have to say, now I've looked at this company's like historical earnings when we've seen, I mean, like they have been able to grow their revenue, grow their earnings, cash flows improve, sure, but they guided disappointingly in their last quarter. And now I was just checking when we got reports of a deal that didn't come to fruition. The market value was around $5.8 billion. So it's been effectively now cut in half. It's just shy of like $3 billion in market cap currently. So I would say, as far as like M&A is concerned, I feel like there's never been a better time to potentially explore, a sale, because shares are continually, they're down 80% roughly from their all-time high here.
Yeah, wow, brutal. It's really kind of just an extreme version
Brutal.
of the cloud as a whole. So, look, I guess Zoom didn't want to buy them. Seems like probably the best thing that happened to Zoom now in retrospect, not buying them back up there.
Okay, because I was trying to understand what they do.
I've
They
been
basically
whiplashed
service,
3
like,
times
these
today. I don't know if
contact
I'm
centers
doing
that
it
are focused on,
again.
like, AI chatbot, sure, but
right.
Microsoft is coming
They're
into
getting
space.
disrupted.
Exactly. Microsoft is right now piloting the same exact technology. There's your big problem.
Great call. You want a nice analysis. All right, thanks. 5-9. Getting a little hope today. It's a day full of hope for stocks that have been underperforming.
Two.
That's where we'll begin
One-
the
one
conversation
good
with
time.
Gonzalez and Joe Mazzola next. Ready to take us into the bell. And, oh man, look at the Russell. Up 3.7 now, 76 points. Almost to the year-to-date high, getting close.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends.
All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Welcome back to Market on Close. About 9 minutes left to see if the Russell can put on another 10 points. What's that after how much it's already run? Joining me, Joe Mazzola, Director of Derivatives Trading and Trading Strategist, at Charles Schwab, and Liz Ann Saunders, Chief Investment Strategist at Charles Schwab. Afternoon, great to have you guys here. A big day. Market's going kind of crazy. I just want to say, Liz Ann, go. Give me your take here on the session.
Obviously, the inflation numbers were terrific. I think the Fed is probably dancing
Yeah, that was nice.
a jig here, and at the lowest point, yields, at least in the case of the 10-year, had dropped by about 12 basis points, and that was enough. And you've seen it in days like this in the past where you've gotten a big move down in yields, you've got a more benign inflation reading, you get a pop in small gaps, maybe some more sustainability this time because just how extreme the concentration has gotten. So I think it's a day that fans of Goldilocks and doves on the Fed can be cheering for.
Yeah. Market solidifying around September. Still no July though, Joe. I mean, hearing a lot of calls for it, but I think that's mostly from people who just kind of want to get ahead of a recession and then say, "I told you the Fed should have cut in July."
Yeah, we're well above 80% probability for September. I think that's where, people are forecasting they're going to go. But one thing that's really interesting, Oliver, with today's market is just the churn below the surface. I know Lizanne's touched on this many times in the past, but this idea that the equal weight today is up 1.3%, while the S&P 500 is down 0.8%. Or if you look at something like this, advancers versus decliners, 8-to-1 advancers to decliners, while the S&P is down. So just big major movements below the surface, really showing some
6 more minutes, and I'm gonna head on out.
How sustainable is this degree of spread? 5 percentage points, like the widest Nasdaq Russell spread in 4 years.
Yeah, maybe not on an every single day basis, and I think we're going to see trends change potentially in fits and starts. But there's a disorder that sadly affects a lot of children, but it's called oppositional defiant disorder, ODD for short. And I've seen from our friends at Sentiment Trader attach that label to what's going on in the market, and Joe pointed out rightly so. And
you're funny, honey.
You've had these days, not just on the upside where you get index gains that are significant, you don't get anywhere near the same kind of participation under the surface as measured by traditional moving average breadth measures or advanced decline, but it's also been happening in acute form on down days where you see these bigger index decline days, but much better breadth under the surface. And I made the comment on a call yesterday where it wouldn't surprise me to continue to see this, where you get some convergence that starts to correct some of this concentration risk, meaning you see profit taking up the cap spectrum into the high flyers, but you get better participation. It's sort of the bull market version of what happened back in October of 2022, when we now know that the benefit of hindsight, the market bottomed, at which point indexes were taking out their June low on the downside, but breadth under the surface had been improving. So I wouldn't be surprised to see more bouts like today, but maybe not to this significant and extreme.
Okay, and I'm going to come back to that, but first I just want to hit some of the rate of the volatility stuff for a second, Joe. Yesterday we saw VIX up, stocks up, kind of like one of those things that shows the market's getting frothy, getting a little aggressive, getting a little speculative. What do you look for here as kind of the signs from the derivatives market over the next week?
Yeah, the VIX hasn't really done much today, which is a bit odd. I think you need to maybe look at the VIX-N, right, which is the VIX on the Qs or the VIX on the NASDAQ. You've seen some movement there. I think a lot of it has a little bit more to do with, where the option trading is participating. And, we talked for a while, Oliver, about a lot of that upside call buying and how it kind of pushed skews in a direction that showed that everybody kind of had this trade on the same way. And when you have a day like today where things start to unravel, at least in the tech sector, not only do you see, the equities go down, but you're also going to see some of that skew trade unwind as well, too. I think that's what we're seeing today.
Okay. Lizanne, to come back to the rotation subject for just a moment, given the emphasis on quality trades on the equity strategy side that you've been talking to us about for years, the thing that's been a great trade that's been alongside momentum. Today is like the market saying you're in the clear to go to the even riskier stuff. What do you think about that?
Not necessarily. You may get pops of it on a single day or a couple day basis, but I think the quality trade is still the way to go, even within smaller cap indexes. And admittedly, we're just talking about one day, but if you look at the past year, the Russell 2000 over the past year, this is not year to date, but rolling past year, is up about 6%. Profitable stocks are up 12%. Non-profitable stocks are down about 6%. So talking about an 18 percentage point spread. You can also break it into zombies versus non-zombies, and you see a similarly wide spread. Even with indexes like the S&P, you look at strong balance sheet versus weak balance sheet, huge outperformance. Now, you're going to get these knee-jerk reactions where maybe there's a bit down the quality spectrum, but I don't think we're at the point in this cycle where low quality works consistently well. That happens typically when you're coming out of a recession. You've got a significant amount of leverage built into those low quality stocks to a significant upturn in the economy. Maybe it's obvious, but I don't think we're at that point in the cycle, so stay up on quality.
Okay. You do agree that's kind of what the market, though, is doing today, right? It's like going into the dumpster bin, basically, as far as like a quality characteristic standpoint, all that stuff. So, all right, love it. Good reminder here of kind of how to stay the course and keep the perspective. Appreciate the conversation, guys. Really nice work with Zan Saunders, Joe Mazzola. All right, bell in about 2 minutes. Big banks tomorrow. We're going to talk earnings expectations. We're going to take a look at precious metals as well. Gold and silver. Guess what didn't work today? You already know.
Well, you're talking too proudly of the market.
You know what I watch? What's red today that shouldn't be? Come on.
I'm saying that again. I ain't talking too kindly. Hugged that 200 there. Didn't really do much once we broke out beyond it. Okay, well that's about it. I'm gonna head on out of here. Take her easy.